Good morning and happy Friday to you. You're watching NDTV Profit. My name is Alex Matthew and this is all you need to know. Like the name suggests, we'll set you up for everything that you need to know to get a head start on your day over the next half an hour. Let's start with the headlines. RBI's crackdown costs Kotak Mahindra Bank 40,000 crore rupees in market capitalization, and Asia's richest banker sees his wealth erode by $1.3 billion. US markets fall on weaker than expected GDP, but Alphabet shares rise 14% on strong earnings. Indian markets, however, rise for the fifth day in a row. Most sectors end in the green, with PSU banks shining in trade. Bajaj Finance feels the pinch. Loan growth in the fourth quarter is down following RBI restrictions. Swiggy takes the next step for its 10,000 crore IPO. Shareholders pass the resolution. And phase 2 of the ongoing elections, general elections, begins today. 88 seats across 13 states are set to go to the polls, and key constituencies include Mathura as well as Wayanad. Let's get you a quick global check now. Economic growth in the US has fallen to an almost two-year low last quarter, while inflation jumped to uncomfortable levels. Gross domestic product increased at a 1.6% annualized rate, below all economists' forecasts, according to the government's initial estimate. The economy's main growth engine, which is personal spending, rose at a slower than forecast 2.5% pace. Now, this came as a bit of a shocker because all this while, we've been factoring in a resilient economy in the US and inflation heading lower, though at a slower pace. Now there's also a widely tracked measure of underlying inflation that suggested that it continues to remain higher and also sticky. So we're faced with the prospect of a slowing economy and stubborn inflation. At the very least, you can expect a hawkish commentary when the Fed meets next week to decide on the course of monetary policy. Now, the reaction overnight in the bond market went about as might have been predicted, with bond yields having risen across the board, and now the 10-year Treasury is at 4.7% or just above that mark. And equity markets have retreated, but they did end off the low point of the day. The Dow ended up dropping the most at about 1%, but you had the S&P 500, which was lower by about 0.5%. Of course, you have the Dow futures that are indicating a positive start for trade today, or rather later today. Let's take a look at what the Asian markets are doing this morning as well. And in fact, they are positive. The Hang Seng is up as much as 1.2%, and the Nikkei is down by about 0.33%. I guess to a certain extent, the expectation would be that there could be rate cuts later on account of the expectation that the Fed will have to eventually support growth. But the view of a soft landing may have taken a bit of a jolt as things stand. Meanwhile, in earnings, you had Microsoft's quarterly sales and profit, which climbed more than expected, lifted by corporate demand for the software maker's cloud and artificial intelligence offerings. And first quarter revenue from Google's parent Alphabet exceeded analyst expectations as well, buoyed by growth in the cloud computing unit of the company. Alphabet's shares climbed in an otherwise lackluster market. But let's turn to the Indian equity markets, which one can say have remained resilient, but there's been quite a bit of chop and churn over the last week or so. Agam is joining in to break down the latest cues on the F&O front. Agam, morning. You saw gains yesterday.
Yeah.
How does it look at the start today?
It's a positive start. That's what we were expecting, Alex, because of the kind of gains that we did in fact see yesterday. It was a very volatile day of trade, very choppy, in fact. That said, we did see a good bout and rollovers, of course, coming through. We saw a good amount of addition in the May futures. We're moving into a period where you tend to see a little bit more increased volatility on account of earnings, of course, and besides that, we're also going to be keeping an eye on how things are panning out when it comes to polling. But we're certainly starting off with the new series on a positive note as far as the Nifty is concerned. The Bank Nifty as well as starting to see an increase in open interest, even as the Bank Nifty, well, once again edges towards the mark of 48,500. In terms of the options market at the moment, considering we are at 22,600 and thereabout, and we have seen a lot more traction exactly there, writing at the 22,600 calls as well as puts, and of course moving on in terms of your overall open interest distribution picture. At the moment, we do have max OI in something like a 22,900 call and 22,500 put. So a 400-point range, roundabout where we are as the bottom. So we're very close to the support at the moment, and that, of course, is another positive. And of course, in terms of stocks, we'll once again keep an eye on a lot of earnings coming through, but we do have longs for Bharti Airtel and a lot of unwinding for Ramco Cement, Ashok Leyland and India Cement. But Alex, I reckon today will also be a day where IndusInd Bank and Bajaj Finance along with Tech Mahindra will be in focus as they react to earnings.
All right, thanks so much, Agam, for getting us that. In fact, let's also talk about results then, and let's start with IndusInd Bank because it has reported more or less inline set of numbers, and it was bolstered, if I am not mistaken, by its investment income, which grew quite substantially, and its margins have not contracted by too much. So those two are definitely positives. But Agam, what are you picking up?
Right, Alex, so, let's start with the basics. And in terms of your net interest income, that has risen by around 15%. The non-interest income as well has seen a growth of around 16%, which perhaps is a positive at the moment. Your operating expenditure looking at a rise around 24%. Profitability, consequently, has also risen by around 15%. Largely, it does seem like it's in line with street expectations. In terms of advances, that's the number everyone was keeping an eye on. That's grown 18%. Deposits have also moved up around 14%. We did have the analyst call yesterday as well, following the earnings coming through. And in terms of growth, the loan book is expected to grow at anywhere between 18 to 22%. The liability book likely to grow between 16 to 18%. Moderated growth in unsecured has been seen in expecting a good monsoon with tractors based loans to actually provide some amount of impetus. In corporate gems and jewelry, demand is weak due to a poor global demand overall. And as far as margins are concerned, they remain comfortable with these current levels. Potential upside with an interest cycle turn, and the cost of deposits is expected to rise around 3 to 4 basis points every quarter. But all in all, largely in line set of numbers.
Yeah, absolutely. Thanks so much, Agam, for getting us so details. Let's stick with earnings then and talk about another financial company. Bajaj Finance is the one that we're focusing in on, and there seems to have been some kind of an impact on account of the regulatory action by the Reserve Bank of India. But I will let Puneet take you through all of the key details. Puneet, what are you picking up and what can you tell us?
Yeah, hi Alex. So earnings were really strong, but as you rightly said, there is some regulatory impact of roughly 4% on the earnings. So let's start with the net interest income is up roughly 28% compared to the previous year, while its operating profit as well as its PAT has grown up from 21 to 25%. Now, do note that the company had certain provisions that were higher compared to previous year, coming in at 1,300 crores, which is a 53% rise. Still, there was a beat on the profits. Now, if you see on the growth front, the AUM has grown roughly 34%, coming in at 3.3 lakh crores, while its deposits have been up 35% compared to the previous year. On margins, the company did see NIM compression of 21 basis points sequentially, while its operating efficiency remained stable at roughly 34%. Now, two key updates on the company gave. The rural B2C growth is down 6% in the Q4, while the other segments have done pretty well. Rural B2C is roughly 6% of its balance sheet, while there are two key updates that the company has given some commentary on in the conference call as well. One is the Bajaj Housing Finance listing. They have said that they formed a committee to assess the listing of BHFL substantially, and it is currently capitalized up to the next 18 months, but it has a regulatory impact where it is supposed to list before September 25. And the second one is the RBI restriction, as you rightly said. The company has formally requested RBI to lift the embargo on the two products which were under restrictions. So overall, decent set of numbers, but yeah, do watch out for how the stock performs and brokerage call as well. Back to you.
So much, Puneet, for getting us those details. Do want to point out a couple of takeaways from the investor presentation, also from Bajaj Finance, where they've talked about the AUM growth expectation in the current financial year. They've pegged it at between 26 to 28%, which is reasonably strong. And there's also the expectation that the net interest margins will contract more going forward by as much as 30 to 40 basis points over the first 2 quarters of the current financial year. So that's certainly something to bear in mind. Let's talk about Tech Mahindra as well. And in fact, if I'm not mistaken, this was a bit of a disappointment with a miss on the profit front. Let's go across to Rucha now to find out if that is the case. Rucha, what are the key highlights here?
Thanks, Alex, and good morning. Tech Mahindra reported its results yesterday. While revenue was down 1.8%, margins were up by 200 basis points, and the net profit expanded up 29.5%. Now, the margins were expanded largely due to lack of one-offs, as was expected by the street. Now, in terms of management commentary on the recovery in the coming financial year, management stated that the second half of the financial year will be very strong, and they also mentioned that the EBIT margins have bottomed out in the fourth quarter, and they are very confident that the margins will rise in the coming financial year. Now, in terms of telecom business, which is one of the major segments for the company, it was down by 2.5% in the fourth quarter, while the management also stated that it is not yet getting clarity in the telecommunication business. Now, management also stated that it will focus more on the major geographic areas like Americas, and only specific areas which are not their expertise. So this was largely around Tech Mahindra. The major highlight to point is that the deal wins again are not getting converted into revenue, as the management mentioned that the discretionary spends are still under pressure.
All right, and there's also HCL Tech to look forward to. And Rucha, the question is this same trend going to continue for HCL Tech, or is there likely to be a surprise here?
So, on the numbers, HCL Tech, the street is expecting HCL Tech to report flat revenue around like 0.5% uptick in that front, while EBIT is expected to drop substantially by 6.5%, while the margins are expected to go down by 132 basis points. Now, this is expected largely because there is seasonality in the products and platforms business. Now, let us look at what are the key things which one should watch out for in the HCL commentary. Number one is the FY25 revenue and margin guidance. Also, an outlook on how is the ER&D space doing, and again whether the deal TCV are getting converted into revenues or not. While overall margins is expected to decline because of the PNP seasonality, the management's commentary on discretionary spends and are the clients still accommodating such spends is what is to be watched out for.
Right, thanks so much for getting us those details, Rucha. Let's talk about auto major Maruti Suzuki, which is also supposed to be posting its results for the fourth quarter later today. And Puneet is back to tell you about some of what to look forward to. Puneet, what are you picking up?
Yeah, thanks, Alex. So really strong numbers expected from Maruti this quarter. The revenue is expected to rise roughly 24% as per Bloomberg estimates, coming in at roughly 38,400 crores, while its EBITDA and net profit is likely to rise somewhere between 45 to 48%, which is a strong beat compared to last year. EBITDA margins are expected to expand roughly 190 basis points, coming in at roughly 12.82%. Now, what are the brokerages estimating here? Axis Securities expects the revenue to increase roughly by 20%. This is also led by the high overall unit sales. Now, do note that the company has already reported sales of 5,84,000 for the particular quarter. Axis sees that better product mix with a higher share of SUV in the sales will lead to a beat in the operating margins, while they expect EBITDA margins to also improve roughly 300 basis points. ICICI Securities expects a 22 and 53 as well as 55% beat in the revenue, EBITDA as well as the PAT numbers. Their target price before the results is expected to be roughly around 11,248. And finally, on Citi, they are also expecting strong revenue growth. They expect that the volume growth compared to the last quarter will have slightly higher share of smaller cars. So commentary on that by the management will be key. While they also do expect this to impact, this impact of smaller cars will be offset by the lower discounts that the company has given in this particular quarter. Finally, they expect that the high operating leverage benefit as well as will mitigate any kind of impact on slightly weaker margins from smaller cars. So all in all, most brokerages very positive on Maruti. Results expected today in the second half. Back to you.
All right, thanks so much, Puneet. While there's going to be incredible focus on earnings in the markets today, it's hardly the largest event to look for. In fact, the general elections and the second phase of the ongoing general elections kicks off or has already kicked off. Live visuals coming to you from across the country of people queuing up to cast their vote. And as many as 88 constituencies go to the polls today. That's spread across 13 states and union territories, and that includes all of the seats in Kerala as well as a chunk of Rajasthan, and in fact the state with the largest number of constituencies, that is Uttar Pradesh. There is Wayanad that is very critical, as well as Mathura that's going to be tracked very closely. Those battles are something that we have spoken about and will continue to speak about over the course of today and in fact in the coming days. We have to slip into a very quick break. There's more on the other side, so do stay tuned. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
All right, welcome back. You're watching All You Need to Know. It's time to look at the stocks that are likely to buzz in trade today on the back of earnings. And Anushi is joining in to tell you about some of those. We've, of course, already talked about quite a few of the big ones. L&T Tech, UTI, AMC and more to talk about now. Anushi, what are you picking up?
Right, Alex. Quite an extensive list over here. I'll start off with L&T Tech Services. Again, key highlights over here. So the revenue, about a 4% of a growth based on the QOQ numbers. Now this is still lower than the Bloomberg estimates which came out. If you have to look at the EBIT, that saw about a 2 to 3% of a growth over here, while the margins did slid about 31 basis points to 16.9%. Now this was on the back of the higher subcontracting cost that took place, which has resulted in this decline. Other than that, the net profit saw about a 1% of a growth. Now again, some key highlights for the quarter. If you have to look at, the company has decided to consolidate its 5 segments into 3, so that stands in focus on how the consolidation works out. And FY25 revenue growth guidance has now been pegged at about 8 to 10%. So again, focus remains on you. Now moving on to another one in the financial space, UTI Asset Management. The total income has gone about 36% up, while the net profit has seen about a 10% of growth. It's the AUM which stands out like a 19% of a growth over here. But if you have to look at its SIP gross inflows, that slid downwards in the 2.9% range from 3.31% last year. Now in the specialty chemical space, there's Himadri Specialty, which has seen about a 14% of growth in the quarter. While if you look at its overall FY24 revenue, that remained net to net flat. EBITDA and the margins took a strong growth over here, 42% of an EBITDA growth, while the margins moved in the range of 15% compared to 12% earlier. And last on the list is Electra Green Tech. A weak set of numbers over here. Revenue down about 23%. EBITDA about 31% of a decline, while the margins have slid in the range of 11% compared to 13% they had clocked in earlier. So main decline that we are seeing in the revenue is in both of the segments, but it's the e-vehicle division segment that recorded about a 28% of a revenue decline. Net profit also about a 45% of a decline here. So these are the key earnings that should be in focus today.
All right, thanks so much for wrapping that up for us. Let's continue to talk about stocks that will be in focus today, and there are a few more updates to talk about. Mahima is joining in with some more stocks, the likes of Interglobe Aviation. I believe there is an order to talk about there, Mahima.
Right, Alex. So I'll start with Interglobe Aviation. Well, they've ordered 30 firm Airbuses, which is A350 and 900 aircrafts. Now, the delivery is expected by FY27. The company has purchased additional rights of 70 Airbuses, which are family aircraft. And currently, if you see, Indigo operates with a fleet of over 350 aircrafts. Now, their order book for A320 Airbuses is around 1,000 aircrafts, which will be delivered in the next 1 decade. Now, moving on, Tata Steel is in focus. Well, the company has proceeded with an investment of around 1.25 GBP billion, which is approximately 30,000 crores for a Talbot furnace. The GBP 500 million will be funded by UK government in this case, and this closes both the furnace blast will be closed by end of June 24 and September 24. Now, this is believed that TCL will go through with their plan for this both the particular furnaces, and the transition is expected to result into 2,800 potential jobs. And moving on, lastly, there is NLC Industries, where the company is commissioning 3x 660 megawatt thermal power plant, and Ministry of Coal has approved this coal block project basically, and the project is estimated to have a cost of approximately 2,200 crores, and the coal block will be extractable for a reserve of around 262 metric ton. So these are the 3 key stocks to watch out for in trade today.
All right, thanks so much for getting us those details, Mahima. Now, let's talk about Tata Steel a little bit more, because this is a significant update. In fact, the update on the Port Talbot furnace, which Mahima was just speaking about. And there is, in fact, a Citi note on that update. And we've got Kanika joining in to give you some perspective on that. Kanika, what is Citi saying about this?
Good morning, Alex. So, Citi has reiterated a sell on Tata Steel, and this comes in absence of visibility around a notable recovery in China. Now, the company is to proceed with investment worth GBP 1.25 billion in Port Talbot furnace, of which GBP 500 million will be funded by the UK government. Now, the company will be closing both blast furnaces known as number 5 and number 4 by the end of June 24 and end of September 24 respectively. Now, Citi also believes that Tata Steel will go through with their plan, and following the 38% rally in the last 6 months, it appears priced in for them. Now, this transition is expected to result in up to 2,800 potential job cuts, of which 2,500 could be impacted over the next 18 months.
Got it. All right. Thanks so much, Kanika, for getting us those details. Now, this is something that you've probably witnessed over the last 25 days or so, and this is your transactions in the mutual fund space not going through, because there's quite a bit of turmoil and confusion about KYC norms. And in fact, the AMFI is in conversation with the SEBI about those rule changes. And in fact, Saloni has picked up additional information from her sources. Saloni, what are you picking up?
So before we get into the details, let me first help the viewers understand what exactly is the re-KYC issues. Now the mutual fund investors were asked to update their KYC and redo it, especially with Aadhaar by April 1st to meet the regulatory requirements, which was initiated by the regulator last year. Now many investors were unaware of this update, and now they are unable to make fresh investments on the mutual funds front, and they will have to redo do the KYC process based on the KYC validation, category that they fall into, and then submit the official documents, especially Aadhaar. Now, based on that, this has created a lot of confusion and controversy on the same, as it's impacting investors as well as the mutual funds industry on the basis of inflows, because that's been stopped as well. So we reached out to a few industry sources who told us that AMFI is in continuous discussion with SEBI for the whole re-KYC issue and exactly how to go about it. Now, because inflows are getting impacted, as many of the fund houses have stopped taking fresh investments, as many of the investors are unable to do so. And also, however, the redemptions of the verified KYCs are happening normally, but what is happening for the non-verified ones is something that we have to look at. And also, now, based on all this, the industry is exploring options on how to make an industry-wise KYC, which at the moment looks very difficult, as many of the distributors work with different bank accounts. When you actually do an investment, a mutual fund investment and the KYC, it will be very hard for you to remember which distributor did you do it through and which was the first fund house that you did it through. So that looks difficult at the moment, but that's an possibility. And also the fund house wise KYC, which happens currently, but also a detailed version on that. So now SEBI is looking into the ways of doing this. However, this has to do more from the industry front. However, both the parties are involved in the discussions, and they are expecting a digital solution on the matter soon, as it's impacting investors and the industries in a very a drastic manner. So we will be updating our viewers based on the story, as and when it unfolds.
Indeed. Thanks so much, Saloni, for getting us those details. That brings us to the end of this particular edition of All You Need to Know. Lots to talk about over the course of the next 1 hour or so. And you find all of that on India Market Open. Do stay tuned. This is NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and
Welcome. You're watching India Market Open. It's the last day of the week. Lots and lots of earnings to react to. Tech sector will be in focus. Global cues as well on the radar. And the very first day of a new trading month for the F&O space. All that and more. Good morning, Tamanna. It's mixed across the world. Asia at least is seeing some bit of a weekend cheer.
Yeah, Asia's opened well, but Asia's sort of marching to its own tune. Bank of Japan expected to keep rates steady. Inflation data that has come in is okay, but what we've seen overnight in terms of data in the US is definitely concerning, and we'll get into a bit of a conversation on that as well. So let me quickly take you through what happened overnight. The Dow dropped over 300 points in trade. At one point was nearly 700 points down, but then recovered to some extent. And what has concerned is this fear of stagflation. So a combination of lower than expected economic growth and higher than expected inflation. Not a good combo at all. It doesn't allow the Fed to cut rates because inflation numbers are not within comfort zone. On the other hand, you have growth also not really coming through. So that is what has caused a bit of concern on Wall Street. Meanwhile, post-markets, mega caps had stellar numbers, Alphabet and Microsoft both. Alphabet, in fact, beat expectations, and in futures trade, that stock was up 16%. So Sundar Pichai has really pleased investors on the street. Meanwhile, what is the data that has concerned people? And I'll take you through that because that's fairly important. So in Q1, the US GDP grew at 1.6%. The estimate was 2.4%, so a fair amount below estimates, and that really is concerning. But on the other hand, your PCE, your inflation gauge, rose 3.4%, so nearly double of the previous quarter of 1.8%. This is the number that the Fed wants at 2%. So you have inflation peaking. Even the jobless numbers are not really pointing to a stable economy or a very strong economy. So a bit of a mismatch there, and it's leaving the street unclear about what to do. And you saw that in the bonds as well. The US 10-year rose to its highest level in 5 months at 4.71% on the back of all of that uncertainty. Brent, on the other hand, is back over $89 because of the US GDP data and, of course, of geopolitical concerns always simmering in the backdrop. Asia, on the other hand, although has opened pretty decently, and we'll pull that up for you. So Asia is doing okay. I'll quickly look at the fund flows for a second to give you a sense of what happened in trade yesterday and what are the kind of... So FIs are continuing to sell, and that happened yesterday as well. Perhaps that's why you had a bit of a tepid close after the way the markets were moving all through the day in India. So 2,800 crores on sales. DIIs bought pretty well, 6,000 crores worth of purchases on DII. So net, Samina, I would say that mixed cues, and now rate cuts are being penciled in maybe for September. We'll hear from the Fed next week as well, but it's come down to one rate cut in September, maybe.
If I had to put money on this, Tamanna, I don't think we're getting a rate cut. All of this year, you've got elections coming up soon, and we've said this from December.
You've said this for sure.
I've maintained it, but of course, after Vodafone yesterday, I should keep my money to myself.
So you're sounding like Neil Kashkari. He has a similar view, one of the Fed officials, and he's saying 2025.
If that, right? But this layman, if the economy is doing okay, in this case, of course, GDP is otherwise, but if you're happy with the way the economy is doing, inflation is a concern, why would you cut rates?
But they're not happy with it. So this GDP data has skewed that whole conversation. You don't really know what's happening.
But I think this rising US yields is what's going to be sparking concerns for developing markets. And we've seen that in those FI numbers, like you pointed out. Indian debt, Indian equity is seeing outflows. And very soon we will see that across other Asian markets as well. But I think we should delve into what this really means for Indian markets, because I know our markets have been supported by DIIs, but with rising US yields, the risk reward suddenly turns in favor of keeping your money in America as opposed to bringing it to India. And I'm not talking about the 2 to 3 year growth perspective, but if it's easy money, I don't know what's doing to us or could potentially do to us.
You know, it's interesting that we've spoken about this so much because Chris would have spoken about the very same thing in his greed and fear note as well.
Yeah.
So
we're all on the same page. We discuss it as much.
No, but it's interesting. He says that greed and fear repeats the long-standing view here that US Treasuries are in a structural bear market, and the extraordinary outperformance of emerging market government bonds since the COVID-triggered Fed monetary expansion is a sign that markets have started to question the assumption that Treasury and other G7 government bonds are risk-free. Because frankly, investors out there have technically not made any money. So that's part one. And therefore, it comes to the whole overarching view that no one knows anything. I mean, people have been penciling in rate cuts for a while. Now that is starting to question, change. Who knows if inflation data comes off in the second half because of the base effect, then suddenly people will say, "Arey, we had to said that there'll be rate cuts."
And now they're talking about a stagflation. So that's the other concern that's rising in the US.
Plus high inflation is anyway a concern. September is the earliest now that we're talking. But you know, coming back to what we're expecting in trade today, we had a fairly decent day yesterday, Neeraj. All things considered, barring Kotak, it was not half bad, and the numbers which have come out since overnight are also fairly decent.
In fact, the March series as whole is also not done too badly. So I think there was participation, and we should be taking a little bit hard from that.
Oh, most certainly. I mean, the dips getting bought into, essentially every dip is getting bought into. But interestingly, yesterday, because somebody commented on Twitter as well, that, you know, that we were speaking about this possibility of if the markets eclipse 500, then a swift call covering led up move, and that seems to be what happened yesterday amongst everything else, because there were very swift up move in the Nifty, partly led by the covering of calls, a significant call writing at 22,500, 22,600, and I think some bit of that got covered as well, which accelerated the move, if you will, in the second half of trade. The interesting thing is, could this month be a month of a bit of a risk off for this series?
Sell in May and go away used to be that old school
right? No one is selling before June 4th.
No, but if you look at historical data,
Here's the data. So the data is that the expiry analysis suggests that FIs have decreased the long-short ratios and the positioning quite significantly on both the Nifty and single stock futures. So, by the way, the April rollovers, right, on Nifty index futures were 65.12%. That's way lower. The previous month was 69.7, if I'm not wrong. This is 65.2. So, clearly, people are not really going ahead and banking heavily on making very large positions. I know Agam and Samina will talk about that, but this was one data. And I mean, very likely election volatility, don't want to take part in that. And FI positioning, the net shorts in index futures has come off. The long short ratio decreased from 0.81 to 0.62 index futures. And on single stock futures, FIs decreased their net longs from 448,000 contracts to 332 contracts this expiry. So expiry to expiry, rolls are lower, FI positioning is lower. People are clearly going into this series very light.
Also, just to put numbers to that, and why we say that the second half of the year between May to October usually sees a weaker market trend. May 2020, the Nifty was down 3.8%. May 2021, we were up 3%, so that wasn't too bad. May 2022, we were down 6.2%. And May 2023, we closed about 1% odd higher. So, but keeping that in mind, there is a little bit of a concern. Remember the long position of FIs, while you put a number to that, in Jan actually stood at 70%. So they've been declining gradually. And while the rollovers in this month look better than they did in April, they still are much lower than what we've seen.
Lower.
They're lower than what we've seen over the last 6 months, but I think they came in at what, 65%, if I'm not wrong.
Previous month, Samina, was
3-month average is
71%, 71.4%.
And the 3-month average is about 76.8.
Yeah, so it's quite staggering as to what's happened out there.
Yeah, and now with this great news on GDP, we will have to only wait and see.
It's a little tight. It's a little tight, but you know, in the Indian context, and you know, that's what we're talking about this morning. It's I think results, corporate numbers will maybe take the forefront of how stocks react.
So but just before we get to stocks, just on the trade setup, a couple of things that I wanted to highlight. One, Bank Nifty moving despite the Kotak downtick shows some inherent strength. Yes, but I'm just saying because Axis, SBI, everything came to the fore. So Kotak being down 10% and yet the Bank Nifty doing what it is doing. Just wonder if a breather is around the corner somehow.
For Kotak?
Yeah, no, for the Bank Nifty at large. 6 days on a trot now. We've had a good run without any plausible reasons. Yes, IndusInd might also add a little bit of a flavor, but it's not a heavyweight, so that is one. And two, just 3 buckets. We've been speaking about chemical stocks. Yesterday too, some of the chemical stocks. I mean, a Kotak report brought up Neogen Chemicals 12%. Today, Himadri numbers are good. I think Tamanna is going to speak about it. So, chemical, aluminum players. Very keenly watched out for. The City Note on Vedanta speaks about that. And lastly, CDMO players have disappointed. The commentary from both Syngene and Laurus leaves a lot to be desired. I would reckon that the CDMO guys could actually see a bit of a downtick again today.
You're talking about sectors you want to watch out for this month. So chemicals, and I think we've talked about this over the last few days. Neeraj just mentioned that defense, banks, auto, could be ones you want to watch out for. Tech has had it quite rough. We've seen those in the earnings. There is no clarity, no indication of an improvement in the US deals or TCV. So tech may continue to be in a soft spot. Talking about rolls for banks specifically, the rollover for Bank Nifty dipped to 74.4% from previous month's average of about 87.2. The rollover cost members also decreased 0.4 as compared to the 3-month average of 0.9. So those are a few data points you want to keep in mind when you watch out for this market. A quick check on the implied Nifty and on the VIX index. Remember, the VIX has also had it quite wild in the last few days. It's actually looking pretty good. A 100-point gap up is what we are expecting. I'm not sure if that's how it's going to play out, but interesting. 100-point higher start would definitely mean some cheer for the street. Again, may open with a gap, but there is a good reason that you may see a little bit of selling emerging because we've held out quite well. And sure, while the market remains buy the dip strategy, some profit taking cannot be ruled out at this stage. Let's quickly highlight for you a few stocks you want to watch out for. IT sector has disappointed with a whole host of weak earnings. You had LTI Mindtree yesterday, signed today, Emphasis, Tech Mahindra to add to that list. I'll highlight for you what Tech Mahindra did. Numbers were not too impressive. Clearly, what we are seeing is discretionary spend in the US is not picking up. TCVs are also under pressure. Conversion to revenue is the big challenge for most of those tech players. Revenues were down about 1.8%. Margins came in also down for Tech Mahindra at 4.9 versus 5.36. EBITDA was down 9% at 638 crores versus a fairly large Bloomberg estimate that was about 1,442 crores. Net profit was up 27%. At 664 crores. So that's what you have in terms of Tech Mahindra. Not great earnings. It'd be interesting to see how the markets react. Brokerages, though, haven't gone too aggressive in calling the shots on them, but largely not very impressed from what I've seen. Citi has clearly said they've got to sell on it. They've said it's another weak quarter and they would be a little concerned. BFSI was up 3.5%, and the positive, of course, was that BFSI for this company has done well, but across negatives, deal TCV is actually down 35% YOY. Headcount is down 5%. There's softness in retail and transport, and the US continues to be a sore point for them. Along with that, you had L&T Technology. They reported numbers too. Their revenue was up about 4.7%. EBITDA was also up. Margins were down marginally by about 30 basis points, but I think the street might actually like what L&T Tech has reported, but we will come into that in a minute. Net profit is also up marginally, and they've also interestingly done a dividend, which is usual across tech players, of about 33 rupees a share. What was interesting is UTI Asset Management. On the face of it, these numbers actually look pretty good to me. But if you go through what the brokerages have to say, they don't seem very convinced about the kind of performance UTI has put out. Their total income was up 35.9%. Their net profit has also come in marginally higher at about 181 crores. AUMs have risen 19% YOY. But a couple of big brokerages have said that operational performance remains weak on this one. They said that their equity-oriented market share has compressed to 3.9% in March 24, 4.1% that was seen in the last few quarters. They've also recorded equity outflows, which was quite high at about 13 billion. And their SIP gross flows have also come down. While that is what the numbers are reflecting, if you look deep down, I'm not sure where the growth is then coming from, because if they've seen SIPs coming off, equity market share reducing.
Cost optimization, Samina.
So it's operational efficiency.
Operational efficiency that's helped the profits. But the SIP gross flows, you're right, have come off.
So that could be a concern, but I think it'd be interesting when the management comments on what the favorable yield mix is doing for them, because like I said, they look great. The stock has done really well in the last 1 week, but if it's only operational efficiency, you might want to look out at FY25 and be concerned, I'd imagine.
You know, for AMCs, just another point, and this is a story my colleague Saloni has also been reporting, this whole KYC business has really bothered them, not just in terms of compliance, they also see a possible impact on inflows. Remember, there are new KYC norms which kicked in from the 1st of April. And if you don't have those KYC norms in place, you can't actually put in more money. So they've written now, AMFI's written to SEBI saying, please fix this, because it's not only bad enough that people can't withdraw, but even inflows could get impacted. Now, having said that, a few more stocks we should watch. Kotak Mahindra Bank down nearly 10% yesterday, and that was expected after the RBI action played out. But, you know, what I found, I don't know if I should call it strange or definitely noteworthy, is last evening there was a tweet out from Kotak Mahindra Bank, first ascribed to their CEO, Ashok Vaswani, which was essentially a message to customers saying, don't worry, everything will be fine, we'll fix what the issue is, everything will continue as per usual, which for current customers, things don't really change. And then that tweet gets taken off. They put it back, but this time it is no longer from the CEO. It is just from Kotak Mahindra Bank. I thought that's quite strange, because if you're trying to quell concerns, why would you not own it? On the other hand, you haven't really seen any clear communication from the bank on, is there a timeline in which they're going to fix it? Just very, you know, broad kind of statements saying that we will fix everything shortly. So, even in the letter to the employees, which we reported on NDTV Profit. So I think you could see continued pressure after the fall yesterday, which was an over 10% fall. Maybe at lower levels, you might see some clawback. But right now, Kotak Mahindra Bank may not have another good morning. But we'll, of course, wait and see how that pairs out. Bajaj Finance was the other one. In line, largely, the numbers in line, net interest income up 28% YOY. Remember, this was, in terms of compliance, also a bit of a challenging quarter for Bajaj Finance. The RBI had its own sort of, you know, regulatory action on small ticket loans. They had to provision higher, they had to change that mix, etc. So all things considered, operating profit up 25%, provisions as expected up 53%, and PAT was 21%. The management is cautiously optimistic on profitability. I was looking at the Citi note this morning. They've maintained a buy with a target price of 8675. So they see about a 19-20% upside. And the key point is exactly this, that earnings are in line with forecast despite being impacted by 4% due to regulatory restrictions. They've, of course, formally, and this is what the management said in the con call, they formally requested the RBI for a review and removal of product restrictions. Their FY25 guidance has also been trimmed, but nevertheless, I think Bajaj Finance might not see a very bad opening, and the numbers are largely in line. Interglobe was the other one I wanted to talk about, Indigo, and this was an important, though not very highlighted development yesterday, but definitely an important one. So Indigo, Interglobe Aviation, has effectively ordered 30 Airbus A350-900 aircraft. So this is their first venture into the wide-bodied aircraft. They have said they have a purchase right for an additional 70 Airbus A350s. So this bolsters their international presence. It's portraying sort of a very positive outlook for the way the business is going when you're putting in an order to this extent. They've also inked a deal with Rolls-Royce for purchase of 60 Trent engines. So I think safe to say be prepared for a good move in Indigo this morning as well. So these were some of the first list of stocks that I was looking at.
And speaking of financials, by the way, IndusInd Bank would be the one that could actually give a bit of a support as well. Though this whole talk of how earnings continue to benefit from a utilization of the contingent provisions of 300 crores and the traction in retail deposits is missing. But the overall performance seemed okay. NI PAT growth of 15% YOY, loan growth at 5% QOQ. You can't really find too many faults with this. NIM stable at 4.26%. Moderation in slippages across segments. So in some sense, IndusInd Bank cast the near perfect picture. I would suspect because of the inherent strength on the bank nifty, you would probably see IndusInd Bank as being one more strong stock in the session today. Let's wait and watch. Emphasis, and you'll hear the management talk to Samina a bit later on in the show. Results were in line, maybe marginally lower, but the problem with Emphasis this quarter has been the total contract value signings. They call it TCV signings, which is the total contract value. And those signings were at $177 million only, which hints at a delayed recovery. Remember, this number at 177 is down 27% quarter on quarter. The 4-quarter average is actually 418 million. So the new deal signings are a bit off for Emphasis. Would be interesting to see how the stock reacts to this one. And Olectra Green Tech, for all the fanfare around order wins and the kind of valuations that Olectra trades at, it's an expensive stock, egregiously expensive stock, I might add. The revenues were down 23%, PAT was down 45%, margins down 136 basis points. Let's see if there's a bit of a negative reaction on this one. So these three kind of stood out for me in the session today, or for the session today.
Also, just a smaller one. I don't know whether you've got Som Distilleries on your radar. But quick reporting on that one. They've reported, a small company, but worth a mention, they've reported a profit of about 20 odd crores, which is about 26% higher than what they'd done last year. Revenues are also up substantially, about 51% to about 381 crores. Now, interesting because it's a small company. The stock has done exceptionally well in the last 1 month, and you may see it do quite well today as well. So, small company and hence a big move cannot be ruled out. Could be a trader.
Dawa is all working.
The things that are doing
Daru
well.
and Dawa, both are working.
And milk. दूध भी सुन देखा था हमने. So all this dairy intolerance, alcohol, all this healthy living is for I don't know who,
whatever,
the Americans.
Whatever you need, it all works.
There is an American coming up on the show, I believe.
Yeah, you should come to him quickly.
Aren't you talking to somebody from
Santosh
on the US data
Global
points?
Cues?
I don't know if Santosh wants to. But before I give it to Santosh Rao, yes, and we are going to talk about global cues. Just a couple of very quick stocks that I want to talk about. KPI Green, good numbers. Revenue up 58%. Remember, this is a company which has had a bumper order book, so that's why you're seeing those revenues up. But even EBITDA up 71%, margins 32% up. 32 versus 29, sorry, 236 pips up, and net profits at 35%. KPI Green might be fairly decent today. Tanla I'm just talking about Tanla because that stock moved
has
so
been,
much.
The last few years.
EBIT down 18%, margin down 321 bips, net profit down 7%. I want to see what happens with this stock
It might
today.
still open higher given its Tanla.
The kind of movement. So, the numbers are not great. So, I'm just curious to see what happens with Tanla. Himadri, I took because, specialty chemicals seems to be staging some kind of a comeback. And the EBITDA numbers looked good, 42% up, margins also up 300 pips, and net profits up 51%. So Himadri is something you should keep on your radar. Santosh Rao.
Just one quick, Tamanna. I just want to quickly hide Zensar because we've highlighted all the tech companies. It'd be unfair to leave this one out. They've registered a profit of 173 crores, which is up 45% Y on Y. This is despite a muted top line. The reason you've seen a bump up on numbers is other income and improved operating margin. So you want to watch out for this one. The front line, the top line may be deceiving, but it's due to other income that we've seen a jump. So watch out for Zensar. Another one is Aavas Financiers. Smaller, but worth mentioning, 142 crores reported. They've grown 12.5% YOY, and the net interest income is also up 14% YOY. So this could see a positive move in today's day of trade as well. Back to you.
All right. We wanted to talk to Santosh Rao this morning. Santosh Rao, thank you for joining us. Thank you for your patience. I know you've been waiting a couple of minutes, so thank you for that. He's head of research partners at Manhattan Venture Partners. Just wanted to get your take on the kind of, I would say, varying data we've seen out of the US coming out last night, and it's left, I think, bond traders, of course, equity traders a bit confused about what happens next. So GDP in Q1 poorer than expected, your PCE data, your inflation data is higher than expected. What do you make of all of this when it comes to the big trigger of Fed cutting rates?
Yeah, good morning. I think what we saw today, when the GDP data came out, is that the fears of stagflation started coming in. The talk of stagflation, where high inflation and low GDP, low growth. I think that's the big fear, and that was always in the back of the mind. But so far, things appear to be good. So this caught us by a little surprise because GDP was expected to be at 2.2%. Things were coming along. So what you're seeing with the earnings so far, the theme that you're seeing is the revenues may be softening a little bit, but the EPS, the bottom line, is good with most companies, and that means that the margins are holding up. And that's what's really helping all the companies because of cost cutting, because of AI, productivity gains, or whatever. I think that's what's happening. So revenue slowing down, EPS still okay. But all of them pretty much are guiding to a softer next few quarters or next year also. So I think that's the big confusion as to where are we. At this point, looks like the Fed will come back into the picture at this point. One cut, maybe two cut is still on the cards, hasn't been ruled out yet. Let's see if there will be a revision of these numbers down the road, because that's been happening a lot. You come out with a high number, then they bring it down. You come with a low number and it raises up. So I think market is going to wait for another report to get confirmation that things are really slowing down. So at this point, definitely that was not a good news. Today, Google numbers are very good. Microsoft numbers are very good. So I think that should help the market again tomorrow. Facebook was disappointing the other day. So kind of mixed reaction there, but there's a lot of AI investment going on. There's a lot of, so things are okay. Things are fine. The labor market is still holding up pretty well. So that's the thing. Inflation, we want it to come down, is very sticky at this point, and that's the big thing that people are watching at this point.
Right. There's a big difference between what's happening in the real economy, what's happening in the macros, but very pointed question. Rising bond yields in the US, what does that mean for risk assets like India? We've consistently been seeing FIs selling because clearly the risk-reward ratio is now more favorable for US debt versus Indian markets.
Yeah, rising debt, rising dollar is definitely not good for emerging markets. So I think that risk is there. Let's wait and see if this persists. I hope it's not a knee-jerk reaction, but at this point, the long thought of fears are coming to bear at this point. So I think the sell-off was totally understandable if you believe that we are definitely on a path of slowing down, and the Fed is not going to definitely cut. I mean, it's not going to cut rates at this point because of inflation. They need to, because the growth is slowing down. So I think a lot of balls in the air at this point. Wouldn't jump to conclusion. Let's wait for the PCE data that comes out tomorrow, which is Friday. But the inflation component of the GDP data today was pretty bad. I think that's what spooked the market. But tomorrow, let's get another confirmation whether the actual PCE data will be below consensus or not. If it's a hot number, then we are really not in a good shape. So let's hope that it's not that hot tomorrow.
So a fluid situation over there. Thank you so much, Santosh Rao, for joining us this morning and giving us that quick analysis of all of the data that we're seeing. Remember, more data coming in over the weekend, at least for India, and we'll see if that reflects Monday morning trade. Always good to talk to you. All right, we're talking about the elections this morning, and Alex, that's the focus on Editor's Cut, isn't it?
Absolutely. What else should we speak about? It has to be the second phase of the general elections. 88 constituencies going to polls, and they have in fact already started seeing people queuing up to cast their vote. And the most important question to ask this morning is, what are the key battles to watch out for, and how important is this phase of the poll? So let's start with that.
Yeah, the reason that this phase is important, there are about 88 seats that go in. And remember, phase 1 was the one with the largest number of seats. This is 88 seats. Why this one will attract a lot of headlines, Alex, is because of the faces. The names that are going to poll. So you have Hema Malini, you have the former speaker coming in, Rahul Gandhi. The Wayanad battle is in this phase. You have a very interesting battle between Shashi Tharoor and Rajiv Chandrasekhar in Thiruvananthapuram. You know, I'm excited to see what happens there. But beyond that, this phase is all about Kerala, I would say. That's the big one. So you
because
had
all of Kerala goes to polls.
All of Kerala goes to polls. About half of all seats in Rajasthan go to polls. Half of all seats in Karnataka go to polls. Bengaluru polls. And I'm hoping Bangaloreans, please come out and vote. You know, all urban centers, including Bangalore, are really known for poor voting turnouts. Take an off if you have to. You have a legal right to take an off if you go and vote. So
and there's also a portion of Uttar Pradesh that goes to polls.
Yes, there are seats in Uttar Pradesh. Of course, there are seats all over. That's why the 88 seats and all. But I'm just talking about the key ones. So why is this one important? Clearly, the big fight in Kerala. Now, Kerala is somewhere where the BJP has never had a seat. That's fine. But look at what happened in 2019. Their vote share went from
a minuscule amount,
to nearly 15%.
Interesting.
In 2019. They are going to try and increase the vote share further. That's really going to be the big fight. Whether they get a seat or not, I mean, that's a bonus. In the big picture, it's not going to matter to whether they form the government. But this whole election, there's been a focus on making further inroads into the south of this country. It's greenfield territory, relatively speaking. So which is why Kerala is important. Rahul Gandhi's Wayanad seat is important. It's considered to be the safe seat, but it's a three-cornered battle. So there is Annie Raja of the CPIM.
And she's very popular.
She's very popular. She is D. Raja's spouse, who's the head of CPIM, very veteran leader. So she's not a, very easy walkover kind of candidate. You have the BJP's Kerala chief, K. Surendran, on the other side in Wayanad, and Smriti Irani, who actually won Amethi and claims to have pushed Rahul Gandhi out of Amethi, has been campaigning non-stop for K. Surendran. So Wayanad is one interesting seat to watch. He's likely to make it through. That's what the polls predict. But with what margins? Thiruvananthapuram, like I said, is interesting because it's a three-cornered seat. Shashi Tharoor is a three-time MP from there. So anti-incumbency, etc. But there is, of course, CPIM, Rajiv Chandrasekhar and Shashi Tharoor. Rajasthan also important because half of seats go there. And what we've seen with Rajasthan is that when it comes to the Lok Sabha elections, no matter how, they go one way or the other in assembly, they alternate between the BJP and the Congress. But when it comes to Lok Sabha, it's all one way for the BJP usually. So we'll see what happens in Rajasthan as well.
And that's an interesting data point, right, about various constituencies that always vote the same way when it comes to the general elections. The populace just knows how to go.
Yeah, so a lot of Indian voters now are very clear that how they want to vote in the general elections versus an assembly elections is different. That's why Karnataka also becomes key. You'll see a lot of our IT bosses come out to vote this morning. I think I already saw pictures of Narayan Murthy. Tejasvi Surya is, on the ticket as well in Bengaluru. Karnataka voted for the Congress last time. How will they vote in a general election? Will they stay with the Congress or, will they vote for the BJP? Remember, the JDS and the BJP are in alliance in Karnataka this time. So all in all, an exciting sort of phase. Just one more point I'd like to add before we wrap, Alex, is look at what's been happening in the last 2 days. And this is what I would want to watch. This inheritance tax conversation, this redistribution of wealth conversation. Does it impact voters in the favor of the BJP is what I would like to see. Because I just want to see if you can pull up that chart, the 2019 results in terms of BJP's NDA's vote share versus India's vote share. The NDA got 46% vote share in the seats they fought, whereas the NDA was a little lower. It was up, I think, 33% odd vote share. So it's a tough one and important for the NDA and the BJP to increase their vote share in this phase as well.
Absolutely, and we'll know soon enough. We will, of course, Tamanna, be bringing a live coverage of the voting. And once again, I'd like to reiterate, if you are watching this and if you are in any of those constituencies, please do go out and exercise your right to vote.
Just want to add, if you're in Bengaluru, and our colleague Pratibha has done this excellent story, there are dosa restaurants which are giving you discounts, Rapidos giving you a discount if you go with an inked finger. So just go vote.
Yeah, there are bonuses and benefits to going out to vote beyond just the exercise of the mandate that you've been given, or rather exercise of the right to vote. We have to slip into a very quick break. There's more on the other side, so do stay tuned. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Welcome back. This is India Market Open. Well, we saw a very interesting day of trade yesterday, and then that Nifty reclaiming 22,500. But more importantly, after that substantial choppiness, we've seen it end in the green. So based on that, of course, we are also moving into a new series. And May series, well, it promises to be an interesting one because it's not only are we bracing for another earnings season, the final quarter of the financial year gone by, but also election season. And based on that, we are starting to see positions being built as far as May futures go. 30% added in as far as May futures and the Nifty are concerned. The Bank Nifty also adding about 15%. The Bank Nifty also, in fact, edging back towards the mark of 48,500. In terms of the options market, well, yesterday, of course, was a day where we did see a lot more writing around the 22,600 calls as well as puts, as you can see on your screen there. Well, similar sort of activity in the 22,500 calls and puts as well. But where does that leave us with your overall open interest? Well, let's pull your distribution picture here. So on the lower end, we are looking at a substantial amount of accumulation around the 22,400 and 22,500 put strikes. And of course, on the higher end, we are starting to see traction return to 22,900 and 23,000 calls. So these are the some of the strikes that we are watching out for over the course of the next few days and weeks. But in terms of stocks, Again, plenty to keep an eye on. Of course, Bharti Airtel in terms of longs coming through, and in terms of unwinding, well, this perhaps is not as consequential because it's April futures and we've seen a lot of declines coming in. But besides that, we're also keeping an eye on a handful of banking names. IndusInd Bank, of course, will react to earnings, as will Bajaj Finance. So these are some of the names that we are keeping it on our radar. But the question really is, where do we go from here with respect to benchmarks at the moment with the way things are? And are there any other trading ideas out there? Well, let's get in an expert there. We have Rahul Ghosh of Hedge.in who's joining us on the show. Rahul, good morning. Thank you so much for joining in. Let's once again start with your assessment of the benchmarks, the Nifty, the Bank Nifty. What are you expecting from them and how are you placing your bets here?
Good morning and thank you for having me. So firstly, as I mentioned even the last time around, that May is a 5-month series. And 5-month series, historically, if you pull up the data, you will notice that they are very, very volatile in nature. On a personal note, we expect that the May series would have about 1,000-point move. That is at least 700-800 points on the upside and about 400-500 points on the downside or vice versa. So that kind of volatility is what we are expecting. The open interest data, as you rightly said, is not concluding any sharp move on either side, because if put writers are increasing, the 23,000 call writers are still active. So it's not giving any conclusive data. In terms of levels, 22,650 to 22,800 is a congestion zone on the index, which should be noted. So you still have about 100 points on the rally. And once you get another 100 points on the rally, we would be a little cautious. And the next long we would initiate only after 22,800. So that's one point to keep in mind. Another point to keep in mind, very interestingly, if you notice towards the beginning part of the April series, there was very heavy call writing of the 23,000 puts. Now, mind you, towards the beginning of April series, there was almost 700-800 points to 23,000. Such heavy put writing, I beg your pardon, not call writing, such heavy put writing basically tells us that, yes, even though there was volatility, the big players are clearly buying in the money puts and expecting a move towards the upside.
Right. So, Rahul, based on your observations, how are you deploying options? What kind of structures are you putting on?
So the last time we discussed about a very specific put calendar structure, which was for the downside to sideways move in May. Now, the beauty of that strategy was, even though now you see markets have gone up 400 points, you would notice that the structure which we created last time is hardly losing any money, because we had a sold unit as well as a bought unit to compensate this. Similarly, we are creating another structure this time. This is on the upside to play the 100-120 points that can come about in the next few days. The structure basically is called a modified call butterfly. What do we do in that? We buy a call, we sell 2 calls, and we buy a call again. So buying of 2 calls and selling of 2 calls. This makes the position completely hedged. And once a position is completely hedged, you're not prone to gaps on the upside or the downside. The structure works as follows. We buy the 22,700 call of May. We sell the 23,000 call of May, both May and series. We further sell the 23,300 call of May. This is again May end expiry. And to hedge the second sold call, we buy a 16th May 23,300 call. I'll repeat, 22,700, 23,000, 23,300, and 16th May 23,300. Now, how does this structure work? This structure basically makes you money if Nifty moves up sharply. This structure makes you money if Nifty moves up slowly. And this structure protects you if Nifty does not move up at all. How does it do that? If you notice, the sold legs encompass almost 80% premium of the bought legs. So a simple roll down of the 23,300 to 23,200 or 23,100 or even to 23,000 will make sure we compensate the extra debit of 20, 30 or 40 points that we might have. Also, one more caveat to keep in mind, that this strategy is best entered when Nifty is close to 22,500. So yesterday markets were signaling a 50, 60 point gap down, which is when it is ideal. Not that you can't enter it at current market price, but from a premium perspective, it's best entered at 22,500 or rather close to that.
Right. Rahul, just a follow-up question on this particular strategy. Why is it that one of these calls is from a different expiry as against the others when you're deploying them?
Perfect. So the reason that is because the last 23,300 call that we have sold is basically only to cover the premium of our initial anchor unit. What do I mean by the initial anchor unit? I'm talking about the 22,700 call. So the extra sell leg that we have compensates the premium of the buy leg. But if prices move up sharply, if Nifty goes up 700-800 points, I mean, May is going to be a volatile series, make no mistake. To hedge on the upside, we use the 16th May expiry, so that if there is a sharp move on the upside, the last bought call becomes in the money and helps us actually make money. Unfortunately, normal common websites will not be able to give you a clear payoff. So what I request participants to do in this case is draw a manual payoff and see the calculation. What happens when Nifty goes to 23,000? What happens when Nifty goes to 23,500? And you will notice that the trade is handsomely playing out in both cases.
Right. Fair enough. Well, a very comprehensively explained strategy, Rahul, and a pertinent one as well, given that we are expecting volatility. Any other stocks on your radar at the moment?
So the last time, if you remember, we had Tata Motors on our radar and we came up with a strategy on Tata Motors. That's played out well because Tata Motors has moved to the upside from the last week when we spoke. This time on my radar is BHEL. So because BHEL is on the charts, is been making a higher highs and higher lows, conventionally a very strong upward momentum pattern. Also, from a conventional technical analysis pattern, it's breaking out as well. So we would plan long spreads in BHEL. This is something that your viewers can look into for the May series.
Okay. All right. There you have it. A modified butterfly is what Rahul is playing as far as the Nifty is concerned, and BHEL is the other counter on the radar. Rahul, on that note, taking a moment to thank you for joining us and taking us through your views on the markets, also explaining that option structure that you're deploying. And well, with that, it's back to you in the studio, Neeraj.
Thanks a lot for that, Agam. Well, and viewers, remember, 10 minutes. Between 8:30 and 8:45, we take about 10 minutes, explain to you option strategies. Agam talks to somebody, gives his view as well on how the derivative picture is looking like. You want to understand what's happening in the derivative space, you got to tune in for this segment. Okay, before we move on and talk about some of the other things, which is technicals and fundamentals, I think it's important to highlight what beyond earnings, in terms of stocks, are newsmakers, which may have a possibility of a reaction. My colleague Anushi Johnson to talk about those. Anushi, good morning.
Hi, good morning, Neeraj. So I have three stocks that you should definitely keep in your radar today, starting off with Interglobe Aviation over here. Now, they have ordered about 30 firm Airbus aircraft. Now, with this, the deliveries are expected to start from 2027. Now, company also has an additional rights of about 70 Airbus in the same family aircraft. Now, currently, if you look at Indigo's, it operates over 350 aircrafts. And if you have to look at its order book of A320 family, that stands about 1,000 aircraft, which is to be delivered in the next decade itself. Now, again, moving on to Tata Steel. Now, Tata Steel has remained in focus with its European operations. Just to streamline on this, there's further updates over here. Now, this proceeding with the investment of about 1.25 billion pounds in its Port Talbot furnace. Now, with this, they're commencing the closure of its existing heavy end assets in the following months. They're also in talks with the UK trade union over there, and discussions are going on within the next 2 weeks to discuss about the potential MOU on future ambitions of the business going forward. So also that remains on watch out on how the European business pans out going forward. Last on the list is NLC Industries. Over here, the company is commissioning a 660 megawatt of a thermal power plant project in Uttar Pradesh. Now, this is after the approval of Ministries of Coal in the Pachwara South Coal project. Now, this estimated capex for the capital cost for this stands at about 2,200 crore, and this has an extractable reserve of about 262 million tons. So again, these three are the stocks that should definitely be in focus today.
There are lots that we need to watch out for today, and I'm going to add some distilleries to that list. Those are going to be counters that will be reacting to their earnings and stock-specific news as well. A quick check on implied Nifty before we move on with the start of the May series, and it's looking interesting, going in a little subdued and soft actually. 30-point gain is what we're expecting. It's a flat to slightly higher start that we should be expecting in today's day of trade. Well, Rajat Bose, SEBI registered research analyst, now joins in with his technical view on the markets. Rajat, hi, good morning. What are we selling? Good morning. For the month of May, what is the strategy on the index and Bank Nifty?
See, as far as strategy for the next series, I would say that you can sort of go long in right at the outset, but then you need to see whether the Nifty gets past 22,650. 22,650 is a very crucial level, and above that 22,768. These two resistance levels, once crossed, then we would be definitely cruising into the 23,000 zone. Whereas if we were to see that the market or the index is going down and it falls below 22,200 mark, then there would be a lot of problems in the sense that market would show weakness and it can come down. So I would say some kind of I saw a modified butterfly kind of an option strategy. Well, that could be a good enough strategy in my view also, that you take one option on the upside, maybe 22,700 or whatever, or on the downside, you take 22,200 as well as 22,000. These two should be sold. That way you can go for an option strategy out here. But the thing that I would like to mention here is that I have reviewed mostly a large number of large caps, mid caps. A number of those prominent stocks are actually showing signs of getting tired. And you would definitely appreciate one thing, that is, in India, I don't know about other countries so much, but in India, we are already 4 years, 1 month. That is the age of this bull market. And this bull market in our country, bull market do not last beyond 5 years, or better to say beyond 4 years. It becomes difficult, troubled waters. You are getting into troubled waters. So one needs to be very careful.
Okay. Rajat, good morning. Neeraj here. So if this is the overarching view that you have, let's start off with the two stock ideas, and then we'll move on to some of the other movers and shakers. But the two top ideas for the morning.
Well, I have one counter that is I hold in my long-term portfolio. But the reason I am recommending that stock is because it has posted it has posted a hammer line that is testing major support area. I'm talking about LTTS, Larsen and Toubro Technology Services.
Okay.
After posting a high around say 5873, it has come down. I feel that it has already completed its short-term correction. So the stop loss should be 5075, 5300, 5375, and 5480 are the targets. And the second one is Sun TV. Sun TV, to my mind, is actually forming a base pattern, and this base accumulation pattern is already complete. It is likely to move up. Put a stop loss below 605, and 648, 670, and 698 are the three targets. Both the recommendations are short-term trade. I do not offer intraday calls as such because the market tends to be too volatile.
Got it. Okay. Viewers, for LTTS, just keep in mind that they have guided to a 8 to 10% growth for FY25, but that is the organic growth. They have categorically stated that at some point of time in the year, there will be an inorganic move which will add to growth. So at the reported numbers at the end of FY25 will be higher than the 10% growth rate which LTTS is guiding right now. Sure enough, capital gets used for it, but there will be reported growth which will be higher. Now, which way the street takes it is a different kettle of fish. Rajat, coming on the top loser yesterday, Kotak Bank, are the charts fractured enough for the stock to head lower, or are these levels where it could consolidate?
Definitely, I'm coming to Kotak Bank, but before that, let me give you just this pointer. That is, apart from ICICI Bank and Axis Bank, most of the private banks, especially the leading ones, are weak. But Kotak has actually broken down accumulation pattern, developing saucer pattern. All that have been negated in the kind of fall that we have seen yesterday. So Kotak is now has actually gone beyond all stop losses, and there is no such sign to say that immediately there would be this kind of things do not come up with a major recovery very soon. It requires a lot of consolidation.
Rajat, morning. Tamanna here. So Kotak could have another day of free fall. What about, I'm keen to know your views on what's happening on the other side. Axis Bank, superb showing yesterday because of its numbers. Do you see more of the same? SBI, the other one.
Well, Axis is really doing great. Axis, if it were to cross 1140, then 1200 would be the next target. And Axis is showing a lot of strength. Yesterday, there was a gap up open, and after that, it moved up. So this is likely to continue. And yesterday, we saw major volume accretion. So volumes for the last 2 months had not been this great. So Axis is definitely bullish. And regarding State Bank, of course, State Bank also did a similar kind of a movement on the upside. It has broken out of its range. And although the volume is not as great as Axis, but it is also on a higher volume. So State Bank currently, say it is at 788. I'm looking at 805 and 814, 825. These are the three targets for SBI, and I would put a stop loss below 798.
The other one I'm keen to know your view on is Bajaj Finance. Numbers came in post market hours, seem like they're in line. IndusInd again in line. And I'm sorry, I'm just sticking to the BFSI space for a bit because there's so much interest and so much happening on the Bank Nifty as well. How do you see both of these, Rajat?
See, Bajaj Finance is actually developing a bullish setup. This bullish setup is not yet complete. You will see it completed only when it crosses the 7,500 mark. Once it crosses 7,500 mark, its next target would be 7,800 to about 7,990.
And IndusInd?
What was the other?
IndusInd, Rajat. IndusInd
Bank, right? IndusInd Bank. Actually, if you were to go long, I would suggest that instead of Bajaj Finance, one can get into IndusInd Bank because it is rising from its 200-day exponential moving average, and that is at 1457. So put a stop loss below 1450, and this is in a range-bound situation. So on the higher side, the range top is about 1560, 1570 kind of level. So you can expect 1550 for a minimum.
All right. Thank you for that, Rajat. But stay on with us. We'll take a very, very short break. More with Rajat Bose on the other side. We come back with pre-open rates as well. Stay tuned.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing. or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and language.
Back with India Market Open right here on NDTV Profit in conversation with Rajat Bose. A minute left for the markets to kickstart trade. About 16 for the minute for the pre-open to kickstart trade. About 16 left for the markets to kickstart. While we wait for the pre-open rates to come in, and we'll show them. But let's get in my colleague Punit, who joins in right now with a sense of what is Maruti Suzuki expected to show in the March quarter. Punit, what's anticipated?
Yeah, hi Neeraj. So really strong numbers expected from Maruti Suzuki this quarter. Do note that they've already released their sales numbers coming at roughly 5,84,000, which is a growth of roughly 15 to 18% compared to the previous year. Now on the Bloomberg estimates suggest that revenue is likely to rise roughly 25% compared to the previous year, coming at roughly 38,459 crores, while its EBITDA and PAT is expected to rise roughly between 46 to 48%. For EBITDA specifically, the margins are expected to come in higher by 190 basis points, coming at 12.82%, versus net profit estimates are roughly at 3,839, which is a 47% rise compared to the previous years. Now, what are the certain brokerages also expecting and saying for these results? Axis Securities has expected a good revenue growth to come in upwards of 20%. They say that this is led by the higher overall sales which has happened in this particular quarter, as well as a higher share of SUVs sold compared to the previous year. Export sales have also aided margins, while they expect the EBITDA to improve upwards of 300 basis points. It's a rise on quarter-on-quarter level as well. While ICICI Securities also has a higher estimate of EBITDA growth of roughly 53%. And finally, Citi, they have a 20% revenue growth estimate. The one key thing that they have highlighted, that the share of smaller cars compared to last year might be higher, and they've also said that this will be a key impact to note if the management has any commentary on the other festivals as well, which was shifted in April. Finally, they see higher operating leverage playing a key role in the margin rise, while they also see that any impact of commodity cost rise has been averted with these higher operating leverage benefits. So overall, very strong numbers expected from Maruti. Results expected before market close. Back to you.
Okay. Well, we'll watch out for this. Of course, Puneet, thanks for getting us that perspective. Watch out for Maruti. We'll talk to Rajat about Maruti, but just want to see how the pre-open rates are starting off. I mean, we'll have a start in the green is what the implied open was anyway suggesting. Thus far, too early to say, but looks like we're starting off okay. What should be in focus is IndusInd Bank, Bajaj Finance, essentially specific stocks, and even these will change actually. So we'll come to the stocks in moments from now. Rajat, we were talking about Maruti and expected to show out a good number. What do the positions around Maruti suggest?
Well, in my understanding, Maruti is headed for higher levels, but you will see one thing. If it were to move up now, Maruti around 13,200 or 13,225 would be a strong resistance, and beyond that 13,500. So I'm not penciling in beyond 13,500, whatever may be the result, because this is a technical view. The reason why I'm saying this is that despite the fact that Maruti is moving up, posting higher closes, but the GAN fan that I use, the GAN angles that I use, they are suggesting that beyond 13,200 to 13,500 is very unlikely. Even if it were to move above that, it won't sustain. And on the downside, if it were to fall below 12,500, then it becomes weak.
Right. So, you know, a lot of action there. Maruti also will be one to watch out for. Just a couple of more, Rajat. I was wondering how you saw Tata Consumer and a Nestle. Both of them with numbers out, Nestle more positive in terms of a response than Tata Consumers. Tata Consumers saw a bit of a pull, a bit of a recovery, I think, after one bad day. Is there anything in this space that you would want to touch and a specific view on these two?
See, you can go for Tata Consumer, but Tata Consumer 1150 to about 1200 would be another supply zone. I mean, that supply zone needs to be taken out decisively. Only then you will find good movement on the upside. On the other hand, I would say that Nestle generally after a controversy or something performs very well. And in India, I don't think that there would be any exception. And Nestle commands something like 135 return on capital employed. So if you do not have any ethical problem, Nestle definitely is one of the better stocks in the FMCG area.
Indeed, Nestle is a better pick. That's Rajat Bose's stock suggestion. Well, we've got with us Amnish Agarwal, Head Research of Prabhudas Lilladher, joining in. Amnish, good morning. Thank you very much for joining us. We're in the thick of the earnings season and we're looking at your report where you believe 25,810 on the Nifty is your target by year end. You want to elaborate on that and tell us what's the thinking, what's the rationale, and what are going to be the key triggers?
Okay, thanks for having me. See, the main thing is that the economy is doing well and we are likely to report at least 7% kind of a GDP growth. Monsoon this year is likely to be normal. And if there is no disruption on the political front and if there is continuity of the various policies, then I think there's a lot of money also waiting on the sidelines to, you can say, come in. So I think if the same policies continue for another few years with a clear momentum which is visible in the economy, then I think this target is very easily achievable over the next 12 months.
Hi Amnish, morning, Tamanna here, and I was just going through your report, found it fascinating because the thing is you're hinging it with the democratic hat trick. That's what you've called it, democratic hat trick to re-rate markets. Now, my question is that a third term is largely penciled in, very little chance of a surprise, but what is the upside here? We already know and the market has already accounted for what this government will do. You've already seen those sectors run up, capital expenditure, exposure, defense, etc. So I'm just trying to understand where this further upside comes from in your view.
There are two things. While a section of the market feels that that all the positives that this government is going to come back, everything is factored in. But I think if you look at what has happened during the past 4 elections, I think the main factor to watch out for is that it has to happen in reality, because the things can change and there is always an element of uncertainty. That is one. So that is why in run-up to elections, I don't rule out that the market turns a little jittery, little soft or sideways over the next, you can say, few weeks. Now, what will change thereafter is that whatever you can say on the ground reforms, initiatives, infrastructure, policies, steps they have been taken, they will continue. And you can see that first 5 years of this regime were different, next 5 years were better. And now whatever has been done in the country in the last 5 plus 5 years, now this time around, the fruits of that will be much more visible than what we have seen in the past. So if you go by that logic, I think it is, and the way these guys have given, you can say, all the details regarding what they are going to do in terms of railways, defense, what they are going to do on the social sector, I think it's like that India is a rising tide. And the growth rates, the momentum, I think that has got every chance to surprise on the positive side. And given the fact that India today is the fastest growing economy, we are doing well. I think in terms of markets, yes, as you said, capital goods, defense, some of these segments have moved up. So the sectoral rotation, it continues to happen from time to time. There could be, you can say, even if you look today, for example, banking, IT services, large part of consumers, so practically more than 50% of Nifty has not participated in the rally in any major way over the last 12 months. Some sectors have done well, as is always. But even in the sectors which have done well, I think over the next 2 to 3 years, there could be, you can say, new segments, new stocks. And I see a lot of steam still in the market, although one needs to be, you can say, a little bit cautious in getting into very small caps, companies without much operating history, etc.
So you're saying new sectors, new stocks. Anything that you'd like to elaborate there, Amnish?
You see, for example, you look at, say, for example, banks. Banks particularly, I would go slightly back from 2009-10 to 2000, say even 21, 22. The only 2-3 sectors which were driving the markets were consumer, particularly staples, FMP, private banks, and IT services. And this pack has not done absolutely anything in the last, say, couple of years if you look. Some of the large stocks, barring, say, in some instance here or there, they have been more, you can say, sideways. If some of them have even given negative returns. Now, some of these stocks selectively, purely on a bottoms-up approach, some of these sectors can start showing some sort of a comeback. And even in the sectors which have been doing well, I think the tailwinds are not yet over, whether it is, you can say, PVs and two-wheelers in auto, whether it is capital goods, whether it is hospitals, tourism. So I think there is, you can say, enough space, enough momentum. And like, if you look at, say, last 20, 30 years, every big rally, which has lasted 5, 7, 10 years, has got new sectors as leaders. Okay, if you dissect right from 90s. So this time around, it is very clearly visible that some of these new emerging areas, your cap goods, AI will come, hospital, never existed as a sector 10 years back, practically 10, 15 years back. So many new sectors are coming in, new segments are coming in, which will continue to create excitement in the market.
Pre-open rates have settled. Just want to mark a few stocks. Tech Mahindra is reacting to the guidance that the companies provided, 5% higher. The numbers were ho-hum. There are concerns around FY25, but the market clearly likes what they are talking about FY27 and the new strategy. That stock is up. Himadri Chemicals is up 4%. Aavas Financials is up 3.5%. And Zensar Tech, something that Samina highlighted, is up 3.5%. Interestingly, UTIMC2 is up about 3%, so that is one. But on the flip side, Olectra Green Tech is down 10%. Margin miss, EBITDA miss, and sales miss too, by the way. Spark is, like say, permanent resident, as Tamanna says, 257, 5% down. And L&T LTTS is down 5% as well on those numbers. So those are a few names that you certainly should keep in mind. CDMO players, Laurus Syngene, down about 1.5% too. Amnish, quick word on Tech Mahindra, 5% higher. One would have thought that FY25 growth remains a concern. Did you like why is this reaction? Because of the guidance for FY27?
If you look at in the near term, barring a few niche segments, entire tech space is under clouds. And I think this seems more from, I would say, slightly longer term strategy, which is given in a few, you can say, segments where they can do well. So I think at the end of the day, it boils down to that in the near term, when the entire sector is down, if you are giving a guidance for the slightly longer term, which gives, I would say, some sort of a visibility, then market is actually reacting to that. In the near term, I think Tech Mahindra, along with all tech stocks, it is not likely to do anything great till the overall year demand starts to move up. But if you look at, say, last 12 months or so, Tech Mahindra has also, you can say, underperformed significantly.
5% on the stock in pre-open trade. Emphasis, Zensar, Cyient, LTTS are some of the other tech companies that reported numbers. Emphasis as well, numbers were not very impressive. The stock is up flat to slightly higher. Cyient is also trading higher. Across the board, I think the market is being kind to tech companies. Even though the numbers aren't very impressive, all tech companies, barring LTTIS, are trading in positive territory. You've also got UTI Asset Management. Now, that's an interesting one we want to bring up. The stock the earnings were disappointing. If you look deep down, they've not actually done well for the quarter, but on the face of it, because those numbers look good, the markets are getting rewarding the counter. Well, let's quickly go across to Harsh as always, who's got a list of all the brokerages and what their top picks are this morning. Harsh, highlights from the Nuvama note on Vedanta. I believe that's the pick for us this morning.
Well, yes, absolutely, Shamina. 40% plus upside, certainly not small. They've hiked their target price 394 to 542. That's not a small hike either. Just in terms of what they're looking at in FY25, they're looking at a big transformation happening. They are suggesting that Vedanta's transformation is set to complete with regard to aluminium, international zinc expansion, all of which will happen in FY25. Debt has peaked out in FY24 according to them. Cash flow is what they're expecting for FY25 to be at 14,000 crore, and they believe that the vertical split of businesses should unlock value and the SOTP value should be higher than what it is currently. They've in fact hiked Vedanta's FY25 and 26 EBITDA estimates by 18 and 23% respectively. And they've given it a very, very strong 40% plus upside. Quickly on two more notes. One is Goldman Sachs on Zomato. 30% upside is what Goldman Sachs sees. Brilliant note there. And the second one is with regard to a downgrade on Bajaj Finance. Now, that one has really moved on the back of the numbers.
Got it, Harsh. Thanks. Harsh, thanks so much for that. Harsh, thanks so much for that. We'll have to wrap it up here. But those are a few notes to watch out for. Vedanta in particular, Nuvama on Vedanta, and Citi has upped the target on Vedanta as well. We have 55 seconds. Rajat, I do not have more than 30 seconds. Can I quickly come to you on Vedanta? 30-second answer, please. Okay, I don't think we have Rajat Bose. Nevertheless, well, that's about 38 seconds left. We'll watch out for Vedanta. There is a note from Kotak Securities on how aluminum is slated for some more gains, and that might benefit the likes of Nalco, Hindalco, even Vedanta, which has got a zinc and an aluminum business, which Citi in their note has highlighted could actually have some fanfare too. So watch out for some of these aluminum companies, could be interesting movers in the session over the next few days. But the first trade's about to kick in. Watch out for Tech Mahindra on the gainers list. I dare say it'll be interesting to see if Bajaj Finance, which we haven't spoken about at length, we'll ask Amnish about it, but it could be amongst the top losers as well. But here are the first trades. Flattish for the Nifty. That's okay. So we didn't get what the implied open was suggesting, which is fine, but we are in the green. The mid cap and small cap should come up on your screen. Frankly, after the gash that the S&P 500 was sitting on at about 9-10 p.m. yesterday, this is something that most people would be happy with. 0.5% for the small caps as well. Let's get the heat map up on the screen. On the gainers list, Tech Mahindra is up 7.5%. Really sharp gains for this one. Clearly the stock of the morning. The market seems to like what Mohit Joshi has outlined as a 3-year plan, and it is discounting the near-term growth concerns. Hindalco up another 1.5%, talking about aluminum doing well, and that stock has done well. Tata Steel is up in the green, despite a sell call by Citi, by the way. SBI Life up about 1%. IndusInd reacts marginally to its numbers. And then a few other stocks in the green. What's not done well? Bajaj Finance and Finserv. Clearly the impact of Bajaj Finance, and we'll talk about this with Amnish and Rajat in detail. So watch out for these two. Apollo Hospitals corrects a little bit. Some weakness in banks. So while Kotak is flattish to 0.5% lower, ICICI Bank is correcting a bit, and SBI is cooling off a little bit. I reckon the Bank Nifty might be a bit ho-hum, but clearly the stars at opposing ends. Bajaj Finance for the wrong reasons, Tech Mahindra for the right reasons, Tamana.
You're being kind by calling them stars, Bajaj Finance. Though the numbers were actually in line, they did guide for a weaker FY25. Though the large number of notes in Bajaj Finance saw the numbers fairly doing okay. ICICI Bank also a little weak ahead of its numbers. Kotak Mahindra having another down day. Not as bad as yesterday after a 10% cut, but still about a percentage down. Let's look at some counters in the broader markets and how they are responding this morning. I'll start with Interglobe because exciting news actually. They've ordered 30 new aircrafts. It's their foray into wide-bodied aircrafts, and Interglobe opening up with a bit of an uptick, not anything too dramatic actually, 1.5–2% up. I want to see what Vodafone's doing today because the gyrations of that stock stock is dizzying. So yesterday it was up. Today you're seeing selling pressure coming in 3.5% and more. Electra Green Tech already in pre-market was sulking and suffering, but it's actually better than what the pre-market rates were. Still, disappointing numbers have seen that stock open about 6% down. Zomato has another upgrade coming in on brokerage notes, and the stock's doing okay, about 187 rupees, so about 1.5% up. KPI Green actually had a decent set of numbers on the face of it, but you're seeing the stock down about 5%. Remember, this is a company which has seen a robust order book. Revenues also went up decently. Profits looked good, but the street's not too happy. L&T Tech is the other one. A lot of numbers impact being seen this morning, and L&T Tech is one of them. Look at that, 9% down on Q4 numbers. So the street giving a thumbs up down there. I'll just mark CRISIL as well. So CRISIL has got a note from SEBI to put out an ESG index, and that stock doing fairly well this morning, up about 3%. But Samina, so many more companies reacting to numbers.
Yeah, it is a morning one numbers. We'll add to the tech list of stocks that you both have already talked about. Cyient and Zenza, those are the other two you want to see how they're doing. Cyient is up, is trading flat. Zenza is getting a thumbs up, 3% higher on the counter. And remember, the earnings were a beat, but largely backed by other income. Aavas also looking good post its earnings. You also have a reaction that I want to see that could potentially be on some other names. So Bajaj Finance is up 2.5%. Som Distilleries, if you can pull that one up, they've also posted a good quarter. Numbers were good, but the stock is not seeing a runaway gain, 1.7%. Emphasis, I mean, this is shocking, 4.5% up move on the counter. Remember, their deal wins have actually declined year on year, quarter on quarter. Business is slow. Banking is a worry. Insurance is also looking tough. Headcount has come down too. But despite all that, markets looking beyond that. The con call has only just finished for Emphasis, and that's probably why the company, the stock is looking good. Management clearly indicating that FY25 will be a much better year of growth for the company, and the street is taking heart from that. So it's all about guidance this morning, right? You have Tech Mahindra from the large cap space that is making promises of a better year ahead, and so is Emphasis. Both those counters are raging in trade this morning. Along with that, on the winning side, you've got a few more names that look good. Vedanta up 5% on Nuvama's note, big move coming in there. You've got a couple of these other pharma, UTI Asset Management. Like I said, on the face of it, those numbers look great, but the fact remains that business inflows are actually reducing and for UTI Asset Management. But because of the top line looking better than expected on back of a strong reporting, the stock is up 3.5%. You've also got a few names like Bank of India, Hindustan Copper, Sterling and Wilson. Post its reporting early this week has been on an upward journey unilaterally, and today as well is no different, 2% higher on that counter. Shipwreck makers up and about, Mazgaon Dock, Cochin Shipyard, that's largely been the theme of the street. Doing well once again. Mazgaon Dock is up 2.5%, Cochin Shipyard seeing another gain of 1.5%. Zomato, which got upgraded by Goldman, 240 rupees is the target price on the stock. On back of that, the stock is up about 1.5%, so 188. Close to that on Zomato. On the sell side, we've already highlighted the likes of Electra and Bajaj Finance, but Vodafone Idea is trading having a flat morning. United Breweries, ICICI Securities, Deepak Fertilizers, Chambal Fertilizers, the chemicals are having a little bit of a morning of profit taking as we see it. If we can quickly pull up the benchmark and see what it's getting up to. Remember, we've said that for the last 5 days, banks have done well. This morning as well, it's not doing too badly. It is outperforming it is trading flat as we see it. But at the start of the May series, rollovers have been slightly below what we've seen over the last couple of months. So some profit taking cannot be ruled out in the early trade. Rajat, Tech Mahindra, what are you making of that up move? 9% high on Tech Mahindra, and Emphasis is up 5%. Both these companies' earnings were not very strong, but the guidance was pretty solid. Tech Funda view on Tech Mahindra and Emphasis.
The Emphasis is looking pretty good because Emphasis is very close to its 200-week exponential moving average, and chances are that you would see some kind of bounce back from here. And once it crosses 2450, it will gain traction. So emphasis as such is also forming a saucer on the weekly chart. That suggests that there is every possibility that although intermediate term, some bounce, some volatile range-bound activity happens, but overall the saucer pattern generally tends to complete, and especially for tech stocks, we have seen OFSS and others. So I have some confidence that Infosys is going to do well. Take Mahindra, I really didn't expect that this would post that kind of surge. And currently it is around, say, 1310. Around 1400, you will face some resistance. You will see it facing some resistance. And after that, if it were to cross 1435, it will gain real bullish momentum.
This is a surprise move by every stretch of imagination. I don't think anybody would have thought that this result and even this commentary, despite it being such a positive commentary, would account for a 10% uptick. The stock of the morning, if Kotak was the stock of the day yesterday, Techem is the stock of the day today. But on the flip side, and Amnish, want your view here, and then Rajat, want your view as well, on Bajaj Finance, this sharp downtick that we're seeing on this stock today, 5.5% lower. What's your sense? There were some misses, but their guidance didn't seem to be too bad. What's happening here with Bajaj Finance?
You see, the problem with Bajaj Finance and some of these NBFCs is that they have been trading at very fancy valuations. Now today, we talk to anyone, 3.5 times, 4 times has become like a base in many of these housing finance and your housing finance NBFC companies. Now you take stock and look at what has happened to banks over the years. Many of these banks, they were trading at 3.5 times, 4 times. And today, no bank is about 2.5 times. So the similar kind of a thing can happen to NBFCs as they grow in size and as they, you can't continue growing at 30% CAGR for your life. The growth rates in the long term, they will moderate. And once that moderation happens, the kind of price to book that some of these NBFCs are trading at, so that is likely to come down. That is one, and that is something which is structural. The second aspect here is that Bajaj Finance in particular, if you look at the kind of, you can say, tightening which RBI is doing for NBFCs which are larger in size, Bajaj Finance falls into that, and it is among the largest ones. So over the period of long term, can these NBFCs be directed to be banks? The possibility of that can't be ruled out. So I would be very hesitant to pay Bajaj Finance, or for that matter, any NBFC price to book, which is, say, in multiple times of what the best of the banks are today trading at. So I think that is practically, you can say, what is happening in my view.
Rajat, before market open, you said you prefer an IndusInd to a Bajaj Finance. Seeing how the opening has been, do you reiterate that?
I would say IndusInd is much better. Bajaj Finance, if it were to fall below 6,800, then it would actually go beyond its previous low. On the other hand, IndusInd looks pretty good. If I were to choose a stock that I would go long on between the two, it is an obvious choice that IndusInd is a better bet.
And one of your calls today, Rajat, is having a rough morning, LTTS. The numbers have not been seen very positively by the street. Stock nearly 9% down. Would you want to re-look at that call, or what would you do now with it?
I would say that LTTS, one should not get into this because the way it has fallen, it has broken down its 200-day exponential moving average. And unless you are a long-term investor, and I rue the fact that I have talked about it today on your channel, because as per SEBI regulation, I would not be able to buy before next Friday. Otherwise, personally, I would have bought it because I know I have studied, and I feel that over the longer term meaning several years, it would definitely do well. But exactly the opposite view one should hold if one is a short-term player. Short-term, This is no longer a short-term bullish trade. That it has broken down below the 200 exponential moving average means that there is every possibility that 4,500 might also be tasted.
So I get that. Your call is from a longer point of view, Rajat, not in the short term. Short term, you're saying avoid. At these levels for the long term, would you say accumulate LTTS?
I would, but if you are really into the stock for the long haul, then definitely you can. But short term, it may show some volatility because the chart pattern suggests that around 4,500 to 4,250, there is major support. It is unlikely to go below that. Only fear in my heart is this, that the day Fed cuts interest rate, our bull market might come to a halt. That is the thing. It is a counterintuitive thing. Someday, if you offer me some time, then I can explain as to why Fed rate cut actually gives a different picture altogether, along with the Fed balance sheet and how QE and QT operates in that. So that is what I'm really afraid of. If Fed cuts rate, the day Fed cuts rate, I would suggest booking profits on a large number of stocks, whichever looks weak.
We will get you back, Rajat, for a more detailed conversation on that. That definitely is an interesting sort of counterintuitive, as you put it, angle that we should talk about. Suffice to say, some winners, but a lot of losers in trade today. TechM is that big winner, and difficult to predict which way the street would go, but definitely a variety of views on those tech stocks at least. Look at TechM, 10% up now. Very quick break. Amnish, Rajat, thank you so much for joining us today. Always great to have you on NDTV Profit. We will come back after the break. We're speaking with the management of Cyient. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa.
Focus on Cyient. Their numbers have been out. Karthikeyan Natarajan, Executive Director and Chief Executive Officer at Cyient, with us on the show. Mr. Natarajan, very good morning and great to have you on. Let's just go through what this quarter has been like. Now, I just want to focus on DET and let me get straight to that. Your pipeline has been good, 9 large orders, but the QOQ revenues have been down about 0.5% in constant currency terms. The expectation of the street was slightly larger. Can you give us a sense of where that sort of choke point is? The orders are coming in, but where do you see the headwinds?
Yeah, good morning, everyone. Thanks for having me on the show. And as we have shared in our investor call, and some of the deals that we expected to flow in the early part of Q4 and did materialize, but around the end of the quarter, which didn't come on time, and that really did not make us to meet our earlier expectation.
Okay. Do you expect these to now come in Q1? Can you sort of give us a little more detail on the guidance as far as the DET segment is concerned? And that is your big one, isn't it?
Yeah, we talked about our guidance being at the high single digit for fiscal 25, and which is essentially led by the growth driven from sustainability, aerospace, automotive, semiconductor, and we are hopeful that connectivity will come back to growth. And this is based on the confidence about the 9 large deals you talked about, along with orders that we carry into fiscal 25.
What is the level of expectation or the guidance on margins going into FY25 estimated, Mr. Natarajan? In terms of the sectors that you've spoken about, these 9 large deals, aerospace, etc., all of this sort of gloom that we're seeing on the US economy, are you seeing that translating through?
Yeah, I think we talked about the macro challenges do remain, right? And whether it is about high inflation, interest rates, and geopolitical conflicts, and all this is making the environment challenging. And having said that, we are very pleased with our performance of fiscal 24, with about 12.6% year-on-year growth and 30% on earnings growth. This has been something which is phenomenal over the last 3 years, and we are happy with our performance, and we are confident that we will be able to maneuver through the challenges that are ahead of us.
In terms of your revenue guidance that you've talked about, Mr. Natarajan, you've guided for a high single-digit revenue growth. I just want to understand the basis of this. Have you been a little conservative here, looking at the overall sort of challenges coming in, etc.? And what is the near-term growth visibility you see?
Yeah, we talked about we expect probably Q1 to be soft, and we want to see how H1 pans out, and then we'll revise the guidance based on how H1 pans out. And we do expect H2 to be stronger than H1 at this point of time. But we just want to see how the macro situation pans out and how the customer orders getting converted into executable work. And in some of the cases, we do have order book, but the customers want to defer to execute over a period of time. And we just want to know how all this would pan out in the next 6 months, and then we'll take any revision accordingly.
Okay, fair enough. Just give me a sense of the aerospace vertical. That's a big one for you. There have been some decent orders and some big ones actually coming out. Do you see that bottoming out at this point? What is your outlook for this vertical?
Yeah, so if you look at last 12, 18 months, we have seen that air travel have come back and come back stronger than 2019. And we do expect our customers to continue to see challenges on supply chain, and they still have more demand than what they can fulfill, be it on manufacturing or production, as well as on the aftermarket MRO. So we would see continued growth on the manufacturing engineering as well as aftermarket MRO on the back of one of the large deals that we announced, which is a digital aftermarket. And this is supposed to map out the customer journeys of our customers, and they expect to bring a lot of digital solutions to help them to manage the challenge that they have. And also about digitalized manufacturing solutions, which is going to see a significant uptick as everyone wants to increase their ramp-up capacity, and they have the fixed capacity, and can they gain more out of every day, every month, and which is going to be enabled through a lot of productivity improvements, Industry 4.0, helping them with the digital inspections, and what can be done through model-based systems. I think a lot of them are going to be bringing the productivity up so that they can get more output in the existing capacity.
Just a couple of last points, Mr. Natarajan. What is your outlook for the ER&D segment? You're saying you're expecting a pickup there. It's not been superlative this quarter, but what are you expecting to change? And which are the verticals you hope to fire?
I think like in the medium to long term, we do see a good potential of growth coming from sustainability and automotive, semiconductor, healthcare and life sciences, and as well as on the connectivity side on the back of aerospace. So we do see that in the medium to long term, I think the prospects are pretty good. And given the challenges of demographics coming out of Europe and the significant growth ahead for many industries over the next 5 to 10 years, led by software-defined everything, digitalization, and the impact of artificial intelligence and automation, I think we do expect the medium to long-term prospects to look pretty good.
Thank you so much, Mr. Natarajan, for joining us today and speaking with us on NDTV Profit. Always great to have you here, and we hope to speak with you next quarter as well.
Thank you.
That was the top management of Cyient speaking on their numbers. The street has been tepid about it. We'll quickly just pull up the stock before we go into the break to see how Cyient is responding. And yeah, after opening up pretty robustly, come off some of those gains. Time for a short break, but on the other side, we have conversations with top managements of all of the companies that have come out with numbers today. Don't go away.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using.
Welcome back. It's been a steady Q4 for L&T Tech. The quarter grew sequentially, boosted by seasonality in SWC or Smart World and Communication business. My colleague Neeraj Shah spoke to Amit Chadda, MD and CEO at L&T Technologies, decoding their Q4 earnings. Listen in.
So if I look at the quarter gone by, 5.1% constant currency growth quarter on quarter sequentially, amongst the best we've had in the last few quarters, number one. Number two, 17.9% growth in constant currency, getting us to a $1.2 billion run rate, where we were $1 billion less than 12 months ago. So I do believe, all in all, I think the teams have done amazingly well this year, given the climate that it was. Multiple $10 million plus deals. In fact, if I was to reel off, we've been able to close a $100 million deal this particular year. We've been able to also get in multiple $20 million, $30 million deals, and $10 million deals. So all in all, pipeline stronger than last year, and stronger than last quarter. So we do believe that as we move forward, we will see traction continuing to improve. Again, knock on wood, and we are of course being cautiously optimistic.
Any formal guidance that you're laying out? Excuse me, I don't have a handle on that. Maybe you put it out with the release, but any formal guidance that you're laying out for FY25, part one, and part two, at a point of time when a lot of the peer set, be it IT services, which is not exactly your peer set, but I'm just humor me, IT services or otherwise, are talking about uncertainty in NA and couple of other parts. How confident are you of business prospects?
Sure. So we've guided 8 to 10% constant currency organic growth for FY25. We've also reaffirmed our aspiration of getting to $1.5 billion run rate in FY25. So we've done both of those. So there is an inorganic element that should kick in sometime this year. Having said that, if I look at the three segments, so we've restructured the company into mobility, sustainability, and high tech. And if I was to look at the three segments, I believe that transportation or mobility will continue to spend in software-defined vehicles and vehicle engineering. We do believe that sustainability, there will be a lot more happening in plant engineering, and we continue to hire and actively hire in that space. And then in the high-tech space, I'm fairly comfortable that the hyperscaler spend is coming back, as well as driven by AI and software-defined everything. There is an embedded systems. There is growth coming in from a semiconductor sector again. So those are the positives, if I may, for FY25. Looking ahead, industrial products and parts of telecom or operators seems to be a little sluggish as we look at the future. But that's from an engineering standpoint as we see it. But all in all, year to play out. It just started right now. As you said very rightly, uncertainty, so we're baking it all in as we are providing the guidance at this stage.
Interesting. I heard you say semiconductor and the positive side, because there was, I believe, some bit of spending freeze that most companies, including you, were seeing. That's changing, you're saying.
So you know, there's a spend in Semcon for AI chips. And if you remember, I had committed to you that we'll get people trained in this area.
Yes.
Happy to share, we've got more than 3,500 people trained in AI right now. We've got a differentiated strategy of hardware, embedded software, and then application software and data as 4 layers for AI, not just application data. And that, I believe, is helping us as we go to the market in terms of winning new deals and gaining market share. See, it's all about gaining market share at this stage, because some of the spends may have stagnated. So you will have to find newer pools and newer areas and stay differentiated, if I may, to be able to provide value to the customer. And that's what has been our endeavor over the last few quarters and months. And I believe as we go forward, we will continue to play that out and be able to build on our pipeline as well as closures.
Interesting. So, Amit, would it be fair to say that given a choice, because it's an uncertain global environment, if you get business, you might maybe compromise a little bit, not compromise, but maybe give a little bit on the margins as well in order to get that business in? A lot of your peer set is talking about that. I'm just trying to understand how you're thinking about it.
See, more than giving up margins to win deals, I would rather invest in advance in soft assets, in labs, in infrastructure that can help my client get to work faster. Rather than providing rate discounts and winning at lower margins, etc. So our strategy is slightly different in the ER&D world. So rather than trying to buy deals at much cheaper prices, etc., I'd rather create a differentiated strategy that allows me to be able to be a value player. So we'll continue to do that. So you will see some investments that we will make additional to what we've been doing normally. So normally we spend between 1 to 2%. Our investments will go up slightly in the near immediate term because we've restructured now mobility, sustainability, and high tech, and we are making those investments. There's a new lab that's been set up for EV value engineering in Bangalore. There is further investments being made in Dallas, investments being made in Mysore for software-defined everything, digital manufacturing solutions in Chennai. So you will continue to see some of this happening as we go forward, because we want to be able to future-proof our business for tomorrow and be able to grow faster than industry. That's the goal.
Okay, so in some sense, in the Q3 call, you mentioning that the winter is over and spring is around the corner, it seems to be kind of turning out to be true, Amit?
So 5.1% clearly had spring is here. Yeah. You would agree with me?
Yeah, I would agree with you. Okay.
Now we have to see whether it gets to summer or stays as spring. We'll see.
That's true. Visibility on the cybersecurity deal, Amit? I mean, just kind of bring that up.
Cybersecurity, one of it's a great deal, $100 million or 800 crores. You know, it's very important. Number one, I'd like to thank the government of Maharashtra for having confidence in us and their far-sightedness to be able to think that cybersecurity is extremely critical. This is building forensic audit, forensic trail, forensic investigation infrastructure for the state of Maharashtra, and this will be up and live in about 6 to 9 months from now. We are leveraging our partnerships with Palo Alto, IBM, Cisco, and others to bring it forward. It's a world-class solution that we've architected. Work has already started with the team. I'm personally reviewing it with our Chief Operating Officer on a regular basis. He's been focused on this. We're confident as we move forward. This will be a state-of-the-art project that will help us improve the citizens' life, or more, and equally importantly, build up solutions that we can take to others.
Sorry, just one final follow-up, because I know you're short on time. But when I talk to companies globally engaged in this space, whether services or otherwise, Checkpoint, this, that, what have you, everybody talks about how the quantum of spends and the nature of sticky spends in this space will really gallop at a very fast clip over the course of the next 5 years. What are your thoughts?
Very interesting that you bring it up. Cybersecurity remains one of the hottest topics, if I may, and the highest growth areas that you can look at. Look, more than that, I would step back and say, I mean, and now I don't think we can trademark the work. We're calling it SDX, software-defined everything. I do believe that software-defined everything, embedded systems, these are two areas that will continue to see spends as you move forward. People will cut in other areas and spend in these areas. So as long as you're covering a company that continues to invest in these areas, I can promise you growth will continue to happen.
Okay. Amit, sorry, I've done 9 minutes. I'll just take one more minute. This will be my final question. I heard you say that the guidance factors in organic growth of 9 to 10%, if I'm not wrong. At some point of time in the year, the inorganic comes in. So
what I'm saying is, organic guidance at this stage is 8 to 10% for the year. 8 to 10% for the year. In addition to that, there should be inorganic kicking in, because we have an aspiration to get in to $1.5 billion in FY25.
Yeah. So if it kicks in, so just to get the numbers straight, what does it take what would it take the aspirational growth catapult to in terms of a number?
So let's get to the 1.5 billion run rate first, and then we'll tell you internal targets are always higher, but I want to be careful. I would like to commit what I can deliver, and then I would like to deliver what I have committed.
All right, that was the management of LTTS. That stock has seen pain. I just want to pull up what's happening with them. 7% down, even now on that stock. But before we wrap up India Market Open, let's listen to Emphasis. It's a morning of IT company result and the reviews. The top brass is talking about Q4 earnings and more.
So I think firstly, we're very pleased with the fact that we've had a pretty decent Q4 from a sequential growth perspective, right? We delivered 2+% growth, led by two of our biggest verticals, BFS and TMT. And I think we'd called out for banking and tech to lead the recovery in the Q4 numbers. We were focused on recovery in the back half of FY24. It took a little bit longer, but I think we are very pleased with the way we've delivered that. There is early signs of at least some discretionary spend, shorter term deals, short burst, short duration projects. That's always very heartening to see. There are also some pickup in activity in pockets of banking that was quite muted last couple of years around capital markets. I wouldn't say that it's a roaring back to spend model yet, but definitely appetite is higher, and I think a little bit of that fatigue from overspending in 21 and 22 seems to have kind of gone away, and early signs of capital market opening up is definitely giving them comfort. Second, I think we're very pleased with the fact that what seemed to be a very big hype area around AI and Gen AI early part of calendar 23 is now actually converting into not just pipeline but also deals. So opening up a lot of new pockets of spend. How do you embrace tech to take cost out? How do you embrace tech to transform operations, customer experience, developer productivity, compliance monitoring, KYC? So lots and lots of real, credible, tangible deal constructs that are not just being talked about, but actually are in the pipeline and are in the wins. And I think that opens up a whole new addressable market for us. So we're very pleased with that as we go forward. The fact that these shorter term deals are showing some revival also gives us a little bit more confidence on revenue recovery, because a lot of these deals can be consumed within the year versus having a long duration deal where ramp up takes 6 to 9 months. We've seen better conversion of previously sold TCV to revenue as well this quarter, so that also helped the overall book of business for us. I think the TCV number is a little bit muted, driven partly by the fact that there is a bunching up of deals that happened early in the year. And secondly, this, the 0 to 10 million deal category has actually been the highest, TCV number for us in a few quarters in Q4. But on the flip side, that gives us confidence from a revenue growth standpoint as well. So I think overall, pretty pleased with the way the team executed in a still tough macro environment, because uncertainty and creates inaction still underplay. Lots of countervailing forces between macro and inflation and interest rates and geopolitics. But the focus has really been on the micro and just driven by in-account actions, wallet share gains, and moving very aggressively into these new tech areas. Also pleased with the margin performance, and Manish can talk a little bit more about that.
Right. I'll talk about margins in a minute, but let's actually, why don't you talk to me about margins before we go into TCVs in a little more detail?
All of what Nitin said did require investments, and we were able to deliver expansion in margins, despite that. On a reported basis, the margins were 14.9%, but if you adjust for acquisitions, that's close to 16%, which is an expansion over the last year and over a few quarters that we were reporting. Especially happy with the fact that all of this came with the ability to kind of ensure that we continue investing in areas which will give us revenues in the future, which means investing in working with the clients, proof of concepts and stuff like that. Other than the margin, I think cash is king, as they say. And, we had a very strong cash generation quarter, 116% of PAT. And when you think from a year-on-year perspective, that's 150 million growing to 237 million, more than 50% growth in the cash generation. So very happy with the cash and the EBIT performance. I think the silver lining, or rather, even bigger news, is the fact that EBITDA expanded to 18.7% from 18% last quarter.
Right, noted. So I guess no disappointments, at least internally. A couple of areas I want to talk to both of you about is TCV, and I'm sure both of you are expecting this to be my second question. While some of your peers have closed out at record values in TCV, with your company specifically, there's a decline in deal wins, not just as compared to your peers, but even if you compare it to your average historically. What is the reason for that? So I do understand that conversions, there is a delay, decision making is slow, values of deals, like you said, has also in the smaller band. But why is there a decline in the number of deals you're closing out?
I think I wouldn't say there's a decline in the number of deals. There's definitely a softness in the overall contract value reported. So I think the first thing to note is we're not including any renewals in our deal numbers as we report them. And that's been consistent for us for the last, as many years as we've reported it. So there is no lumpiness of year-end renewals or first quarter calendar year renewals for us. Second, I think we had a pretty big bunching up of deals earlier in the financial year. We had a record quarter of 700 million plus. As that pipeline got consumed, and the rest of the pipeline, obviously, we had to move that through the stages. Third, I think the duration of deals and 0 to 10 million, kind of having the highest contribution this quarter versus, I would say, the previous 4 quarters or 6 quarters, also is a sign of a little bit of recovery, as I mentioned. The metric to note, though, is the pipeline is actually still fairly healthy. It's up 5% sequentially, and it's up pretty broad-based. Even in our banking business, which was obviously a little bit stressed last 12 months, the pipeline is up almost 19% on a sequential basis, and our top 10 account pipeline is also up. So I think all the leading metrics are pretty decent. We will obviously continue to focus on large deals. We had 1 large deal in Q4, but 15 large deals for the year. That definitely gives us runway to consume those large deals and convert those to revenue. And hence, there is no, I wouldn't say, concern on any short-term impact on revenue growth potential because of the Q4 TCV number. So pipeline is great. I think the conversion to pipeline, yes, it's been a little bit slower because of seasonality. Client budgets were a little bit uncertain. Now we are starting to see that pick up as well. Activity is actually very, very healthy in most of our units and in most of our markets as well from a geo perspective. So I think that's the way to think about. There are 2 or 3 nuances on the TCV front, as I just mentioned.
as citizens, we must remember that voting is not only a privilege, but also our duty towards our nation. I, Akash Ori from the DLF Group, pledge to encourage my colleagues, their friends and family to vote for the government they believe in. This is the strength of our democracy.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarvan and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Hello, welcome to Talking Point. I'm your host Neeraj Shah. The Talking Point today focuses on healthcare predominantly. We'll talk to the management of Laurus Labs in the second segment. The first segment, we're getting somebody who tracks this very closely, amongst other things at DAM Capital, but Nitin tracks healthcare very closely as well. And we get him in on the show to try and understand how he thinks about what's happening in this pocket currently. Nitin, great having you. Thanks for taking the time out. This is Neeraj here. Good morning.
Good morning, Neeraj.
Nitin, what's your sense? I mean, we've had select companies come out thus far. The larger bunch is yet to come. Are we looking at a bit of a transition period for healthcare companies? Because some sects of healthcare and pharma have done very well. Some have not over the last 12 months.
So, Neeraj, I think we're going through a little bit of a golden phase for the sector from an earnings perspective, largely because domestic continues to be okay and exports have come back very strongly, partly because the earning erosion, pricing erosion, which was hurting the businesses in the US has stabilized. And more importantly, there are a lot of big ticket opportunities like Revlimid, which are beginning to crystallize for a bunch of companies, especially for most of the large cap companies over the last few quarters. And I think this will continue. The Revlimid tailwinds will continue at least for the next 4 to 5 quarters. So at least for the next 4 to 5 quarters, the sector is in a very healthy shape from a reported earnings perspective. I mean, especially the ones which got the US tailwind.
Got it. Sorry, just on that, before we move on to the other aspects, Nitin, typically because the markets tend to discount 3, 6 months, 9 months in runs, you still think that time is some time away. I heard you say 4 or 5 quarters of tailwind still exist.
Yes, I mean, specifically on Revlimid, because this is an unusual opportunity. I mean, we haven't seen an opportunity of this size coming simultaneously for so many players at the same time. And my sense is by Q2 F26, it will be behind us. I mean, it won't be there meaningful beyond that. So I guess another 6 quarters are left for the reported earnings to look good. at some stage during the year, market will start to get worried about the post in rev limit light for a lot of the companies where the rev limit tailwinds are there.
Okay, so viewers, that's the US exporters. A clutch of these companies, Dr. Reddy's and the likes, have this rev limit benefits coming in, and that's to be kept in mind. Nitin, from amongst the pharma companies, US FDA action was very hot in the last 12 months. We've seen a number of companies get observations as well. Maybe one or two like Lupin have largely remained unscathed. Just trying to understand what's the pecking order at DAM Capital when it comes to at least the US generic exporting companies.
So yeah, from a pure generic exporters, and I keep the specialty companies like Sun Pharma out of it. The strongest businesses on generic exports are, we like Aurobindo. Aurobindo is a top pick in the generic export businesses, the most strongest generic franchise. And then we also like companies like Lupin and Zydus, which have got finally, which have got a lot of things sort of falling in place for them in terms of very decent approvals, good quarter approvals coming through. And as you mentioned, and a reasonably clean track record on the regulatory side over the last few quarters, which gives them significant clarity on the new product launches also on a going forward basis. So the pecking order would be Aurobindo, Lupin, Zydus as the relatively preferred names among the large caps.
Got it. Okay. Nitin, before I'll come to CDMO at the end because we got the management of Laurus Labs post that. But before I come on CDMO, the other aspects of healthcare, we've seen hospital companies having, how do I say, for lack of a better word, caught between a rock and a hard place in certain times in terms of regulatory moves. But the earnings and the stock price performance hasn't been too bad. What's your sense about how to play this theme?
So you're right. On hospitals, I think structurally, from an earnings perspective, the business is in a very, very good shape. The uncertainty which has come in is because of the potential regulatory activity which can happen in the space. At this point of time, we don't have any clarity on what can happen and in which shape and form it can happen. I mean, if I keep that out, because we don't know what could be the contours of any regulatory action, if assuming it comes through, I think businesses are, earnings perspective, they are fine. I think our view is that healthcare in India is a structural story because the demand-supply gap essentially is in favor of the suppliers. The country is aging, the country is becoming richer, and only as many hospital beds are there, quality hospital beds are out there. So structurally, it's a brilliant story. Earnings will keep coming through in the sector, barring anything which happens on the regulatory side. So if we just keep that aside, and the other part which you mentioned has already happened is multiples have got re-rated meaningfully for the hospital business over the last 12 to 18 months, especially post-COVID. So there are relatively limited upsides possible on the multiple re-rating. But I guess we are looking at compounding stories from here on, unless and until something really dramatic happens on the regulatory front. I mean, that's the way we look at it. No more earning upgrades, no more PE re-rating, but consistent earning stories from here on.
Got it. Nitin, then I come to CDMO, and we've seen a couple of companies come out with numbers. They are not just pure play CDMO companies, Syngene and Laurus, but there is this whole promise that a lot of people are baking it around that CDMO opportunity because it may move from China to some of the other countries. India is well placed, etc. What are your thoughts on that longer term aspect, of course, and then couple that up with how did you view the earnings and the commentary of both Laurus and Syngene, if you cover them?
So, so I'm personally pretty positive on the CDMO space. And I guess this tailwind which is coming from the Biosecure Act implementation is going to help the sector. But in general, I guess companies have been working in CDMO. Select companies have been working in CDMO for quite some time. I think we're getting to a point where, and we're seeing news flow across companies, right? It started with Divi's was the flag bearer for the CDMO story in India, and we've seen other companies sort of coming through and having meaningful accretion to their CDMO businesses, franchises coming through, and we'll probably see. My sense is we'll probably see more and more of it as we go along, right? More companies are getting commercial contracts from innovators, both on small molecule as well as in biologics. And I guess the Chinese and any sort of disruption to China, Chinese sort of partnerships because of the Biosecure Act will be for the tailwind. So the point here is in pharma, incrementally companies need to, incremental value barring domestics and generic exports will get created from participating in the innovation value chain. Either companies do innovation on their own, like somebody like a Sun Pharma, or some people who are doing innovation their own NC proprietary research, or the other way out is you partner with innovators who are doing the proprietary R&D. And I guess we see a lot of opportunities incrementally building up in this space as we go along.
Okay. Do you have coverage on the ones that have come out with the results thus far? There is Syngene, not necessarily just CDMO, but came out with numbers and their guidance. Laurus yesterday came out with numbers and guidance. Do you have individual coverage on any of these?
So we cover Laurus and Syngene. We track it as part of Biocon. I think these are very different business models. Syngene still is a CRO heavy business, while Laurus is predominantly a CMO. There are some challenges which have been there in the last few quarters, around lack of funding or reduced funding for biotech, which has impacted the CRO part of the business, across the landscape. But CMO continues to be in good shape, and I guess that's reflected in the way Syngene numbers got reported. Even Laurus, they were relatively late starter in the business, and they have a long way to go from here on. And they are, from whatever the guidance management has put out, whatever commentary is there, it seems a pretty promising road ahead for Laurus on the CDMO front.
Okay, and valuations. Just last question, Nitin here. Valuations, do they worry you, or do you reckon earnings growth could take care of it? What's the call out there on both Syngene and Laurus in particular?
My sense is there's just a lot of expectation around earning pickup coming through. The opportunity space is very large. Earnings can really grow meaningfully to the extent management can deliver on the promise which is there in these businesses. So as you said, earnings multiples are high, but the expectation is earnings should take care of them as we go along with the next 2 to 3 years.
Got it. Nitin, this was lovely. I look forward to a longer conversation at some point of time in the next couple of months, maybe post the earnings season is over. But thank you for taking the time out and speaking to us today on this particular aspect.
Thank you so much, Neeraj. Pleasure talking to you.
The pleasure is ours. Viewers, we need to take into a quick break. Nitin Agarwal spoke about how earnings growth could take care of the steep valuations in Laurus. We speak to Dr. Satyanarayan Chava, as is the norm that we do every quarter. On the other side of this break, stay tuned.
As an Indian citizen, it is not only my birthright, but it is my duty to vote. I urge every Indian citizen to exercise their voting right and elect a government which meets our hope and aspiration. I can assure you that I and my associate in Wokat will exercise their voting franchise.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as
right, on Talking Point and Earnings Edge with Dr. Satyanarayan Chava, founder and CEO of Laurus Labs, with us on the show. Dr. Chava, thanks so much for joining in. Two ways to dissect these numbers. I want to talk about Q4 first. And optically, relative to what Bloomberg estimates were, the numbers were below. You had spoken about, though, that the possibility of making a dash towards that 20% mark in Q4. It seems that you've started off on that note because you've come in at margins higher than what you've done in the previous 3 quarters. Put the quarter into perspective for us, please.
Neeraj, good morning. As we envisaged, we were able to do very well with respect to revenues. And we also improved our EBITDA margins to closer to 18%. That's the trajectory we anticipate because we are not doing any new initiatives. We are not investing any new capacities right now, except continuing to invest in the crop science, building additional capacity in animal health. We believe any increase in sales from here onwards will certainly help us to improve our EBITDA margins.
Got it. Dr. Chava, we saw the press release post the earnings. We heard the con call as well. There is some stuff that you guided to, and I'll come to that in a moment. But first, the key point. I mean, everybody's talking about the CDMO opportunity, especially after the Biosecure Act. We had a guest just before you who looks at that space closely, talking about that too. 4% growth in Q4 on a YOY basis in the CDMO business. There is growth. Did it live up to the expectations, or is a larger portion of that CDMO uptick that is being envisaged will come as the quarters roll by?
Neeraj, as you're fully aware, CDMO business has much longer gestation period than the generics. And you have to travel along with the clinical progress of the molecule. Only the opportunity will be big if innovator chooses to add another source for a already launched molecule. That we haven't seen. What we have seen, many projects at the later phases, that means phase 2, phase 3, we are doing validations right now. A lot of our resources are consumed in delivering those kind of projects to our partners. Why we are very bullish on CDMO space is because how much of resources we are putting on those projects is an indicator internally for us to gauge how the future look like. See, today, if we don't have any interesting project or projects, we are also have to go through a lot of introspection. But right now, we are focusing on recruiting more talent, advancing programs, and delivering programs as we committed. That means all the team members are busy in delivering what we have promised to our customers. And we have to wait for them to go to commercial. Some of them are nearing NDA filing, some already filed. And in the animal health space, we already got an order for an NCE, which we will deliver in FY25. And another 2 molecules, our partner is filing NDA during this year, and 1 will go commercial next year. So things are getting closer to our anticipation. That is the reason we are very hopeful on our investments made, both our strategy, both our R&D resources, capacity allocation, will certainly yield revenues and will certainly yield the numbers what we are anticipating.
Dr. Chava, this animal health order, I'll just probe this a little bit. The animal health order, I believe on the call you said it is likely in November. Is this safely predictable? Because, I mean, or are the timelines still fluid? That instead of November, it could well be October, it could well be March as well for the next year?
We are already started manufacturing, so there is no ambiguity here. We have order on hand and we started manufacturing. So there is no ambiguity.
Okay, so the timelines are November, that is one. And you spoke about 2 or 3 or 4 things. I'm just trying to understand. Are these, is this a bit of string of pearls that you're stitching? Or are each of these large enough to make a meaningful differential for the CDMO business for Laurus as they materialize and show in the numbers?
In the animal health space, we know what products we are making, what quantities and what price we are selling. So, as we anticipated, we will achieve peak revenues in animal health in FY27. FY25 will be good ramp up in the products validations and then supplies. 27 will see more pickup in validations. And 27 will be the year where we estimate we will reach the peak potential of our investment in the animal health. In the crop sciences space, currently we have one contract, we know how much we are going to sell. So, these two have no ambiguity and we know what we are doing. And another, our steroidal intermediate supplies to Aspen is also a contract in place, we know how much. So we are solidifying our business coming into contractual commercial supplies. The only one which is having big potential and lot of resources we put in is the human health CDMO. That's where we see company will have a lot of opportunities, and we also know how many projects we are working in the human health space. That's the where we feel meaningful numbers will come in the near future years.
But I would presume, Dr. Chava, that on this, giving any kind of timelines is difficult, isn't it? Or is it kind of predictable, if you will? Human health.
The human health, the quantum of opportunity is very big.
Sure.
And at the same time, it is not predictable. There could be stumbling blocks where the program could be delayed, FDA could ask more questions. So we have no control on that. Our animal health, crop sciences, steroidal intermediates, we have absolute clarity because there are no surprises here, positive or negative. Whereas in the case of human health, we have many projects. It's not that our future plans are scattered by one program. We have multiple programs. If all programs succeed, move to the next phase, we will see significant uptake. But we are having a basket of products. So I don't see a challenge for us in that space. But the quantum of business opportunity in the human health space is enormous.
Got it. Now, I believe, again, on the call you said that the ability to go back to the 20% margin. I'm bringing in a margin question here because we're talking about CDMO. And I believe you said that the ability to go back to 20% from the current, let's say, quarter 4, 16.5%, 17 odd percent to maybe 20% would hinge on how well CDMO does. You have some sense about November for the animal health order, but some of the others might be moving as well. Do you reckon as an average 20% for FY25 is a possibility, or is it difficult to say?
We certainly see it's a possibility if you see the overall year. So, you know, unlike the generic business, the CDMO business doesn't go by quarter. You deliver the order in particular month. So for the overall year, we definitely feel we will be meeting or exceeding that number, Neeraj. Yeah.
But difficult to say. I mean, you moved from 15% for 3 quarters in a row to 17% in quarter 4. Yeah, 16.5, 17 if I'm not wrong. But do you reckon that this uptick could continue into quarter 1 as well? Or again, even that is difficult to say. Would you be at 17, 18% in quarter 1? Or is it possible that you may move back to 15, but overall you will do 20?
I think overall we are very confident to do 20 years. I'll put it that way. Yeah. We know when we are going to deliver each project. So the comfort to cross that hurdle of 20% EBITDA will be very high for the overall year.
For the overall year. Okay. So it could be lumpy, but overall you could probably see an average of 20 odd percent coming in. Okay. Fair call. Just one quick broad brush question, Dr. Chava. We have just 5 minutes, but just trying to understand. Are there significant benefits that could come in from the Biosecure Act in the US? Because a lot of people are saying that India could be a big potential beneficiary. Do you see that? And how far dated would it be, or could it be immediate?
Indian companies will certainly benefit from this Biosecure Act, but I don't expect it is going to be in the next quarter, maybe in the next financial year, because the technology transfers, validations, approval within their dossiers will take its own time. But it is a good step. So Indian companies will certainly benefit from this Biosecure Act.
Got it. API portfolio, Dr. Chava, moving tracks. You've said that price headwinds are expected. I'm trying to understand how will it impact numbers? Will it be such a small headwind that you go ahead and say that volumes will take care of the price headwinds?
See, as we have seen in our API, we started stabilizing our revenue stream from the APIs. The one surprise for us was the significant growth we have seen in our oncology APIs. We continue to see good opportunities in the oncology space. That will grow. We thought 300 crores is the peak revenues, but now we believe we can even cross 500 crores oncology sales. So that is growing very well with good margins. And in the CMO space in generic APIs is also picking up very well. So the ARBs will continue to have some headwinds, as you mentioned, but those headwinds will be able to manage with softening of raw material prices or the efficiency improvements internally.
Okay, so price headwinds, yes, but not so stark that you can not take care of it via efficiencies and volumes. Would that be a fair way to assess it?
Absolutely, Neeraj. Yeah.
Got it, sir. Okay, CapEx plans for FY25, 700 crores, pretty similar to what you've done in FY24. Where will the larger CapEx be committed to, Dr. Chava?
As we have mentioned in our investor presentation, also in the call, we also just started construction of a fermentation facility at Vizag. Because we saw some opportunities in the GMP fermentation space, we are doing GMP fermentation in Vizag and then food proteins related, food and cosmetic precision fermentation at Mysore. So both will see capex in this FY25. And also we are increasing little bit of capex in our formulations to meet some tertiary packaging requirements from our partner. We are adding little bit of API capacity, but significantly we are adding more into contract manufacturing space.
Got it. Dr. Chava, one final question really, and that is whether you see not FY25, but maybe FY26 or thereabouts as a year of change of sorts. And where I'm coming from is purely numbers, sir. From FY21 to FY24 end, the revenues have stayed circa 4,800 to 5,000, except for FY23 where there was a bit of a step up and then it's come back again. Operating profit FY24 versus FY21 has halved, and I know that those were exceptional years, but they've come off quite materially. When do things not necessarily go back to those levels, but when do things improve? Is that can be expected in FY26, FY25, FY27, or is it difficult to say?
I think we came out of the woods because any new revenue growth for us is going to show significant benefit in our EBITDA margins. And we believe the FY24 was a year of consolidation. FY25 will see growth, and FY26, 27 will see significant growth. I'll put that way, Neeraj.
Yeah, I know I understood on the call you shying away from giving an exact guidance, and I will not press you to do that, but just wanted a color about what this could shape up like. Great, Dr. Chava, out of time, but thank you so much for taking the time out and being with us, and all the best for the quarters ahead.
Thank you, Neeraj. Thank you for your insightful questions.
Not at all. Thank you for joining in, and viewers, thanks for tuning in to this pharma-focused or healthcare-focused Talking Point show today.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Market start series, the Macy's on a choppy note. Sensex trades below 74,100, while the Nifty trades around 22,500. Except real estate and financials, all sectors trade higher, led by IT, media, and consumer durables. And Tech Mahindra gains over 10%, post reporting a significant rise in fourth quarter. While the numbers were not that exciting, it was the guidance that the markets are taking heart from. And more earnings on the block. HCL Tech, Maruti and SBI Life set to report their numbers later on in the day. And Lok Sabha election enters phase 2. All eyes on Ryan as Rahul Gandhi sets to battle CPI's Anni Raja and BJP's K. Surendran. Welcome. You're watching the FNO show. It's going to be an exciting Friday. The markets are eyeing earnings, but it's also the start of the May series. Agam and me will take you through all the action on the street across equities, currencies and commodities. Agam, it is sell in May and go away.
I've heard that before.
Yeah, that's usually what they say when it comes to the markets. Soft rollovers, we're going into a fairly risky month ahead of elections. Relatively low rollovers on the index, similar for Bank Nifty. Even though Bank Nifty has actually stood out with 4 to 5 days of gains straight away.
Yeah, I take your point, Samina, and agree to everything that you've said, because it is election season and of course it's earnings season as well, and these things are going to certainly be at the top of everyone's minds at the moment, and that's likely why we are potentially expecting a little bit more choppiness. Moreover, the VIX right now is at around 10-11, which isn't very high, which also means that as we move in through the course of the next few weeks and perhaps a month, we're likely to see a little bit of an increase in the VIX as well, which also means an expansion in option premiums, more choppiness in the markets, and what have you. So that's something to keep in mind. But let's talk about markets today. And sure, the Nifty is flat right now. The Bank Nifty as well is also marginally in the red. And we don't have too much to speak for. It is the start of a new expiry, a weekly one as well as a monthly one. And let's pull up the May futures then and see how things are panning out. Now, naturally, we will see a little bit more increase in open interest because this is early days. Actually, the Nifty isn't seeing that much. But what I can also tell you is that at the start of the new series, off late, we haven't always seen that total open interest number stand around well over 200,000. And that has been the case as far as May is concerned. So you never know how things could in fact pan out. We can say for sure that certain positions have already been placed going forward. Now, talking about the Bank Nifty futures as well, yesterday we did see a bit of unwinding, and today once again we are seeing that play out. A decline of around 1.5% only in open interest, but a decline all the same. In terms of the options market, we are keeping an eye on levels around 22,500 because that's where we are seeing a good amount of addition in put open interest. And from the call point of view, of course, a lot of activity has now shifted towards 22,900, 23,000 and thereabouts. Bank Nifty, again, we did see the 49,000 mark, rather the Bank Nifty move towards the 49,000 mark, but of course it serves as a very stiff resistance of sorts at the moment. And in fact, we're actually a good 600, 700 points away from that mark as well. On the lower end, I reckon that we would see some amount of a support in the near term at around 48,000. But you never know because of the choppiness. 48,000 is less than 1% from where it is in terms of a decline there. These are some of the factors to keep an eye on. Like I said, early days in the week as well as the monthly expiry. So a lot else to focus on. Naturally, we will be watching out for the earnings.
Late in the week, but early in the series for sure. It is a Friday. But what's very interesting that's happened today is stocks like Tech Mahindra and Zensar. Both those numbers were not impressive to say the least, but I think it's the guidance that the markets are taking heart from, and those counters are doing really well in keeping the markets together. Tech Mahindra is up 9%, Zensar the day's high point, trading with a gain of 10%. Pull up Cyient as well while we're at it. Now these numbers as well were slightly disappointing. The markets are not pleased, giving it a thumbs down, 1.5% cut on this one. Emphasis also reported. So IT sector is one that's in focus this morning. Emphasis up 5% after it posted numbers that was okay. TCV has seen a decline, but a very promising guidance for FY25 from them too. LTTS, weak numbers, 9% lower on that counter. Apart from that, you've got a few more names that are continuing to do well. So Sterling and Wilson, they've had a good run for the week. They continue to have a positive one this morning. UTI Asset Management, again, on the face of it, those numbers look good, but when you do a deep dive, you'll realize that it's actually not been a good quarter for UTI, and the outlook is also fairly negative, but the stock looks good. It's up with a pretty big gain of 3.5%. On the sell side, you've got Sun Pharma advanced, that's down another 5%. It's down 30% for the month. Apart from that, you've got ICICI Securities, PB Fintech, Bajaj Finserv, and Vodafone Idea that are seeing some profit taking. We have with us Aditya Agarwala joining in with his top 3 F&O strategies. Aditya, good morning. Thanks for joining us. Aditya, we're at the start of a new series, a series which has seen softer rollovers versus what we've seen at an average this year so far. It's also the last series before the election outcome. What would you do and how would you play the Nifty?
Morning, Samina. Thanks for the show. You said at the start of the show, sell in May and go away. But unfortunately, that doesn't hold true for the Indian markets. If you take a look at the historical data, usually Indian markets perform well in the month of May. Though I do not rule out the fact that we see a good volatility in the month of May. Having said that, yesterday was a big up move and a surprise up move, I would say, both on the Nifty and the Bank Nifty. Talking specifically of the Nifty first, 22,500 now on the downside will be a key support area. I'll closely watch out for that in trade today and maybe next week as well. If that is held, my sense is we can again make a tad higher high than what we had made last time. So 22,900 about 23,000 is what I feel markets can again test. And from there, again, like it has been the order of the day for previous highs, markets could correct again. I'm not too bullish from current levels. Yes, markets will remain range bound from 22,500. If bulls do take markets higher, then it can test levels of 22,800, 22,900 again. On the downside, if 22,500 is broken, then we could again claw back to levels of 22,000 on the downside. It is the Bank Nifty, Samina, which I feel which needs to outperform. And unfortunately, I'm not seeing that kind of a momentum build up in the Bank Nifty, barring an Axis Bank, which outperformed in trade yesterday, and HDFC, which is chipping in trade today. There's not really much of an action in the Bank Nifty. So I would want Bank Nifty to sustain above this level of 49,000. If that happens, then I believe for this expiry, Bank Nifty could continue to outperform. But I believe, and since VIX is at the lower end of the range, there can be a build up in the volatility as well. And yesterday we had seen with a rise in the price, there was a bump up in the VIX, and today also we are seeing a 4% jump in the VIX. So it has a tendency to come back to its mean. And given the fact that, as you mentioned, this is the last month before the election results are out, volatility can pick up from current levels. So overall, the picture looks like markets at the moment are looking bullish with a support at 22,500, and stay cautious because volatility too can pick up this month.
Okay, that's the view coming in on all your key benchmarks. But let's get Kunal into the conversation as well. Welcome to the show. How are you trading the Nifty and the Bank Nifty at the moment?
Good afternoon. I think the markets are going to be very volatile in the start of the month as well. However, the undertone remains bullish. Looking at the results which have been posted by Axis Bank, we have the ICICI Bank results lined up tomorrow, and the expectation is that the results would come out good. So Bank Nifty is still looking strong compared to Nifty at the current levels. So if you get dips into the Bank Nifty, which you have got, utilize that to buy. I'm expecting 49,000 to be touched on the Bank Nifty index. Nifty, yes, it's looking positive. 22,500, 450 now becomes a very strong support zone for the Nifty index. So if you get a dip towards this zone, again, utilize it for 22,700, 800 mark on the upside. So for me, it's a buy on dip market currently, both Nifty and the Bank Nifty index. We might touch the all-time high levels in the coming days as well, and probably we might consolidate there at the higher levels.
Right, that's the call coming in on Nifty 50. Kunal, you want to tell us about your thoughts on Bank Nifty? I don't know whether you shared with us that.
Yes, so Bank Nifty, as I said, it looks much more positive and upward bias for Bank Nifty compared to Nifty at the current levels. So even for the Bank Nifty, if you get dips towards 48,400 mark, utilize that dip to buy. Again, 48,000 is a very strong support on the downside, where the highest open interest is also built up on the put side. So I think utilize dip to buy the Bank Nifty index. I'm expecting 48,700 to be achieved, and post that 49,000 on the upside.
All right. So, so we covered the Nifty and the Bank Nifty largely. And along with that, let's also take a look at all the stocks which are now starting to see traction being built up as far as the May futures go. So let's pull up the list of all the stocks which are in fact buzzing in trade today. And we should have that up for you on your screen. So we do have longs in something like a Hindustan Copper, along with ABFRL, that's Aditya Birla Fashion Retail. And both these counters are looking at longs. But we have L&T Technology is under severe pressure right now. That's around 8%. And of course, its open interest has doubled. Bajaj Finance is down 7% at the moment. Bajaj Finserv is down 3%. So a lot of pressure. And I reckon a lot of that has to do with the earnings coming through. I reckon the earnings have disappointed. And in terms of Bajaj Finance too, it does seem like we're looking at some fresh shorts building up. Let's talk about stocks which are seeing unwinding at the moment. I reckon that there won't be too much because this is still early days in this particular series. But we're seeing, I reckon, a bout of short covering, if I can consider that, in Coromandel, Havells, Divi's Laboratories. LTI Mindtree is another, important counter to watch because we are actually finally seeing some strength return to this counter, and HDFC AMC. And that said, let's take a look at what our experts have on their radar at the moment. Well, Aditya, coming back to you, stocks that you like at the moment.
I've got a couple of buy recommendations, Agam, because clearly the undertone of the market is bullish. So Ashok Leyland is looking very interesting on the chart setup after months of consolidation. Looks like it's finally broken out from a downward sloping trend line. Still early days, and I believe it's a good risk to reward trade which can be taken. So a buy at current levels, I would recommend for a target of 190 with a stop loss at 170 on the downside. And if 190 is taken out, Agam, I believe for this expiry, this could be an outperformer, can test levels of 200, 210 as well. So I'm going with an initial target of 190. The next target will be 210 on the upside. The second stock is Muthoot Finance. Again, this has been one stock which has been clearly making higher highs, higher lows on the chart setup. After a bit of a consolidation, it's resumed its uptrend in trade today. So at current levels, one can definitely look to initiate fresh long positions in Muthoot Finance for a target of 1170 on the upside with a stop loss at 1670 on the downside.
Right, those are, of course, some of those calls coming in from Aditya. Kunal, what about you? What are your top trades that you're recommending for maybe the May series or maybe a shorter time horizon as well?
There are two buy recommendations from mine. The first one is L&T Finance. The stock, after a brief consolidation, is showing signs of breakout on the technical charts. Currently trading somewhere around 167, so one can initiate a buy at the current levels, keeping a stop loss of 163 on the downside and looking for targets of 172 to 175 on the upside. The larger term correction for the stock is now over. Again, we have seen a change in trend for the stock. It has been taking support at its critical moving average of 20 DMA as well. So I think the move is ready for a breakout, and we might see higher levels coming for L&T Finance. The second stock, which I'm bullish at the current levels, is Astral. We have already seen the stock has been in a sideways trend. In the last 2 to 3 trading sessions, the stock has taken a support at its 50 EMA as well as its 20 DMA as well. And there has been bounces from those levels. So clear-cut buying is visible. I'm expecting the stock to go towards the levels of 2,100. That would be my target. And stop loss on the downside will be at 960.
Okay, so a bunch of ideas coming in from both our experts, and interesting ones too at the moment. So we have covered a gamut of stocks out there which in fact are buzzing, and of course some of our experts have also suggested the names that they are looking forward to. But I want to take up a handful of names which are in focus today. One of them, of course, is Tech Mahindra. This one has taken everyone by a little bit of a surprise. And it is up around 9%. At one point in time, it was up 12%. And sure, the management commentary has been very positive with respect to the new CEO when he's laid out the plans over the next 3 years. That is the FY27 plan. But we must remember that Tech Mahindra was also one of the weakest counters in the entire IT space. Remember that there's a high possibility that before yesterday's earnings, there were potentially substantial amount of shorts into the system as well, because before today's up move, you would see that Tech Mahindra was on a constant down move. I reckon that we possibly would have seen a lot of shorts building into it, and at the moment we're seeing not just fresh longs coming through, but a lot of those hands who had gone short are now, well, being forced out of their positions, which is why we're seeing such a sharp up move in Tech Mahindra. If you consider what the broking notes are saying, well, sure, the quarter wasn't amazing, but I reckon that it's the new CEO's outlook which has actually taken some investors by surprise, pleasantly surprised, and which is why we're seeing that up move there. And that said, let's take a view of this one on a technical basis and see whether or not there is some traction, whether or not there could be some follow-on traction on Tech Mahindra as well. Kunal, how would you trade Tech Mahindra?
So if you look at Tech Mahindra on a long-term chart, you are seeing 1320 has been a strong resistance for the stock. In fact, today on an intraday perspective, we reached 1320, but from again those levels, we have seen selling pressure. So I think it's very important for the stock to sustain above 1320. So if the follow-up move has to continue, there needs to be a closing above 1320. That is where you will see the shorts getting covered completely, and you will see a further up move towards 1380, 1400 levels on the upside. At the current levels, I would not be a buyer in this counter. Probably a dip towards 1280, 1275 would give me the comfort to buy the stock with the stop loss of 1250 on the downside, and again looking for targets of 1320 on the upside.
Right, that's the call coming on Tech Mahindra. The stock, of course, seeing quite a breakout. A 10% up move is what we have on it. Aditya, I'm going to talk about a few stocks that we've talked about very often, but just as an update, anything on chemicals and defense right now? I mean, stocks like Deepak, Chambal, GSPL have all done quite well in the last few days or the last couple of weeks, really. Do you think these could be, this could potentially be a theme for May? And defense has been the story all through April. Going into May, any of those defense counters that you're still constructive on?
Oh, definitely, Samina, both. In fact, I would like to add chemical, fertilizer and defense. All three sectors, I believe, could be ones to watch out for the May expiry. Talking of defense first, yes, definitely, I believe there are pockets in the defense which still offer a good risk to reward ratio and can be looked at. Starting with BDL, that definitely looks very strong to me on the chart setup, though it's not in the FNO space, it's in the cash market. So any decline closer to about 2000 odd levels is a buying opportunity in BDL for a target of 2200. I was looking at a Mazgaon dock that is looking very interesting to me. I mean, on the chart setup, it's going through a sideways consolidation for a few months now. I believe if somebody looks at the stock at current levels, it can test levels of 3000 in the month of May. It has that kind of a potential on the upside. And with the stop loss at 2400, I think this is an excellent stock to buy. Coming to fertilizer space, we have seen a sharp up move in most of the chemical fertilizer stocks, be it a Chambal fertilizer, an RCF, Deepak fertilizer, or Coromandel fertilizers. So all 4-5 names that I've spoken of have shown a decent upside. So the top pick within these 4 stocks will still remain Chambal Fertilizers. That remains very strong on the chart setup. After a breakout, stock has seen a follow-through buying in trade today as well. So this week itself, stock is up 14%. I believe on the upside, stock has potential to test levels of 480 on the upside. So if you get a decline closer to about 410, you can definitely look to buy the stock. Even at current levels, you can look to buy and add fresh on a decline to 410. Apart from that, Coromandel is something which also stands out for me. So even at current levels, you can look to add on to Coromandel for a target of at least 1260 on the upside. Now, the final sector that I spoke of is the chemical space. I believe there's a lot of short covering which can come through in this space. A couple of names that stand out for me. One is SRF, which definitely looks very interesting to me on the chart setup. On the upside, stock can easily test levels of 2800 with a good support on the downside at 2600. So SRF will be the top bet within the chemical space, followed by an alkylamine. That I believe is also something which is looking very interesting to me on the chart setup. So at current levels, offer an excellent risk to reward. Samina can test levels of 2350 on the upside with a stop on the downside at 2000.
Okay, I want to very quickly also address a name like REC. What's really happened is that there's a very, very gradual dip in trend playing out for REC, this is it did hit a life high around back in mid-February, and since then it has corrected from levels of around 520, 20 or 25, and it's currently at around 455 rupees. Kunal, is there any opportunity at the moment? I know the trend is on the decline. What is your recommendation when it comes to REC?
Yeah, I think if you look at RSC, it has been consolidating in a downward trend, but I'm expecting this pullback to still continue towards the levels of 480, 475 on the upside. So I think it's the breakout what we got 2 days back. I think a follow-up move is already in place. I'm expecting some pullback towards 475, 480 zone. So one can in fact initiate long positions, keeping a stop loss of 440 on the downside.
Right. Kunal, Aditya, thank you for joining us. That's the word coming in on the F&O trades. The pullback in REC expected to continue to levels of 480. Aditya, constructive on stocks like BDL and Mascot Docs. We'll take a break. We'll come back, but the focus on commodities. GDP data from the US was disappointing. What does that mean for gold and crude? We'll tell you all that and more on the other side.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is
Welcome back. You're watching F&O Spotlight, but of course, it's all about earnings this morning. Companies like Tech Mahindra, Mphasis, Cyient, Zensar have reported numbers. The 2 or 3 lone gainers, or rather the 2 to 3 gainers in the sector are Tech Mahindra, Mphasis and Zensar, which have actually set out quite a strong guidance. I caught up with the management of Mphasis earlier in the day to understand from them what happened this quarter and what lies ahead for them. So before you take that break and we wrap the show up, please listen into that.
So I think firstly we're very pleased with the fact that we've had a pretty decent Q4 from a sequential growth perspective, right? We delivered 2+% growth, led by 2 of our biggest verticals, BFS and TMT. And I think we'd called out for banking and tech to lead the recovery in the Q4 numbers. We were focused on recovery in the back half of FY24. It took a little bit longer, but I think we are very pleased with the way we've delivered that. There is early signs of at least some discretionary spend, shorter term deals, short burst, short duration projects. That's always very heartening to see. There are also some pickup in activity in pockets of banking that was quite muted last couple of years around capital markets. I wouldn't say that it's a roaring back to spend model yet, but definitely appetite is higher, and I think the little bit of that fatigue from overspending in 21 and 22 seems to have kind of gone away, and early signs of capital market opening up is definitely giving them comfort. Second, I think we're very pleased with the fact that what seemed to be a very big hype area around AI and Gen AI early part of calendar 23 is now actually converting into not just pipeline but also deals. So opening up a lot of new pockets of spend. How do you embrace tech to take cost out? How do you embrace tech to transform operations, customer experience, developer productivity, compliance monitoring? KYC. So lots and lots of real, credible, tangible deal constructs that are not just being talked about, but actually are in the pipeline and are in the wins. And I think that opens up a whole new addressable market for us. So we're very pleased with that as we go forward. The fact that these shorter-term deals are showing some revival also gives us a little bit more confidence on revenue recovery, because a lot of these deals can be consumed, within the year, versus having a long duration deal where ramp-up takes 6 to 9 months. We've seen better conversion of previously sold TCV to revenue as well this quarter, so that also helped the overall book of business for us. I think the TCV number is a little bit muted, driven partly by the fact that there is a bunching up of deals that happened early in the year. And secondly, this, the 0 to 10 million deal category has actually been the highest, TCV number for us in a few quarters in Q4. But on the flip side, that gives us confidence from a revenue growth standpoint as well. So I think overall pretty pleased with the way the team executed in a still tough macro environment, because uncertainty and creates inaction still underplay. Lots of countervailing forces between macro and inflation and interest rates and geopolitics. But the focus has really been on the micro and just driven by in-account actions, wallet share gains, and moving very aggressively into these new tech areas. Also pleased with the margin performance, and Manish can talk a little bit more about that.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times.
Welcome, you're watching the Small and Mid Cap Show. I am Mahima Vachrajani and with me is Harsh Saita. Well, we're going to speak to two interesting managements today, KPI Green and Jai Balaji. Both of them came out with their Q4 results. But before that, let's take a quick check on how the markets are panning out to be. The markets are a bit under the pressure in terms of Nifty 50. The Nifty is trading currently 0.09% lower as we speak, in the range of around 112 points. Roughly 80-85 points away from its day's high. In terms of the Nifty losers, we have something like Bajaj Finserv, Bajaj Finance, IndusInd, Nestle, that's pulling down the Nifty. In terms of contributors, if we can pull up, yes, there you go. Something that's weighing down the Nifty is Bajaj Finserv, ICICI Bank, SBI, Bajaj Finserv. So all stocks from the BFSI sector. We also have something that's pulling up the Nifty is Tech Mahindra, HDFC Bank, HCL Tech and Bajaj Auto. In terms of Sensex, the Sensex is also a bit under the pressure. It's currently trading in a range of around 400 odd points, roughly 330 points away from its day's highs. Currently it's down around 0.13%. In terms of the broader markets, if we can pull up the mid-cap 150, the mid-cap 150 is up around 0.6%. So the broader markets are doing a little better than the benchmark indices. Small-cap 250 is up around 0.6%. In terms of the breadth of the market is still skewed towards the buying side, around 100,000 and 1,200 stocks advancing and 728 in decline. But in terms of the sectors, something that's really doing well is Nifty, Media and IT, but the BFSI is under pressure, Harsh.
Well, yes, absolutely, Mahima. So you've pretty much covered all bases with regard to just the breadth as well as with regard to where the benchmark lies. A slight divergence there. The benchmark itself under pressure, but the breadth of the market fairly decent, not bad at all, and it's the broader markets which are leading the pack, and this is the Smith show, so that's one positive on the Smith show. But let me quickly also take it to a couple of names, especially in the large cap space. You have something like a Vedanta up and away in trade, 3.5% higher, a Zomato up 2%, positive note on both of those counters, as well as good results from Vedanta leading the charge there. Zomato, of course, a note coming in. Goldman Sachs positive 240 is the target price on that one. Bajaj Finance, no surprises, stock down 7% versus the FY24 numbers. The FY25 guidance far lower on pretty much all counts, whether you talk about profitability, whether you talk about growth. On both those key counts, the numbers are softer. That's the expectation. Whether they will underachieve, guide and over deliver is still to be watched out for. So we'll have to wait and watch for that one. But let's also take a look at a few more counters and focus on the back of numbers. You have something like an L&T Tech, which is down 8% despite the Nifty IT doing very, very well in trade. KPI Green, who we will speak with, locked in lower circuit. Olectra Green is down 3.75 odd percent, especially on a day and at a time when its valuations are already quite elevated, numbers not impressing the street, at least at the moment. On the positive side, on tech, Zensar Tech up 10%. UTI AMC doing fairly well in trade, up 4%. And a Jai Balaji also up roughly 4% or thereabouts. So those are some stocks, especially in the broader markets, which are buzzing. And we will speak with the management of Jai Balaji as well. In fact, let's bring on board Farooq G. Patel, who is the chairman and managing director at KP Group. KP Green has declared numbers. We did speak about that. Stock locked in lower circuit. But let me welcome him on board to try and give us some perspective on all that's happening with regard to Q4 numbers and what to expect going forward. Welcome to NDTV Profit, Mr. Patel.
Thank you very much.
So, sir, talk to us about the Q4 numbers itself. In terms of trajectory versus Q3, the numbers have come in slightly softer. Is this seasonality? Is this something we can expect going forward as well? Please explain that to us.
No, see the KPI green, when I talk about the KPI green, so KPI green is moving towards to the smaller client to the bigger client like Aditya Birla and the Ayana and our client is a bigger client, which we have got the orders in the Q4. And when the bigger client are there, you say that they have the, not like a smaller client where you put the bill or you give the bill in a milestone basis. Here you have to give the bill in a big bill amount or the bill, you have to give them there what they want. So in that case, we have done a lot of work, but bill are pending over there. So in this case, we have to, if we want to move towards the big client, and for that purpose, you can see the orders which we have got in Q4 about 682 megawatt. but their all billing cycle are different than the smaller client. So we are moving towards the gigawatt size. We have already energized altogether in the group companies about 1.2 gigawatt, and now we are going forward on a gigawatt side. So we have to face this quarter like this only.
Okay, point taken, Mr. Patel. Mahima this side. I just want to understand from your order book perspective, what is the total order book at present, and what are the execution timelines that we are looking at?
So we have the 1.23 gigawatt orders in hand in the KPI green. Previously, whole 9 months we had a 552 megawatt, and in this quarter we have the 682 plus. So altogether 1.2 or 1.23 gigawatt orders in hand for the next year, you can say, and we have already energized 445 megawatt till date, and we expect to do this 1.68 gigawatt in the next future.
Understood, sir. So therefore, just in terms of revenue and revenue recognition, want to understand what should the ballpark numbers for FY25 be over FY24 in terms of growth?
You see the trend of YOY. So it is going 48 to 49% always be there. So you can expect the same trend over till 2030, my dear.
Understood. And sir, just with regard to, if I can just add, margins should hold above the 30% mark. Is that what one can reasonably expect?
You can the same margin will be continue, and that's why we are choosing the client in this scenario, because the renewable energy is today's requirement of whole world, and we are going towards the goal of the our Prime Minister 2030 500 gigawatt, and we are contributing our best in that from the all our company.
Understood. Mr. Patel, last time when we spoke to you, it mentioned that you want to increase your total capacity to 10 gigawatt. I just want to understand that by when do you think this 10 gigawatt will be achieved? What are the timelines looking like?
2030 10 gigawatt is there, will be there from the group of companies of KP Green Energy, KP Engineering, KPI Green also, and we have the 10 gigawatt by 2030. We will achieve the 20 by 2030 10 gigawatt. There will be no not at all the chance to not to do, and we have performed in the past, and we will perform in the next also and contribute to the nation.
Sure, understood, sir. Sir, just with regard to, again, I come back to FY25 expectations, roughly 1500 odd crore in terms of the top line. How much of this would comprise EPC and how much of it would comprise your own power generation, which you do internally? How much of that revenue? What's the mix like?
This year you can see in the revenue 17% from the IPP and rest of from the CPP. Okay. The same trend you can expect in the 2025 also, and you will get more. We will see the more IPP revenue from the our side, because we have a very good order in hand, about 322 megawatt new order in IPP from the GUVNL, means the government companies. So we have already 148 plus 322. We have done this thing. We have told this thing in 2023 that we are going for the 1 gigawatt from the by the 2025 calendar year. We will achieve that 1 gigawatt before that, and IPP and CPP 50-50. So our annuity income will be for the 25 years will be fixed around, say, whatever you are seeing today. You will get the much more better profit figures in the KPI and KP Energy.
Okay, but I want to understand, that all of these orders in terms of, the orders received from GUVNL and all, execution timelines I want to understand. How much of it will you do in FY 25, 26, 27? What are the timelines?
See, timeline is already mentioned in the tender about, say, 18 months, and we have passed 3 months. So you can say before we tried our best to do before March.
Okay, sure. And just with regard to, I'll switch focus to your balance sheet and balance sheet metrics. You've taken on some amount of debt. Where does this number go to? What kind of a number are you comfortable with?
See, today you see that our debt equity ratio is much down, 0.99 to last year 2.21, and in the you say in all the companies we are not more than 1:1. So here also we are, if we want a big clientele orders and big orders, we have to take a more and more facilitate, and it is a that 442 is a debt of long-term debt. Otherwise, all the WC bank guarantee and all things which we have to pay to the GVNL and the tendering system. So actually, debt is 0.5 only. If you see, if you long-term, if you see, and that is the remarkable reducing in a debt, you can say.
Okay, and Mr. Patel, I also want to understand what kind of land bank are you having at present, and how will it be put to use?
See, altogether we have a 2,200, more than 2,200 acre land is on a company's board, and the evacuation also. We have a 1,600 plus evacuation, and the government, wherever we are bidding, like 240 Khavda, where the government is facilitating us the land and the AC part also.
So therefore, sir, what we're trying to allude to is the capex with regard to land is already put up. Is that how one can look at it? And
yes, you can say that thing, that we have already land in our hand, where we can in the next near future we will say execute the all the CPP orders.
Okay, sure. And sir, just with regard to profitability, how do the metrics add up? So as you expand operationally all the way through to FY30, what's the kind of growth in profitability that one can expect from KPI Green? Because now it seems stable profitability is here to stay.
It is naturally that if you go with the big say megawatt size, big like gigawatt and all things, the profitability not going in a percentage, it will goes in a numbers, where last time we have declared the profit of 109. Today we are on some 16 plus 160 plus. So next year we will expect the at least 50 to 70% growth in the numbers in profit.
Interesting to note that Mr. Patel, 50 to 70% growth in terms of number. Well, Mr. Patel, with that we're completely out of time. Thank you so much for taking our time and speaking with us at NDTV Profit.
I just want to try and cover, trading at roughly 75 times, 50% odd growth in profitability. There's going to be a bit of readjustment to that earnings multiple for KPI Green. Very interesting to see. It's already a multi-bagger, 4x in the last 12 months, just in terms of the stock price and the way in which the stock price has moved. And of course, locked in lower circuit today, but very interesting guidance given on this one. But it's that time of the show. We slip into a very short commercial break. Don't go anywhere. We have the management of Jai Balaji Industries joining us. We have Aditya Jajodia, who will be joining us. On the other side of this very short break, we'll continue to talk earnings.
As citizens, we must remember that voting is not only a privilege, but also our duty towards our nation. I, Akash Ori from the DLF Group, pledge to encourage my colleagues, their friends and family to vote for the government they believe in. This is the strength of our democracy.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
As an Indian citizen, it is not only my birthright, but it is my duty to vote. I urge every Indian citizen to exercise their voting right and elect a government which meets our hope and aspiration. I can assure you that I and my associate in Vocard will exercise their voting franchise.
Welcome back. You're watching the small and mid cap show here on NDTV Profit. Quick check on where markets continue to be at. You're not seeing much change, but let's pull up some key winners and losers on the BSE 500 if we can. And within that pack, you'll see something like a Hudco doing fairly well. Zensar Tech, of course, on top of the pack, strong numbers. L&T Tech at the bottom of the pile in terms of performance, down roughly 8% odd. You also have a Bajaj Finance which is down 8%. So those two bigger sized companies, of course, down 7.5 odd %. So some pressure there. In terms of certain smaller companies, let's talk about something like a Harsha Engineering. Couple of block deals yesterday, very interesting, up 9% as we speak. You also have something like an India Pesticides, which is seeing good traction again today. Again, on the back of blocks which happened yesterday, good buying interest, 2.7% higher in trade today as well. So those are, of course, some stocks which you need to keep on your radar. In terms of results action today as well, we have plenty of action to look forward to. Let's pull up a Bajaj Finserv, because that one, of course, down on the back of what Bajaj Finance is doing. It owns roughly 52% of Bajaj Finance, but nonetheless, it's also an insurer, and those numbers expected today, maybe not a major reaction expected. Mastek is up roughly 2.6% as well. Supreme Industries up 2%. VST Industries also up 1.7% now. So, Mahima, that's the themes which are playing out, earnings being predominantly the theme.
Right, absolutely. And one interesting earning that came out yesterday is Jai Balaji. And to speak about how the quarter has gone by, we're joined by Mr. Aditya Jajodia, Chairman and Director at Jai Balaji Industries. Welcome to the show, sir.
Thank you so much.
Right.
Good afternoon.
Good afternoon. So my first question to you is, just give us a brief idea of how the quarter has gone by and how FY24 has fared out for you.
Madam, the quarter has been extremely good. We did a revenue of around 2,000 crores in the last quarter. And on an annualized basis, we did a revenue of around 6,600 crores. In terms of EBITDA, we did an EBITDA of around 1,100 crores. And in terms of profitability, our profit margins were in the region of around 20% EBITDA margins. And in terms of profitability, our profit was around 880 crores, which was a growth of around 1,400% from last year. So the performance has been highly satisfactory.
Sure, Aditya. Can you talk to us about FY25 going forward? Prices expected to be stable, volatile? What are the kind of numbers one can expect? Because from your investor standpoint, you've hit it out of the park.
Thank you. Thank you so much. See, as far as the numbers are concerned, we are very optimistic about our growth numbers. And we are very optimistic about our operations. The focus of the management, it is evolving around 2-3 issues. Number one is that we are doing a capex of around 1,000 crores entirely through internal accruals, out of which 550 crores has already been spent, and then the balance 450 crores will be spent over the next 12 to 15 months. So with the completion of this capex program, what we are doing is that currently we are selling around 50% of our products as value-added products, which have higher margins. So with this completion of the capex programs, this contribution of the value-added products to our entire product basket, it will increase to 80%, and the top line will also increase by another 50%. So what we are aiming at, it is a EBITDA margin of 18 to 20% on a much higher top line. So this is what we are aiming at. One of the other focuses of the management also is to focus on products and businesses which will give us very high return on capital and very high return on equity. So as it is, if you see the numbers, means the return on capital, return on net worth, these are very high. So so the focus of the management will be to focus only on those businesses which will give us very high return on net worth and equities.
All right. So Aditya, I also want to try to understand, in terms of your order book, what is your order book at present? And in terms of execution timelines also, where do you stand?
In terms of order book in the ductile iron pipe business, we have an order book of around 10 to 12 months of the current capacity. But since the capacity it is increasing by the capacity will be increasing by 250% over the next 12 to 15 months. So we are very happy with the order book. In terms of the specialized ferroalloy business, we have long-term agreements with most of our buyers, and we are exporting to more than 40 countries. So as long as the long-term agreements are concerned, here the prices are fixed to the indexes, but then the quantities are fixed. So more than 60% of our sales are in the long-term agreements. So we have as far as the order book is concerned, we are very, very okay with the order books. Very happy with the order books.
Understood. Aditya, two-part question. One is with regard to, is this capex going to be an ongoing plan or is this FY25 specific? How much is that number, if you can tell us? Also,
I just missed your question, please. Can you please
Sure. So, with regard to capex, is it an ongoing capex plan which is going to go beyond FY25 as well, or is it going to be restricted to FY25 and then you're good? Second is, how much is the capex and how do you fund it?
Yeah. See, I will answer your second question first. The total capex plan is for 1,000 crores, out of which 550 crores has already been spent as of now. Out of the balance 550 crores, the majority will be spent in this year, but a small portion may be spilling over to the first quarter of the next year. And as far as the funding of the capex goes, it is being done entirely through internal accruals.
Here you mean FY25?
Yeah, FY25.
Understood. Just for clarification. Thank you so much. Okay, that's all the time, unfortunately, that we have, Aditya. Very, very interesting. Again, the conversation could go on. But but that's all the time we have on the Small and Mid Cap show for you today. Hope this was productive. From Mahima, myself, everyone who puts the show together, thanks so much for watching. And stay tuned to NDTV Profit for more updates.
Hi, I'm Rohit Kapoor. I'm the CEO of Food Marketplace at Swiggy. At Swiggy, we are in the business of offering our consumers a wide choice, convenience, and a multitude of options to choose from. Voting is something similar. It's about exercising your choice, exercising it responsibly, thoughtfully, after going through all the options that you have. So I will encourage all the employees at Swiggy, all our delivery partners, everyone at large, their families, and all of us, all consumers, to come out, and those who are eligible, vote and exercise your choice and make India always a better place than it was yesterday, because we all owe it to the nation and to ourselves. Thank you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right.
Good morning and thanks so much for tuning in. Happy Friday to you. This is Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary, and we will take you through the next half an hour or so of trade. Now, this is aimed at getting you all of your answers, or getting you answers to all of your stock related questions. And if you've got stock related questions, then you can send them to us on any of our social media platforms, or indeed on the number that you see on your screen right now. But let's take a look at how the markets are faring. And we've got very narrow cuts for the benchmark indices, and you have the Nifty 50 that's trading with cuts of about 0.1% or thereabouts, and you have the broader markets that are actually outperforming quite significantly at this point. And you have the mid-cap index that's trading at very close to the high point of the day, up as much as 0.8%. Similar gains for the small cap index as well. And I would think very comfortably that the market breadth is in favor of the advances. Now, it's an interesting picture if you talk about the key contributors on the Nifty 50 today, because you have Tech Mahindra, which is outperforming in a big way, and we'll talk about that in just a bit. And you have as well HDFC Bank, HCL Tech and Bajaj Auto, which are leading the gains, but not tremendous gains. Among the losers, though, you have Bajaj Finance that is accounting for a bulk of the declines right now, possibly single-handedly pulling the Nifty 50 lower right now. And in fact, let's talk about Tech Mahindra, because that really is the stock of the day from our perspective. We've got gains that are holding on at very close to 9%. At some point earlier in the session, it was up over 12%. This is not just on the back of the results, though, Smriti. It is also because of the guidance of the new Chief Executive Officer. So why don't we go across first to Rucha to find out what exactly was said in the earnings call that took place last evening. Rucha, what is it that was said by the new Chief Executive Officer that caught the fancy of the street?
So Tech Mahindra reported its results yesterday, but what is interesting from the management call takeaway is the 3-year turnaround strategy given by the CEO. Now, what are the highlights? Let's check it out. The company plans to achieve a revenue levels higher than its industry peers. It also expects to achieve an EBIT margin of more than 15% by FY27 from the current levels of 6.5%. It also aims to target a return on capital employed number of more than 30%. Now, for the shareholders, it expects to return more than 85% of the free cash flows over the next 5 years. Now, this essentially means that the company will focus on more of organic growth than inorganic growth, which is not the case if you look at the past quarters for Tech Mahindra. Now, the management also mentioned that it will focus less on the transformational M&A drive, and that is why this number of 85% is expected to be returned to the shareholders.
Okay, fine. All right. Now, thanks so much, Rucha, for getting us those details. We are going to be joined shortly by Ashish Kapoor, who's the Chief Executive Officer of InvestShop, but we're still waiting for him to join. In the meanwhile, we've also got Nirav Cheda, who's AVP Technical and Derivative Research at Nirmal Bang. Thank you so much, Nirav, for taking the time. Let's talk about where the markets are and what cues you're seeing from the levels that are currently available. The start of a new series. What key levels are you watching out for the benchmark? And also, let's talk about the Nifty Bank as well.
Yeah, hi everyone. So see, in terms of Nifty and Bank Nifty, important levels have been breached in the past couple of days. 22,500 was an important resistance area which has been crossed above for Nifty, and even Bank Nifty 48,000 was the resistance zone which has been crossed, and I believe now Nifty can move up towards that 23,000 levels. Rollover just happened yesterday, and we are seeing not very aggressive rollovers. So there are average rollovers for both Nifty and Bank Nifty, and that does suggest that the previous month's trend of positive bias should continue at least for the first part of the May series. And we expect some buying to come in from current levels even now. And banks should be the leaders. Also, Bank Nifty has broken above its all-time highs in terms of closing. And we expect Bank Nifty to do well going forward as well. Bank Nifty should move up towards that 49,200, 49,500 levels in the coming 2-3 days. And we can see a good run-up because of Bank Nifty and the Nifty as well. So the stop loss for Bank Nifty would be around 48,100. This is spot levels. And for Nifty, around 22,500 on the futures. These should be the stop losses to note. And if they are breached, should you close your longs. Until then, ride the trend.
Right. Good morning, Nirav. We'll start off with the questions now. The first one is on Crompton Greaves. This one's from Upender from Hyderabad. They say they haven't exactly mentioned the buy price, but they say it's a 10% profit that they're sitting on. The shares are currently up about 1.8%. Nirav, what's the short-term strategy for this counter?
So the trend that this stock has made is quite bullish actually. So this is the trend most of the stocks witnessed post 2020 where good amount of buying went in. A positive divergence is seen. So a lot of things going in for this stock. I believe this stock has the legs to move up above that 350 odd levels, but at least from a near-term perspective, 350 is the target one should look at. You can keep a stop loss of around 300 now for your longs and just ride this trend as well.
All right, the next question is on First Source Solutions, and we've got Subramanian from Coimbatore who's bought quite a while back, and he's bought at lower levels, 18.35. He's been holding since 2011, and he's wondering whether to hold, Nirav, or to sell. He's only got a perspective for the next 6 months, despite the fact that he's been holding for over 10 years. It's quite a substantial gain. Should he book it?
Oh. We've been holding for 10 years, so I don't know how much of an advice I'll be able to give him. But yeah, from a near-term perspective, from that 6-month perspective, I believe a breakout is in place, and that breakout has come in above that 200 levels on the monthly. And it's a rounding formation breakout on the monthly, and then on the weekly there's a flat pattern breakout. So lots of things going on for this stock. In the next 6 months it should do well. You can probably see the stock coming up above the 325 to 350 odd levels in the next 6 months. Also IT stocks have started to move up as well, so that would be another push. So continue to hold the stock. Now your stop loss for the next 6 months should be around 190 odd. And if that breaches, only then you will see the stock coming down. Until then, you can witness good buying action.
All right. We have Ashish Kapoor joining in as well. Welcome, Ashish. We were just talking about Tech Mahindra. The numbers seem a little weak, but the management commentary seems to give a boost to the share price. It's up about 8%. What's your view on Tech Mahindra?
Well, I think it's the view is positive because the stock has been lying low for quite some time, and what has happened during this course of time is that the management has changed. The vision, which of course results were quite weak and quite insipid, but whatever they have revealed in terms of their vision for FY27 is what has I think raised hopes of a turnaround in their fortunes. Otherwise, over the years, it has been underperforming its peers. So there is hope that now, with the new management in place and with the new plans and the new outlook, and including scale, their focus on scaling large accounts and leveraging their synergies from their past acquisitions, and the various other points which the management has laid out, has given confidence to the market that the underperformance may be getting over soon. And otherwise, it's a very well-established company. So once I think they get their mojo back, the upside looks very good. So I wouldn't say today because it's already on a very good uptake, but on declines, I think one could look at buying Tech Mahindra. IT sector as a whole has not done much, especially large cap, and Tech Mahindra, even within the IT space, has been lying low. So there is plenty of room once the turnaround of their performance happens.
Yeah, fair point.
So with that in view, I think with 2-3 years kind of a time frame, you should look to buy on declines.
Okay, fair point, Ashish. And it is in fact off the high point of the day already. It was up as much as 12%, is now up less than 8%. Let's talk about the next question, which is a broad question, but Nirav, this is fan mail for you, if you can call it that. Satya is writing in and he's saying that you are his favorite and that you give fabulous recommendations. To that end, he's asking you to give 2 short-term views or 2 short-term recommendations from a perspective of the next 3 to 6 months.
Thank you, Satya. But at this point of time, with the election so close by, Very difficult, to give a stock from a 3 to 6 month perspective. Only thing that I'll tell you, I'll give you a theme which I've been actually following. As a theme, I like fertilizer. Lots of stocks in the fertilizer space have seen a 5 year, 10 yearly breakout. So I believe, in the next 3, 6 months, even 1 year, this is one sector which should perform very well. Now, out of those, I believe GSFC and RCF are two stocks which I really like because their long-term patterns are very good. So I believe one can look to buy these two stocks at current levels. Even if you get declines, add on declines. 200 should be the stop loss for GSFC and about 130 for RCF. But I believe GSFC should do about 350, 400 or very soon, probably in the next 3 to 6 months, and RCF, probably 250 odd. So both can give you good gains going forward. So hopefully you can add.
All right. The next counter we're talking about is Cochin Shipyard. This one's from Thomas from Kerala. They say they bought the shares and they sold it at 1100 levels. The stock has since moved up and is trading close to 1,336 rupees. Ashish, I'm going to come to you on this one. We've seen the stock move up quite a bit in the past sessions. In the last 5 sessions, it's up about over 20%. Do you think it's an expensive stock to buy at this juncture? Would you advise buying?
No, I think one can wait. One can easily wait. I think there's too much of optimism being built in, and the run-up, rightly said, has been a lot. So I think just wait. I think things will cool off. Otherwise, a very well managed company, but I think can also be a great future. But I would wait for declines before entering.
Coming back to you on Bajaj Finance, it's down quite substantially in trade today, 7.5%. It was a toss-up between Tech Mahindra and Bajaj Finance as to which stock we should take. Incidentally, we've got a question from Rahul, and he's asking what the reason for the fall is. Could it be because you're seeing some kind of an impact of the regulatory action that was taken by the Reserve Bank of India on the kind of growth that the company has reported and the outlook for AUM growth, if I'm not mistaken, 26 to 28% in the current financial year. The expectation that there's going to be another hit on the margins is going to decline by as much as 30 to 40 basis points over the next 2 quarters. What is your opinion?
Well, I think the company, of course, has historically done very well, but it's kind of a hit roadblock. Now, usually, I would say that, when companies like this hit a roadblock, it's a great time to accumulate. In case of Bajaj Finance, I have a few reservations where I think the time is not right now. One should still wait. One is that, its valuation is still very high. It has always been high. But earlier the growth trajectory was very clear. Now it is very cloudy because of firstly the regulatory issues which the company is somehow facing very regularly. The second is that competition from Jio especially is looming. It's not yet really happened, but the fear in the market is that they now, for a long period of time, they did not have any serious competition. Now with Jio really scaling up the kind of plans which they have made and the kind of financial backing which they have, that is a possible competition coming up very soon. So with keeping all that in mind, I think this corrective phase or whatever you call it, Bajaj Finance, could be much longer stretch than what was earlier their corrective phases. So I think one can still hold on, don't buy even at these levels. I think the stock will, most likely will underperform even for the next few quarters. Buy only when I think it really falls to maybe less than 6,000, or we pass through and we see what Jio does, and then maybe at some point of time we can take a call on it. Otherwise, until it becomes really cheap, less than 6,000, one should not be buying into that.
All right. Fair point. Ashish and Nirav, stay on. We'll take a quick break, and after that, we'll take more of the questions.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times
Welcome back. You're tuned into Ask Profit on NDTV Profit. Let's dive into the queries again. This one's on Gujarat Gas. Heta from Ahmedabad is writing to us and they say they bought the shares at a price of 250 rupees. It's currently over 550 rupees. So good amount, a considerable profit there, Nirav. Would you suggest holding on to it for a little while longer?
Yep. See, at this point, this stock is into a consolidation. It's making a flat kind of a consolidation at this point. So probably, exiting the counter right now would make sense. Once this stock has a breakout above 570, then you can re-enter and, this stock can probably move up towards 680, 700 levels post the breakout. But at this point, I don't see much upside from current levels till it's in consolidation.
Okay. Just want to point out that we'll take one query per viewer per day. That's because we have a lot of questions that we have to take. The next question is from Swastik and he's asking about Motherson Sumi wiring and this is something that he's bought. I do not know what level he's bought at, but he's looking to hold for the next 2 to 3 years. Ashish, is this a good idea?
It's a very good idea. I think one of the companies which is really doing very well and I think scaling up in a very big way. And I think with the kind of new capacities coming up in the auto OMC space in the next few years, I think Motherson wiring has a great future going ahead. I think definitely a good idea. I think we should, in my opinion, make a lot of money here.
All right. The next counter we're talking about is Karnataka Bank. This one's from Sri Kishore Sharma from Bihar. They say they bought the shares at a price of 440 rupees and they're looking for a longer term view on this. It's below that price. It's trading at around 228. Ashish, from a longer term perspective, how does the bank look? I mean, for somebody who's sitting on a loss like that, should they maybe exit the position or there's upside in the future?
To be honest, Karnataka Bank, I really haven't tracked for quite some time. I really don't want to comment on it. Right?
All right, let's take a technical check on this as well. Nirav, how does it look, Karnataka Bank?
Yeah, so I think the price that he's quoting might be before that rights issue had come in. So post the rights issue, I think he's sitting on a profit at this point because this stock is at all-time highs, near the all-time highs, and its all-time highs are around 280 odd. So yeah, I think he's sitting on a good profit at this point. That is one. And secondly, this stock has seen a 15-yearly breakout above that 200 odd levels, and this has been a long time coming. So definitely, I believe this is one stock which you should be holding on to. This stock can move up towards that 350, 400 levels very soon. But the only thing is, there has been a significant run up from sub 100 odd levels up to 280. So there is some pull up that is coming in. It might probably take a couple of weeks to about a month for this pull up. But then once the stock starts to move up, it should move up very aggressively up to that 350, 400 levels.
Okay. Interesting. We've got a viewer, Akshay, who's tuning in from Shasaram, which is in Bihar, and he's asking about Jio Financial Services, JFS, which he's bought at the attractive level of 90 rupees, and he's looking at a target for the next 3+ years. He's not in a hurry to sell, despite the fact the stock has had quite the ride in 2024 so far. Nirav, I'll come back to you on this one since Ashish has already weighed in on JFS. What do you make of the journey so far in 2024, and should you book some profits at all?
See, Jio, from the time it listed up till now, it's been a slow and steady up move for the stock. I think it might be 190 odd, which he bought it at. So probably, he can continue to hold on. The overall trend is still positive. There are, generally the volumes is what I look at, and the volumes are increasing as the stock increases. So that's a good sign. I would believe the stock has the legs to move up towards that 450 odd levels. Once that 450 comes in, that is where you can probably look to book some profits there. But at this point, continue to hold on.
I might have gotten the price wrong, and I think our viewer might have missed out that one digit. But 90 is not possible. It never traded in double digits, if I'm not mistaken, right? Yeah.
Next counter we're talking about is Info Edge. This one's from Giant. They say they bought the shares at 6,150, so slightly above what it's currently trading at. Ashish, I'm going to come to you on this. From a longer term perspective, how does the counter look? It's moved a little bit in the last 6 months or so, about 46%.
I think looking very good. In fact, I think the kind of investments in the digital space that they have, and the kind of e-commerce and other websites which they have with their holding, I think there's a lot of scope. I think it might take time, but this stock could be a real good capital creator from here. It's a little risky because it's all into new technologies and new ideas, but most of them are very well established. So I think you should buy and hold on for some time. I think the way up can be very interesting.
Speaking of well established, Ashish, this is a question for, I would think, portfolio construction ideas, where Shirish from Pune is asking about whether to add Titan or Larsen & Toubro from the perspective of the long run, which will give better results for a period of 5 years or so. What's the view?
Well, both are looking good, but I would still think Titan is better because the kind of nature of business which they are in, wealth can be much easier to multiply than Larsen, which is a very capital intensive kind of industry which they focus on. So my bet would be on Titan between the two.
All right. Next question is on Motisan Jewelers. Now, this is a recent listing. Ashish, do you have a view on this specific counter?
No, I haven't tried.
Okay. They're also asking about another counter, which is Thyrocare Technologies. They haven't mentioned the buy price, but they say that they're in losses. Ashish, is this the one part of your coverage?
Yeah. Thyrocare is very good, looking extremely good. I think just stay invested. We should do very well going forward.
Okay. A broad question. Are renewable energy cores overvalued is the question that's being asked by Amir. Which do you track, Ashish? I guess a lot of the frontline power companies are now looking at generating through renewable. So therefore, they have some footprint or presence or the other. But do you think that these companies are overvalued?
They are overvalued if you look at normal conventional parameters. But given the kind of scale up which can or which is likely to happen, you factor that in, then they're not overvalued. The scale up is going to be huge. Of course, the risk is there that every company may not be able to scale up. And I think, some of those companies like Porostate Renewables, pretty well established. Sulek, SWE, LDCP, very well established again. So these are the few companies which I like and I track. And I think despite the run-up, the future looks very interesting in these companies. And I think generally the future looks very good. You just have to be a little more careful with the stocks which you select.
All right. Next counter we're talking about is Oil India. This one's from Sasi, if I'm not wrong. Okay, and they bought the counter at 640. It's currently at around 630. Nirav, how does it look on the charts? Should you continue holding on to this counter?
Yeah. So probably, this stock, after a long time, again, it's a 15-yearly breakout which has come in for this stock above that 350 odd levels, and the stock is almost doubled. But what happens is generally whenever those 15-yearly breakouts come in or long-term breakouts come in, the stock not only doubles, it actually moves up quite significantly. It can probably 3x, be a 3x or 5x as well. And this stock, the overall trend is still positive. The volumes are increasing, which is a good sign as the stock increases. The stock should move up towards the 750, 800 levels in the near term. Probably I'm looking at 1000 plus in the longer term. But yeah, you can hold on and you can keep a stop loss of about 610 for a short term trading view.
All right. In fact, we're completely out of time, and there are still questions pouring in, but unfortunately, we can't take them today. Ashish, as well as Nirav, thank you so much for joining in and for answering all the questions that you did, and wish you a very happy weekend. Viewers, like I said, we're completely out of time, but there's lots more that will come up over the course of the day. And of course, we'll be back on Monday to take more of your questions, so do stay tuned. This is NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Benchmark start May series on a choppy note. Sensex trades below 74,200 while the Nifty trades at 22,500. Barring financials, all sectors trade higher, led by IT, media and consumer durables. In Tech, Mahindra gained as much as 12%, post reporting a significant rise in Q4 profits. On the other hand, slow growth for rural business haunts Bajaj Finance, stock in the red. More earnings on the block. HCL Technologies, Maruti and SBI Life are set to report their March quarter numbers today. And Lok Sabha election enters phase 2. All eyes on Wayanad as Rahul Gandhi set to battle CPI's Annie Raja and BJP's K. Surendran. Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade. But before that, a quick look at the markets, which are at the moment well, quiet, I would say the least, and we haven't seen too much traction there. It's a quiet Friday morning, and sure, it's marginally in the red, but well, the action is all in stocks, not as much as far as the indices are concerned. The Nifty holding on to 22,500. The Bank Nifty as well is well, currently very, very quiet in trade. That's also down by around 0.2%, and we haven't seen too much of reaction, at least as far as the banking stocks are concerned. However, there is a sharp reaction in a handful of IT stocks, Tech Mahindra specifically, where we have in fact seen a surge here, and it's one of the key movers in today's day of trade. It has given up a little bit of its gains on an intraday basis, but save for that, otherwise it's been a fairly good day of trade for Tech Mahindra. Of course, let's not forget Bajaj Finance on the other end of the spectrum on the Nifty 50 under quite a bit of pressure, also on account of earnings. This one is down 8%. Of course, that said, when it comes to the constituents of the Nifty, let's very quickly take a look at where that pull and push is with respect to what's keeping the the index slightly lower. It is essentially Bajaj Finance in terms of a weightage. ICICI Bank and L&T along with SBI also contributing to the downside, and what's really contributing to the upside in terms of points, absolute points, is Tech Mahindra, HDFC Bank and HCL Technologies. HCL Technologies, of course, is awaiting the numbers today, and we should have more clarity on the Q4 as well as what we can expect going into FY25 a little later on the day today. But what about the broader markets? There is outperformance there. Both the mid-cap index is up around 0.8%. The small-cap index continues to outperform. That's also up around 0.8%. And, the outperformance in general for the small-cap and the mid-cap index continues with respect to some of your key benchmarks like the Nifty 50. And even in terms of your advance decline ratio, we're looking at about 12 advances for 7 declines on the NSE in general as a whole. Well, these are some of the factors that we're going to keep an eye on. With that, let's talk about that list of all the stocks that we're taking up on our show today. We're certainly going to talk about Tech Mahindra. We're talking about Bajaj Finance. We're addressing L&T Technology Services, as well as Zomato, where we have yet another broking firm coming up with a note, and of course IndusInd Bank. And we've also had the the conference call from Schaeffler India, so we're going to consider Schaeffler India as well. So we'll be keeping an eye on a handful of these names, and to take us through what they make of these names, well, we have Amrish Baliga, independent market analyst, who's also going to join us and perhaps help us decipher some of these stocks. Amrish, good afternoon. Thank you so much for joining in. Amrish, before I come to you, let me get on my colleague Rucha to tell us about the key takeaways from the Tech Mahindra conference call. Rucha.
Thanks, Agam, and good afternoon. Tech Mahindra reported its results last evening. While the numbers were quite in line with the estimates, what is interesting is the 3-year turnaround strategy given by the new CEO Mohit Joshi. Now, here are 4 key highlights from the turnaround strategy. The company expects to to report a revenue higher than its industry peers over the next couple of quarters until FY27. Now, in terms of EBIT margin, they also aim to clock a more than 15% EBIT margin by FY27 from the current levels of 6.5%. In terms of ROCE, the company aims to clock a 30% target for the return on capital employed. And lastly, in terms of capital return to the shareholders, it aims to give out 85% of the free cash flow to the shareholders in terms of dividends or buyback.
Rucha, thank you so much for getting us that update. Amrish, welcome to the show. Some ambitions set by the new CEO who's come in and taken over. We do know about Tech Mahindra's underperformance with respect to its peers in the industry for the past many years now. But you think things can change? How are you looking at Tech Mahindra at the moment?
No, because things will surely change under this new leadership, because we have seen the recent steps and they seem to be in the right direction. For example, we have seen the SBU right sizing, investment in the top accounts, vertical delivery teams, some changes in employee investments they have made. So clearly, I think the target which they have of 15% margin by FY27 should be achievable. And even if you look at this quarter's earnings, I think it was a bit of a beat on sales. Margins were in line. And I think the market has really taken well the focus and the management commentary. So because of which we have seen this upside. But then again, I would say that immediately if you look at the next couple of months, there may not be a huge upside. But then if you're talking of holding on for a year or two, I think it should give you a decent sort of a return from here. Because the management has indicated that FY25 will be like a year of turnaround, following stabilization in FY26. And you'll have those strong returns coming in FY27.
Okay, well, let's move on and talk about another tech company, and that's LTTS. Now, again, a few years ago, LTTS was all the rage. A lot of investors were vying for it, and at some point in time, we did see it move and surge. But it does seem like that particular phase is done with, and now we're looking at a little bit of an underperformance coming into play. Before I go across to Amrish, let's listen to the management in terms of how seasonality has played a hand in the earnings coming through. Listen in.
So if I look at the quarter gone by, 5.1% constant currency growth quarter on quarter sequentially, amongst the best we've had in the last few quarters, number one. Number two, 17.9% growth in constant currency, getting us to a $1.2 billion run rate, where we were $1 billion less than 12 months ago. So I do believe, all in all, I think the teams have done amazingly well this year, given the climate that it was. Multiple $10 million plus deals. In fact, if I was to reel off, we've been able to close a $100 million deal this particular year. We've been able to also get in multiple $20 million, $30 million deals, and $10 million deals. So all in all, pipeline stronger than last year, and stronger than last quarter. So we do believe that as we move forward, we will see traction continuing to improve. Again, knock on wood, and we are of course being cautiously optimistic.
Right. So Amrish, just a couple of weeks ago, it seemed like LTTS was back to make new highs. And since then, we have started to see a correction. Of course, today, the correction is a lot starker because of the earnings. I reckon the street at least has not given it a thumbs up. What's your view here?
No, I think the margins were below estimates, because of which we have seen this correction. At the same time, the FY25 guidance also is muted. So I think it can correct a bit more. But I think supposedly closer to about 40 to 4,300, it makes sense to look at buying from a longer term perspective, because whatever said and done, order flows have been quite decent. Whatever the management just now spoke about, that they have one $100 million order, another one is $30 million, two deals of $20 million, and one deal of $10 million. So I think, this is decently positive for LTTS. So I think you should look at buying closer to about 40 to 4,300.
So those are the levels that you can keep an eye on when it comes to LTTS, 4,200 to 4,300 rupees per share. And from there on, we move on to another important stock that has been buzzing, again, under quite a bit of pressure. That's Bajaj Finance. Let's get in Harsh to understand the reason behind the weakness and potentially what's behind the numbers as well. Harsh.
Well, thanks, Agam. What you're actually seeing is numbers broadly in line with what estimates were, but the disappointment has come with regard to the commentary. 4 key pieces, we'll try to break that down. 26 to 28% FY25 growth number. That's what has been given as a guidance. But what Bajaj Finance has done in FY24 is 34% growth. So essentially, they've trimmed down growth estimates by quite a bit for FY25. One led by their rural B2C business, which is facing some problems with regard to asset quality, but that's just 6% of the business. And therefore, that number seems to be putting investors off. The other piece is also with regard to its customer count. Customer count has grown by around 1.4 crore customers plus in FY24 itself, but they've given a 1.2 to 1.4 crore customer count increase for FY25. That's the guidance they've put out. That's below 20%. They've never done below 20% in terms of customer count. So that's the other piece which is a bit of a put off. The third piece is with regard to asset quality. Now, their credit cost for FY24 was roughly 160 to 165 basis points, 1.6 to 1.65%. Now they've guided for a 1.75 to 1.85% credit cost guidance. While this is normalized, but nonetheless, it's put the street off with regard to credit costs. Last off, it's with regard to margins and profitability. Now, margins have already shrunk in FY24. A further shrink is expected in FY25 by 30 to 40 bips. What the company is saying is they're doing more secured business, which will shrink margins and impact margins and therefore impact profitability. Will the metrics really change significantly as a result of this? Of course, need to wait and watch in FY25, but that's what the guidance says, which is putting off investors.
Right, fair enough, Harsh, and all points taken aboard. I reckon that investors are also mulling over the several factors that you pointed out. Thank you so much for joining us and taking us through that. Amrish, your take on Bajaj Finance at the moment?
I mean, I would be a bit cautious to negative on Bajaj Finance for the time being because clearly the NIM decline for H1 FY25. I mean, earlier we thought it would be about 20 basis points, but now the revised figures coming out is about 35 to 40 basis points. There are a lot of headwinds as far as the AUM growth is concerned. The business growth also will be affected. And I think the most important thing out here is the way Geofinance will disrupt the space. And one of the most affected out here would be Bajaj Finance, which in fact disrupted in the last decade. I think the same issue they'll face now from Geofinance. So from that point of view, at these levels, I'm finding it quite expensive. I think it's still a good time for people to book out.
Right, fair enough. Well, not exactly constructive as far as Bajaj Finance is concerned. But on that note, we're going to slip into a short break. And on the other side, we get you the balance of that list we intend to address in the show. Stay tuned in. Back in just a bit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa.
Welcome back. You're watching Hot Money, and we get you the latest brokerage note on Zomato. This time it's Goldman Sachs once again putting a relatively higher target on this one, potentially on improving fundamentals. But let's get in my colleague Mahima to tell us more about what the broking house is making of this particular company. Mahima.
Right, Agan, so as you rightly mentioned, Goldman Sachs is bullish on Zomato. They've given a target price of 240, which shows an upside of 30% from its yesterday's closing price. Now, the reasons that they've said are that Zomato is being positive both on profitability and growth. So as you rightly mentioned, they are pretty bullish in terms of fundamentals. They believe that FY25 quick commerce GOV estimate for Blinkit is much higher than they were expecting. And they're saying that they see elevated growth profile for Blinkit at 53%, 24 to 27 estimates. And what they're saying is that 32%, 24 to 27 estimates is the adjusted revenue CAGR for Zomato as a whole. They believe that market is underappreciating Zomato stock right now, but over a period of time, the stock will potentially grow. And this is on the back of course, potential profits that it will post. And they expect the quick commerce EBITDA margin to exceed the food delivery margins over a period of time. So this is the overall view of what GS is making out of Zomato.
Okay, Mahima, thank you so much for getting us that latest note on Zomato. Amrish, there are two sides to Zomato at the moment. Some believe that a lot of the positives are already baked in, and Zomato at the moment is priced to perfection. On the other hand, of course, you have a lot of other broking houses on the street who are very, very positive on the future prospects of the company. Where do you stand in this equation?
In fact, I would be positive at this point of time, although we have seen an extremely good move. But that's happened clearly because of Blinkit. Because if you look at the valuation at which they took over, I think it was a fire sale. The valuations were closer to over $2 billion at that point of time. But currently, the valuation of the quick commerce startup Blinkit is about $13 billion. So it's actually multiplied about 6 times. And if you look at the market valuation of Zomato, that's about $21 billion right now. But then, like what Goldman Sachs has suggested, I think we should see levels of about 240, 250 soon. Because if you look at, the increase in the platform fee, I think they've done that recently of rupees 5 per order, and that's been absorbed well. So you can expect a further increase going ahead. And I think the other trigger for Zomato, not directly but indirectly, would be the Swiggy IPO. I think they've got an approval for about 10,000 crores of IPO. And typically, whenever such large IPOs come, the other stocks in the sector, so here there's only one stock, which is Zomato, other stocks in the sector normally move up around the IPO time. I think that will also give Zomato a push.
All right, of course, Swiggy is the other interesting one to keep an eye on as well, awaiting that IPO coming through. And from there on, we shift focus to the auto space. We have Puneet, who's joining us to tell us about the latest from what he has gathered from the conference call of Schaeffler India. Puneet.
Yeah, thanks for that, Agam. So the stock is also reacting very positively post the conference call. It had opened at an intraday low of roughly 3%, but has now hit an intraday high of 5%. Now, based on the results were out yesterday. Revenue grew 10%, but the margin was where the problem was, roughly 1% down compared to the previous financial year. Now, what's interesting is that they've done a new divisional split, where basically the bearings business, which was there previously in the automotive sector, now it has moved out of that and gotten into the industrial. So now they have 4 divisions specifically, which are the automotive, which is the second one is vehicle lifetime solutions, which is renamed now, which was earlier the aftermarket solutions. The third one is the bearings one, which has been including with the industrial. And the fourth one is the exports and other businesses such as wind energy. So there's that. The management did talk about that one key update, that the bearing business has now moved into the industrial business, becoming roughly 42% of revenue right now. Within automotive also, they've done a split of powertrain and chassis as one, and the e-mobility segment as the other second business within automotives as well. The one key thing which is always an issue in the Q1 is the free cash flow. It is negative roughly by 25 crores versus almost just flat last year at 3 crores. The management highlighted that going forward this will get better till the Q4 of calendar year 25. They have said that the market share in vehicle solution business will be growing with new products such as coolants as well as greases, while new businesses in the Vande Bharat has also been secured with the 2 new products such as cylindrical roller and tapered roller bearings. Now, what is interesting is there are 2 acquisitions basically, or 2 companies which had like reference to KRSV Innovation, which is a subsidiary, was acquired last year. This has led to a slight, the company's loss making at the EBITDA level, which has led to a small fall in the overall consolidated numbers. This is into the B2B e-commerce space. They are going to expand the presence of the company from just South right out to North and West. And one key update that the company mentioned, that on a global level, Schaeffler has acquired Vitesco, and that also has a presence in India. So the management was questioned whether the Vitesco India subsidiary would be merged with the Schaeffler India. The management highlighted that they will be looking at it going forward because this is a very strong player in the EV tech power electronic space. So overall, the management did highlight a lot of good commentary based on the results. Q1 is generally of calendar year 25 generally slower, but positive commentary coming in. Back to you.
Fair enough, Puneet. Thank you so much for getting us all those details from the conference call and a lot of takeaways, in fact. Amrish, if this one is on your radar as well, what's your view here?
No, in fact, I've been tracking this stock for a while. I also have a recommendation because if you look at the sort of sectors, I mean, they support, automotive is a major one, but they're also there into cement, power transmission, mining, wind, agriculture, industrial automation. So they are providing services across. But going ahead, clearly the focus and the driver would be EVs and railways, especially Vande Bharat, like we just spoke some time back. I think these 2 would be the drivers going ahead. I mean, here, in fact, I mean, I have a EPS target for calendar year 25. I mean, they follow the calendar year, not the financial year. The calendar year 25 means December 25. The EPS expectation is about 110. And my target here is about 38.50.
Okay. 38.50 is the target for Schaeffler India, at least as far as Amrish is concerned. But we move on to the final technology company on our list, and that's Mphasis, which again reported a fairly steady, a quarter coming through. I reckon that at the moment, markets also like what the management had to say. Of course, we also spoke to the management earlier. Listen into a slice of that conversation.
We're very pleased with the fact that we've had a pretty decent Q4 from a sequential growth perspective, right? We delivered 2+% growth, led by 2 of our biggest verticals, BFS and TMT. And I think we called out for banking and tech to lead the recovery in the Q4 numbers. We were focused on recovery in the back half of FY24. It took a little bit longer, but I think we are very pleased with the way we've delivered that. There is early signs of at least some discretionary spend, shorter term deals, short burst, short duration projects. That's always very heartening to see. There are also some pickup in activity in pockets of banking that was quite muted last couple of years around capital markets. I wouldn't say that it's a roaring back to spend model yet, but definitely appetite is higher, and I think a little bit of that fatigue from overspending in 21 and 22 seems to have kind of gone away, and early signs of capital market opening up is definitely giving them comfort. Second, I think we're very pleased with the fact that what seemed to be a very big hype area around AI and Gen AI early part of calendar 23 is now actually converting into not just pipeline but also deals.
Okay, well, that's what the management of Mphasis has to say. And well, Amrish, this one has been on a little bit of a decline, but today it's seeing some sort of a recovery coming in on the back of earnings once again. Any view on Mphasis?
No, I mean, if you look at the management commentary, that's positive. Earnings have been decent. So since the stock had corrected decently well in the past couple of months, we can expect some bounce back. But whatever said and done, IT overall, there would be pressure because across most of the companies haven't done well, especially the bellwether companies. So I think there can be some bounce back, but don't really expect a huge move, at least in the short to medium term.
Okay. All right. Well, there you have it. That's the view on Mphasis coming in. And on that note, Amrish, going to take a moment to thank you for joining us and taking us through your views on the various stocks that we wanted to discuss on the show. I want to also very quickly address what's happening in the markets at the moment, it's largely flattish right now, still exactly where we left off about half an hour ago, and we haven't seen too much traction there either. As far as the bank nifty is concerned, as well, it's largely the same. And it is turning out to be a consolidation of sorts as far as this Friday's of trade is concerned. And as we move into another week, that is a new week next week, is going to be a truncated one, mind you, because we will have a holiday on the 1st of May. But this is not going to be without volatility, as we've spoken about and are anticipating. Something to keep an eye on. But on that note, we are out of time on this show. So don't go anywhere. It's a wrap on hot money, but lots more lined up on the other side. You're watching NDTV Profit.
As citizens, we must remember that voting is not only a privilege, but also our duty towards our nation. I, Akash Ori from the DLF Group, pledge to encourage my colleagues, their friends and family to vote for the government they believe in. This is the strength of our democracy.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some...
Thanks for tuning into Market IQ. I'm Neeraj Shah, and let's take stock of what IQ we can pick up from what the markets are showing us. Remember, some of the result boys are sulking and sulking big time. Of course, there are gainers as well, by the way. But let me start with the losers first, because the market is also a bit in the red. LTTS is the top loser, but the standout mover arguably has to be Bajaj Finance. It's down about 7.5%, and the market is not quite liked Q4 performance. A combination of that plus valuations being what they are, a serious punishment meted out to this one. Electra Green Tech is actually not done that badly. I would have thought that the punishment method would have been a lot higher because it's trading at fancy valuations, but it's down just about 3.5%. There is weakness in Vodafone Idea today, 1350. It's a bit of a pullback in that stock too in trade. What has done well? Well, Tech Mahindra obviously stands out as one of the key stocks, but that's not on the Nifty 500 the biggest gaining stock. It was at a point of time. Currently, that mantle goes to Hutco. Hutco is up about 12.3%. A lot of rumors flying around. I wouldn't want to quote them because it is a rumor after all, but the stock is up 12% on that. Zensar Tech has had some good moves, 9.5% or nearly 10% now for Zensar Tech. There is a bit of a pullback for Glenmark Life in the session, 7.5%. The one that catches my eye also is GMR Airports, 7% higher now at nearly 91 rupees per share. Now remember, for Tech Mahindra, it is not about what they delivered in Q4 or even what their commentary will be like or what their commentary is about what FY25 holds in store. For Tech Mahindra, it is about the commentary that the management has given for FY27. A bit of a vision presented by the new CEO Mohit Joshi on operational metrics, on growth terms, and that is what the street seems to have liked. Yes, you could argue that the stock is off from the highs of the day, but that's fine. That doesn't matter as much as the fact that the stock is up 8.5%, wherein most of the IT names that we've seen on results or post that haven't necessarily have had a really good outing. So that is the real big surprise when it comes to Tech Mahindra. I frankly was surprised with the kind of reaction that the stock has shown. What else? NLC commissioning 3 660 megawatt power projects. So I think that has done well too. So keep that in mind. EIH up about 5%, so not bad going for that one. While Indian Hotels has had a rough outing of sorts, EIH doing okay. Ahead of numbers, KPIT Technologies is doing well, 4.5% up for that one. Ashok Leyland is a buzzer, up about 4.5%. There is strength in Westlife Food. After a long time, you're seeing Westlife have a good price and volume day. And on both, it is doing reasonably okay relative to the 10-day averages. And Emphasis has done well for itself, up about 5% as Emphasis. I was of the opinion that the lower TCV could weigh in on the stock. The total contract value added by Emphasis, I thought would have weighed in on the stock, but quite contrary. It started off higher and stayed higher, so the assessment was completely wrong on my part, but the stock has done well. Must also say Vedanta stands out, and there are a couple of brokerages which have come out with their notes on Vedanta. One of them is Nuama, the second one is Citi. We have graphics for both, whichever we can play, we should, but the larger point is that in both cases, I think there is some traction that people are seeing in metal names. In Vedanta's case, Citi's note says that there are multiple developments that lead them to believe that Vedanta could actually do really well in the times to come. I think the target price though is not very high. I mean, it's 399. I think the target price was 415 or thereabouts from Citi's end. On Nuama's end, I think the target price was much higher, and that was the interesting piece when it came to Vedanta. Okay, what else? There is traction in Divi's Lab in the session today. I must say, for all the disappointments that Laurus Labs had early morning in trade, I think it's recovered a little bit of lost ground, has Laurus Labs too. It's up about 1.5% in the session today. Now, whether this is got to do with the Biosecure Act that the US is laying out, which might actually help some of these CDMO businesses, because the belief is that all the orders that were going to one geography, notably China, but independent of whether it's China or no, in order to expand the security, multiple other geographies could come into play, and India certainly features in the list of those. So watch out for some of these CDMO plays as well in the session today. DV's, Laurus, and Newland Labs, and a few others. Okay, it's time for getting a management on board. Q4 numbers for Welspun Living were out some time back. Revenues were up 20%. EBITDA expanded 28%, and there was a 100 basis points expansion in margin. Bottom line was flattish. I'm guessing below the operating line would have a couple of one-offs might have been there maybe. But on the revenue and the operational metrics, you can't really complain. And I think that is the conversation that we're going to have with Ms. Dipali Goenka. She's MD and CEO of Welspun Living, joins us right now on the show. Ms. Goenka, good having you. Thanks for taking the time out. Neeraj here, good afternoon. How do you sum up the quarter for Welspun Living?
So, I think I would say it's a very interesting quarter in the terms of what we were looking at, and I think it actually sets the tone for whatever we are looking at in the terms of a growth of 15,000 crores by 2027. So I think we are absolutely there. If I look at, we are at $1.2 billion annually, 2,615, this quarter, where 33% was the emerging businesses, that is advanced textiles, flooring, and domestic consumer business. We all know that, because of the Red Sea, there was a little aberration in the terms of freight, and hence the flooring saw a little blip that we saw even in the advanced textile. Domestic consumer business has been a little slow anyway with the sentiments in India. We all know how that is panning out, but that is a blip, I would say that. So having said that, we definitely are very, very clear on what we are going to be achieving this year in the terms of our emerging businesses that contributed 33%. We look at it contributing around 45% to the top line by 2027, and that's what is something that we are very, very encouraged about. And this year as well, the growth will be around 10 to 12%, and bottom line of around 15.5%. I think, Neeraj, I heard about you talking about the profit, and that has been a little flattish. I think that I must want to clarify. I want to clarify that is owing to the merger and also the whole, the amalgamation and about the subsidiaries tax that we took on this year in 2024. So that rate cut that we took is around 30%. With next year again will be around 26 to 27%. So I wanted to just clarify on that. So everything in that perspective is also intact.
Fair call. Now, Pray, tell me, I heard you say that the India domestic business has been, the fact that it didn't strike too many chords was probably a blip. I was of the opinion that Indian growth numbers should hopefully work better in FY25. And globally, when I look as well, Ms. Goenka, PMI numbers across various geographies are starting to pick up. Do you see that early signs or those early signs in demand for your businesses as well, or will it take some time to come, or does it usually take some time to happen?
No, I think it runs absolutely the way that the world works. I think it's all about discretionary spends, and I think it works very, very closely with the other consumptions that we're talking about. So I think, Neeraj, to your point, you know that United States of America, we're talking about a GDP mobilizing at around 2%, which is a little slow. The Fed rates you saw. They are at around 5 point, they cut down, but the interest rates are around 5.4%. And the inflation got a little higher in March, around 3.4%. If you look at Europe and UK, the inflation got a little lower comparatively. Bank of England is watching it very, very closely. India, again, we know we are at inflation of around, around 4.5%. But I think the whole idea that I must tell you is that the world is very, very dynamic at the moment. Some people are talking about USA in the terms of anticipation of recession. UK, Europe is uncertain. Middle East again, which has a GDP of around 3.7% consolidated, but the uncertainties of war prevailing is kind of a concern. But I think, however, having said that, I think post-COVID, the world hasn't been normal as it is. It is all about how we look at our businesses. So while saying that, United States consumes the largest consumption for home textiles. We feel very, very confident about United States of America, and rest of the world also. As we continue to grow, our share of shelf, not only in the terms of private label, in the terms of our licensed brands, in the terms of our hospitality, different product categories that we are talking about, and different channels as well. So I think for us, we are completely clued on to that as well.
Okay. Is this 12.5%, 13% growth? I'm not quoting you verbatim, but something around that, predicated on the world growth looking stable, or is this baking in not necessarily the most buoyant demand globally, but still you being able to clock in about 12%?
Neeraj, to the latter, and I think in this world of cautious optimism, dynamism, I think that's what we are looking at. And however, this year we clocked a 20% growth this year. So we are absolutely geared up for the growth, but however, a commitment towards that cautiously optimism is something that will prevail, because the world is no longer that stable state, as we know, and we all know that 65 countries this year are going in for elections. So that's again something to be also looked at, apart from any black swan event that might just come in. But we are very, very clear on this growth, and 12% growth that we're speaking about, our EBITDA of 15.5 and above. So yes, that's where we are, and we always continue to delight our stakeholders.
Ms. Goenka, a couple of things. So traditional businesses, newer businesses, it's a classic cocktail of a lot of things which could work. Where is it that you are most constructive on?
If you could clarify and articulate that further, Neeraj, that will be nice.
Okay, what I mean is that you have a line of business that you've gone on for years, then there are newer segments that you've introduced as well. You're probably going in newer geographies as well. When you look at the next 12 to 24 months, which of these segments are you more constructive on from a growth perspective?
So let me give you a complete global perspective here, and I think the world just look at the whole world map. Yeah, let me start with the United States of America. That's my, that is where we'll start off with. If I look at that part of the world, we are not only talking about the private labels in the terms of towel and sheets. Again, the fashion bedding, utility bedding, rugs, carpets, flooring we are talking about, the advanced textiles that we are talking about, hospitality that we are talking about, licensed brands that we are talking about, that we see will continue to grow, and we are looking at focusing on the share of shelf. Focus will also be on the discounters, because that's where we see the growth panning out in America as well. Now, when I talk about UK and Europe, the interesting thing, and I think I've shared that with you earlier as well, Neeraj, the licensed brands like what we acquire, what we are working with, with Disney in UK and Europe, I think is a huge opportunity to open up more doors in the terms of other parts of the countries like East Europe, like Poland and the others, apart from the other retailers that we're working with, like IKEA, and the Carrefours and the others as well. Having said that about UK and Europe, the rest of the world like Japan, New Zealand and Australia are very, very interesting geographies for us. That definitely is something that we already are working very, very closely with, not only in the terms of our home textiles, but also in flooring, and also the channels of hospitality as well. So yes, that's the way we are panning out. India, you already know, we have two brands, Spaces and Wellspun. And also flooring as a category, which actually grew this quarter by 40%, and also owing to the hospitality and the institutions, kind of segment. We are looking at the residential. We tapped around 2,500 AIDs last year, and we'll continue to grow that. So yes, this is the way we look at panning out. So yes, the share of shelf is something that we're going to be talking about, apart from just not the channels, apart from but the product categories, but also the licensed brands, our brands. I must give you an insight. Our Well Home brand that we have, which we launched online, actually grew by 100%, this year offline as well. So yes, there's a very interesting mix that is emerging in the terms of licensed brands, our influencer brands like the Creative Collab, our own brand that is moving from online to offline. Christie, I mean, let me not forget that. That grew 21% last year, and this year, and they are, on the track to achieve £50 million by 2027. A very strong D2C brand, not only in UK but also in Middle East, also growing in US and New Zealand and etc. as well.
Okay. Well, Ms. Goenka, we wish you all the best for that. I presume all of this will happen without any kind of major fundraising happening. So all the best for that and more. And thank you for talking to us, more importantly, today.
Thank you, Neeraj. Thank you.
Right, that's Dipali Goenka of Wellspun Living. Decent numbers, margins expand as well, and guiding to about a 15% growth on the EBITDA or the PAT level, if I'm not wrong, with a 12.5%, 13% growth on the revenue front. We need to slip into a quick break. Up next, a conversation with Nitin Shanbag on Alpha Strategist. He joins from Motilal Oswal Wealth.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your...
Let's talk about Alpha Strategist, a note that we talk with Motilal Oswal Wealth every month, and the note is titled Shifting Tides. In some sense, they gave an indication of this shifting tides in the first note, but that was about asset classes. Now they're observing a lot on equities. We have about 9 minutes. Let's get in. Sandeepan Roy, Chief Investment Officer, Motilal Oswal Private Wealth, and Nitin Shanbag, Head Investment Products at Motilal Oswal Private Wealth, to talk about this. Gentlemen, both of you, thanks for joining in. Interesting that you observe what a few people have spoken about, but with adequate numbers, gentlemen, about how the quarter was, particularly on the breadth and the nature of the stocks that have moved. What were the key insights here? Either of you can start.
So maybe I'll go out. If you look at the way the year has panned out, fiscal year 2024, and if we take the top 500 stocks, which is the Nifty 500 universe, we find that almost 90% of this universe was delivering positive returns in the first quarter, which is between April to June 2023. And by the time we got to Jan, February, March, we had only 50% of the stock universe which was actually delivering positive returns, right? As we tapered off towards the end of the year, we found that it was predominantly the large cap universe which continued to do well in terms of positive returns, whereas a whole host of stocks, almost 60 to 70% of the universe within mid cap and small caps started generating negative returns. So that was one insight that we took in terms of the breadth of the rally, right? The second insight was the performance of these market caps throughout the year. So if you look at fiscal year 2024, the markets kind of topped out around end of January, early February 2024. And during that time period, obviously mid and small caps did extremely well. And perhaps half that universe actually gave more than 50% return. 20% of that universe actually doubled But when we look at the last 2 months, which is February and March, again, we find a similar story where 70% of the large cap universe was actually positive. But about 2/3 of the mid and small cap universe actually gave negative returns. In fact, 20% of that universe actually fell more than 15%. So these are the two predominant areas in which we saw a shift in tides, and that's why we've even titled it that way.
Yeah, no, so
yeah, please carry on.
Yeah, no, so what we have been talking about from the beginning of the year has been that mid and small cap is where we are seeing some bit of froth building up. And hence staggering investments is what we had been recommending, not knowing that there will be some regulatory interventions also, apart from the market fatigue that naturally builds up. While large cap is where we had been saying that you should go into a lump sum, and that has been kind of vindicated, albeit it's a short-term period. But the thing is that we remain structurally bullish on the markets. The earnings growth will drive the markets, but yes, some bit of focus has to come back on picking up stocks as the breadth is really narrowing.
I wonder though, I mean, when I look at page number 10 of your presentation, you guys talk about the valuations relative to forwards, and yes, the mid cap P relative to the Nifty P 10-year averages as well, substantially at a premium, but not so much for the small cap end, right? So prudent to say that maybe there could be pain valuation if valuations were to correct and the mid cap end, but not necessarily in the small cap universe, or that's not the correct way to read it?
See, in many ways, small caps is also a function of liquidity, right? And given the the low float that is available within the market, right? Valuations there matter quite a lot more than they would in the mid cap side, right? For many reasons, the mid cap stocks have also not corrected as much because it's a defined universe of 150 stocks as per the SEBI categorization. The small cap is a fairly broad universe. So rather than looking at the index per se, what we are trying to say is that it would be best to focus on quality names, and hence mid and small caps from an investment perspective now onwards needs to be far more bottom up in nature. And we are saying that for select strategies, both in mid cap as well as small cap, given where we stand currently in terms of valuations, it would be preferable to stagger your investments out over a period of the next 6 to 12 months.
Also, in small cap index, I think it is not fully correct to look at the EPS earnings of the index. You will notice that even in the graphs that we have shown, there are spikes both on the upside and on the downside when the index constituents get changed, or there are earnings revisions on a back-ended basis that happen. So not always the earnings on the index gives a correct indication, and hence we need to look at stock-wise and not just on the index. Large caps, again, as we have emphasized on, the valuations are actually lower than in the last 10 years average, and the earnings growths have been quite positive, and we are quite optimistic on the earnings growth. So the PEG ratios, which is something that we have been tracking very closely, that remains very attractive for the large caps.
Okay, fair point too. Just one final question, and that is around the sector rotation. Now, is this, to your mind, something that will always happen in a cycle, wherein at some point of time when the cycle has run its course, there will be a shift of hats and the underperformers will start outperforming? Or are there some specific reasons why this is happening to some of the sectors this time around?
We believe that sector rotation is always part and parcel of any market cycle. In fact, market cycles are actually starting to get shorter. And that's purely on account of the dissemination of information, the efficiency that we have with the advent of social media channels, so on and so forth. So just to mention that point, over the last fiscal, some of the sectors which otherwise did not participate in the early half of the rally have started to participate in the last quarter, predominantly your banks, NBFCs, auto and healthcare. And a couple of sectors which actually were performing in the initial phase, like power and infrastructure, have started to lag. At the same time, two sectors distinctly have maintained pace. The first amongst them is real estate. And Neeraj, you would remember that we've been fairly constructive on that space for the last 6 months to a year, and the other has been capital goods, because now we actually see the advent of the capital capex cycle coming into place, and it's a long gestation cycle, but these are two areas where we continue to remain fairly bullish.
At the same time, some of the laggards have continued to remain laggards. Banks per se, have not yet caught up. So while there should be a catch-up rally at some point, where the entire market rebases, I think this cycle it's all about growth, be it on the earnings growth, be it on the order book growth. So given that animal spirits, I think sectors where we don't see too much of earnings growth momentum, I think will continue to remain laggards for fundamental and liquid reasons. Yeah.
Gentlemen, a very small conversation on what is always a very interesting monthly note. We'll make amends the next time. We'll have to wrap it up on this show today, though. Thanks so much, both of you, for joining in.
Thank you.
All right. And viewers, thanks for tuning in.
As citizens, we must remember that voting is not only a privilege, but also our duty towards our nation. I, Akash Ori from the DLF Group, pledge to encourage my colleagues, their friends and family to vote for the government they believe in. This is the strength of our democracy.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty.
Benchmarks start May series on a choppy note. Sensex trades below 74,100 while Nifty trades at 22,500. And Tech Mahindra gains over 10% post reporting a significant rise in fourth quarter profits. On the other hand, slow growth in rural business haunts Bajaj Finance, stock in red. More earnings on the block. HCL Tech, Maruti and SBI Life are set to report their March quarter numbers today. Lok Sabha election enters phase 2. All eyes on Wayanad as Rahul Gandhi set to battle CPI's Annie Raja and BJP's Surendran. The Supreme Court rejects petition seeking verification of votes cast on EVMs using the VVPAT, issues several directions on the electronic voting machines and symbol units. Hello and welcome. You're tuned into Market IQ. I'm Smriti Chaudhary, and this show is all about adding market IQ based on the markets and, of course, the national and international news. We'll also have a management joining us pretty soon. But let's start off with where the markets are currently at. You have the Nifty 50 index, bit of a chop and churn day. It's in red now, down about 0.3% rather. So a bit of a negative bias there. That has changed. We started on a positive note, continued that for a while, but now in the negative. Let's also look at some of the sectors that are doing well in trade. You have the Nifty IT up over 1.2%, a good day for IT. On an overall basis, you have the media sector doing very well in trade today as well. You have metals up about 0.3%. PSU, bank and auto both in the red. Bank also, Nifty Bank mostly flat right now, but with a negative bias. You have Nifty consumption also flattish, but with a negative bias. Let's also pull up the breadth of the market and see what's happening there. You can see that that sort of contraction happening. You have about 1100 stocks in advancing, while about a little bit of a chop and churn. Started off very well, big difference, but that seems to be closing on now. Let's look at some of the Nifty 50 contributors as well and see what's pulling the index down and what's gaining. You have something like a Tata Tech doing very well for the Nifty 50 index as well. It's contributing 13 points to the index. You have HDFC Bank doing very well, Axis Bank also doing very well on the back of results. However, on the losing end, you have Bajaj Finance losing ground today. You have Shriram Finance, L&T, M&M, all in the red today. But as promised earlier, we have a management joining in. We have the Baheji Ghaurpade of Sandur Manganese and Iron Ore joining in today on the show. Thank you so much, sir, for joining in and for taking the time out. The first question is obviously about the acquisition that you've just made. If you can take us through the rationale behind this acquisition and how will this sort of benefit the company going forward?
Good afternoon, Smriti. Thank you for having me on this call. It's a very special occasion for us and a milestone. We, the Sandur Manganese and Iron Ores Limited, have been in existence almost for 7 decades and been a merchant miner and also into metallurgical products. And we have been mining iron ore and manganese ore for a long period of time, and recently we've also got our production enhancement to enhance the capacities to significant levels. That is 4.5 million ton of iron ore and about 500,000 ton of manganese ore. And also parallelly, we have been established in the metallurgical space where we have been manufacturing ferroalloys and coke for quite some time, and we have been looking out for options. How do we integrate our raw material capability into the finished product capability? That's how we were exploring option, and this acquisition has come as a breath of fresh air, where it integrates and synergizes our strength being in the raw material and metal space, and we move into a space where the acquisition, which is the largest steel private limited, which has been very strongly established in the specialty steel space in the country. So it synergizes and comes together well for us from the long-term perspective of our vision.
Right, Mr. Khopade, if you can tell us about the top line contribution that this will make. Now, from what I understand, it's going to take about 7 months for this acquisition to get completed. But after that, maybe from FY26, we're going to see this sort of impact in the financials. And also, if you can tell us how this transaction is being financed.
See, currently the turnover of the company, the RGS is about 2,700 to 2,800 crore, and the advantage that this company will have is the raw material which would be fed from the Sandur region, and for us it integrates that very well. At the same time, as per our press release, you would have seen that it is valued at an enterprise value of about 3,000 crores. So we are looking to finance it through debt and internal accruals also.
All right. Thank you so much, Mr. Khopade, for joining us and for answering questions for us.
Thank you.
Thank you. Now let's go back to markets now. Let's pull up Tech Mahindra. It's a day for Tech Mahindra. It came out with its fourth quarter earnings. It's up about 8% right now, off the day's high for sure. But now, even though earnings were slightly weak, however, what's impressing the market seems like that it's the management commentary. And for that, we have Rucha joining in to tell us more about what the management said during the con call.
Tech Mahindra reported its results last evening. While the numbers were quite in line with the estimates, what is interesting is the 3-year turnaround strategy given by the new CEO Mohit Joshi. Now here are 4 key highlights from the turnaround strategy. The company expects to report a revenue higher than its industry peers over the next couple of quarters until FY27. Now in terms of EBIT margin, they also aim to clock a more than 15% EBIT margin by FY27 from the current levels of 6.5%. In terms of ROCE, the company aims to clock a 30% target for the return on capital employed. And lastly, in terms of capital return to the shareholders, it aims to give out 85% of the free cash flow to the shareholders in terms of dividends or buyback.
Thanks, Rucha, for that. Let's also switch focus to L&T Tech, another IT company, and it also came out with its numbers, but doing not so great in trade today, down about 8%. Now, the quarter grew sequentially, but boosted by seasonality in smart world and communication business. But listen to what the management had to say about it.
So if I look at the quarter gone by, 5.1% constant currency growth quarter on quarter sequentially, amongst the best we've had in the last few quarters, number one. Number two, 17.9% growth in constant currency, getting us to a $1.2 billion run rate, where we were $1 billion less than 12 months ago. So I do believe, all in all, I think the teams have done amazingly well this year, given the climate that it was. Multiple $10 million plus deals. In fact, if I was to reel off, we've been able to close a $100 million deal this particular year. We've been able to also get in multiple $20 million, $30 million deals, and $10 million deals. So all in all, pipeline stronger than last year, and stronger than last quarter. So we do believe that as we move forward, we will see traction continuing to improve. Again, knock on wood, and we are of course being cautiously optimistic.
Well, what's also getting a beating in the markets is Bajaj Finance. The shares down 8%. Now, this comes on the back of fourth quarter numbers. The company reported a 21% rise in profits while its asset quality improved. But Harsh is joining in to tell us what is that's not impressing the markets here.
What you're actually seeing is numbers broadly in line with what estimates were, but the disappointment has come with regard to the commentary. 4 key pieces, we'll try to break that down. 26 to 28% FY25 growth number, that's what has been given as a guidance. But what Bajaj Finance has done in FY24 is 34% growth. So essentially they've trimmed down growth estimates by quite a bit for FY25. One led by their rural B2C business, which is facing some problems with regard to asset quality, but that's just 6% of the business. And therefore that number seems to be putting investors off. The other piece is also with regard to its customer count. Customer count has grown by around 1.4 crore customers plus in FY24 itself, but they've given a 1.2 to 1.4 crore customer count increase for FY25. That's the guidance they've put out. That's below 20%. They've never done below 20% in terms of customer count. So that's the other piece which is a bit of a put off. The third piece is with regard to asset quality. Now, their credit cost for FY24 was roughly 160 to 165 basis points, 1.6 to 1.65%. Now they've guided for a 1.75 to 1.85% credit cost guidance. While this is normalized, but nonetheless, it's put the street off with regard to credit costs. Last off, it's with regard to margins and profitability. Now, margins have already shrunk in FY24. A further shrink is expected in FY25 by 30 to 40 bips. What the company is saying is they're doing more secured business, which will shrink margins and impact margins and therefore impact profitability. Will the metrics really change significantly as a result of this? Of course, need to wait and watch in FY25, but that's what the guidance says, which is putting off investors.
Thanks, Harsh, for that. It's time to slip into a short break, but don't go anywhere. We have lots more lined up on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching Market IQ. Now, an important update for all the WhatsApp users. Meta's messaging platform will leave India if it is made to break encryption of messages. That is what WhatsApp has told Delhi High Court in a case challenging the amended IT rules. My colleague Charu joins in to tell us more about that. Charu, do tell us what more is there on this case.
Hi Smriti. So whenever we use WhatsApp, we come across a notification saying that our messages are end-to-end encrypted. Now, this gives us a sense of privacy. What happened in 2021 was that WhatsApp came up with a new privacy policy which said that some of the data will be used by other meta platforms, including Instagram and Facebook. This led the users to use other platforms in place of WhatsApp. And apart from this, in 2021, another thing happened that the government came up with the new IT rules. These new IT rules require a messaging platform to basically divulge information about where a message originated, who was the first sender of a particular message, if there has been a judicial order by the court or a competent authority regarding this matter. Now, what happened was that WhatsApp was going through the litigation about these same cases when it submitted before the court that if it is made to break the encryption of the messages that are being sent on the platform, it would lead to privacy issues and the platform will not be able to sustain by itself in India if this practice goes on. That is why they have basically challenged these new 2021 IT rules. Now, the court is still hearing the matter and the next date of hearing has been set to August 14. That's all we have for now. We'll keep you updated if something else comes up.
Charu, for that, another Supreme Court case. As India votes in the second phase of Lok Sabha elections, we bring you the... Okay, we'll shift focus to elections now. My colleague Varun has now joined in to tell us about another Supreme Court case. Now, this is on the control units, ballot units and VVPATs that may be verified by the engineers of the manufacturing companies. That is only if a candidate makes this request within 7 days of declaration of results. Varun, what do you have on this?
Yeah, hi, thanks. So yeah, the Supreme Court has rejected a batch of petitions seeking 100% cross-verification of votes polled in the electronic voting machines or EVMs with voter verifiable paper audit trail paper slips or VVPAT slips. Now, the court has also rejected the idea of going back to the paper ballot system as well as the idea of handing over the VVPAT slips to the voter for verification. However, the court has issued two significant directions in a bid to strengthen the existing voting system. Firstly, it has said that the symbol loading unit or the SLU, which is a unit that uploads the symbol and the name of the candidate on the VVPAT slip, will have to be sealed and kept in a strong room along with all the other EVMs for at least 45 days after the election results are announced. Secondly, candidates who are at positions 2 and 3 behind the highest polled candidate can seek verification of 5% of EVMs per assembly segment of a constituency. Now, a team of engineers from the EVM manufacturers will have to carry out this exercise, and this request should be made within 7 days of declaration of the results. After the verification is complete, the candidate seeking the verification will have to bear the expenses. However, the expense will be refunded if the EVMs are found to be tampered with. Lastly, the court noted that while a balanced perspective is important, blindly doubting a system can breed unwarranted skepticism and impede progress. It said that a critical constructive approach guided by evidence and reason must be followed to ensure meaningful improvements in the system.
All right, thank you, Varun, for that. Let's talk about the elections now. As India votes in the second phase of Lok Sabha elections 2024, we bring you ground reports from all across the country. Remember, the country is polling on 88 seats today, spanning across 13 states. Key constituencies include Mathura and Wayanad. As of 11 a.m. today, the voter turnout stands at 25% on an overall basis. Now, let's go to some reports from the polling stations itself. Firstly, let's go over to Uma, who's in Thiruvananthapuram. Uma, how's it looking like there?
Okay, the Rajiv Chandrasekhar camp certainly also very, very upbeat and claiming that they are bringing new energy to this entire election, and they in fact have a campaign line that suggests that the work will begin now, suggesting as though no work has happened in the last few years or the last few terms of the Shashi Tharoor being member of parliament from Thiruvananthapuram. Of course, the third person in the frame is Pannian Ravindran, who is the CPI candidate from here. But yes, enthusiasm pretty good among the voters here, though one of the poll observers at the station in fact said that 25% or 27% till about 11 a.m. is quite low, and he would expect it to be a little higher. Otherwise, voting percentage usually has been good in Thiruvananthapuram as well as in Kerala. 73% plus is what it was last time round. First time voter here and also a senior citizen here who's come in to vote. What is your enthusiasm about voting? You're excited, looking forward to it?
Yes, looking forward.
So did you do any analysis of what the politics is, or did you follow what your friends are saying, social media or parents?
No, it's my decision.
Your own decision. Okay, their own decision, but the good part is that these young voters are coming out and voting. You have about 2.77 crore voters here, out of which about 5.7 lakh are in fact the first time voters in Kerala, and that is where this state, which is in fact otherwise always tossed between UDF and the LDF, now having a third force to contend with, and some people talking about it as the change that they are looking forward for, whereas the critics of the BJP point out that demographically or political history would suggest that the BJP will find it difficult to win a seat here. The Rajiv Chandrasekhar camp was your question, and just a short while ago I met a leader of the BJP here, and he showed me a statistic that suggested that 41% of the vote share here and 45% of the vote share, he says, according to the poll, is going to go to the BJP. Critics of the BJP are skeptical about that. Back to you.
Now let's also take a look at Noida. Vedant joins us from there. Vedant, how's the voting enthusiasm looking like there?
I come to you from the interior-most village of Gautam Budh Nagar, also known as Noida. And, you know, this particular constituency is as much about the rural areas as about the urban areas. Because remember, 70% of the population here in Noida actually lives in rural areas. And they've gathered in huge numbers. It's a kind of a celebration there. They're discussing, there are refreshments available for them as well. In fact, a senior citizen here as well who just cast her vote. And remember, the caste arithmetic in these rural areas is very important as the dynamics in the urban center that Noida is. Now remember, here the big sort of political development that we've seen in the past couple of days is the fact that the Thakurs of the Gautam Budh Nagar area, they've held various Mahapanchayats. They seem to be disillusioned, so remains to be seen where they sway. The Thakurs are a crucial vote bank here. Meanwhile, the BSP this time, there's a third player in that. The BSP has made the contest really interesting because remember, last time it was part of the opposition alliance. This time it is going it alone. So it is hoping for a consolidation of the SC plus the Muslim vote. So that caste arithmetic also extremely crucial. And in the urban centers that we've been reporting from, remember there the key issue is that of the home buyers and the issue of maintenance or the lack of maintenance thereof in high-rise buildings. So of course these are some crucial issues. In fact, there was a poll boycott call as well, and these high-rise buildings of Noida, they say that till the time their houses are registered, till the time they get their rights as owners, as home buyers, they will not cast their votes. Of course, these are some of the key issues, and this time it's a doctor versus doctor contest here in Noida. You have Dr. Mahendra Singh Nagar, BJP, the joint SP Congress candidate in the fray against BJP strongman Dr. Mahesh Sharma, who of course has been an MP for the past 2 times. He is eyeing a third term here. So high stakes battle certainly here in Noida. The caste arithmetic crucial. Also the issue of home buyers center stage. And at the same time, the BSP, the third player now in the fray, how that influences the entire poll battle here, that will be interesting to watch out for. In Gautam Budh Nagar with camera person Sushil Rathi, Vedant for NDTV.
Thanks, Vedant, for that. Let's switch focus to another IT name that's in focus, which is Mphasis. It's up about 4% on the back of results. Largely, it missed Street's estimates, but seems like it's still on a trot. Now, let's listen in to the top brass talking about the fourth quarter earnings and more. Here's a slice of that conversation.
So I think firstly, we're very pleased with the fact that we've had a pretty decent Q4 from a sequential growth perspective. Right, we delivered 2+% growth, led by two of our biggest verticals, BFS and TMT. And I think we'd called out for banking and tech to lead the recovery in the Q4 numbers. We were focused on recovery in the back half of FY24. It took a little bit longer, but I think we are very pleased with the way we've delivered that. There is early signs of at least some discretionary spend, shorter term deals, short burst, short duration projects. That's always very heartening to see. There are also some pickup in activity in pockets of banking that was quite muted last couple of years around capital markets. I wouldn't say that it's a roaring back to spend model yet, but definitely appetite is higher, and I think a little bit of that fatigue from overspending in 21 and 22 seems to have kind of gone away, and early signs of capital market opening up is definitely giving them comfort. Second, I think we're very pleased with the fact that what seemed to be a very big hype area around AI and Gen AI early part of calendar 23 is now actually converting into not just pipeline but also deals. So opening up a lot of new pockets of spend. How do you embrace tech to take cost out? How do you embrace tech to transform operations, customer experience, developer productivity, compliance monitoring, KYC? So lots and lots of real, credible, tangible deal constructs that are not just being talked about, but actually are in the pipeline and are in the wins. And I think that opens up a whole new addressable market for us. So we're very pleased with that as we go forward. The fact that these shorter term deals are showing some revival also gives us a little bit more confidence on revenue recovery, because a lot of these deals can be consumed within the year versus having a long duration deal where ramp up takes 6 to 9 months. We've seen better conversion of previously sold TCV to revenue as well this quarter, so that also helped the overall book of business for us. I think the TCV number is a little bit muted, driven partly by the fact that there is a bunching up of deals that happened early in the year. And secondly, this the 0 to 10 million deal category has actually been the highest TCV number for us in a few quarters in Q4. But on the flip side, that gives us confidence from a revenue growth standpoint as well. So I think overall pretty pleased with the way the team executed in a still tough macro environment, because uncertainty and creates inaction still underplay. Lots of countervailing forces between macro and inflation and interest rates and geopolitics. But the focus has really been on the micro and just driven by in-account actions, wallet share gains, and moving very aggressively into these new tech areas. Also pleased with the margin performance, and Manish can talk a little bit more about that.
That was the management of Mphasis, and that's all that we have on this edition of Market IQ, but lots more lined up on NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Inheritance. It is a word that is deeply complicated, and not just that, it's also a topic that is uncomfortable to talk about. And that's probably because we're uncomfortable with the idea of our own mortality. And for those that are inheriting, we're uncomfortable with the idea that our parents may not be with us, will not be with us forever. I'm Alex Matthew, and this is Big Decisions on NDTV Profit. And on today's episode, we're going to talk about this very key issue. But we're going to focus on the rights of the woman. Because in conversations that we've had leading up to this episode, we've discovered some deeply troubling stories. In fact, we spoke to a few young women, and these are some of the things that they had to say.
So I'm very well aware about the inheritance law, but I don't think any of my dad's property will come to me because, that's exactly how it has been happening over the years. My mom never asked for it. My boy never asked for it. So ultimately, it's like a thing that, dad's property goes to your brother.
My father had passed away a few years ago, and my extended family is thinking of selling off our ancestral land. My uncle, from my father's side, pointed out to me that since I'm a daughter, I don't have a share in the ancestral property, like my brother does.
My father tried to ensure my financial security by making a will, but because there wasn't really any proper phrasing of the will due to inadequate assistance, there were a lot of dual conditions, and it led to a lot of the will's condition being declared void in the court. So most of the assets went to my brother.
So I have a brother with two siblings, and my brother and his wife used to live with our parents in our ancestral home. Now both my parents have passed, and I have been wanting to move back to my ancestral home or at least visit, but my brother and his wife will not allow it because they say that since it's an ancestral home, it doesn't belong to me. I don't inherit it, and I don't know if I can even challenge it.
I'd like to break this up into two parts. In the first part, we'll talk about the legal rights of the inheritor with a focus on the woman. And in the second part, we'll talk to you about what you need to know from the financial planning perspective. Joining me now is Bijal Ajinkya, partner at Khaitan & Co. Bijal, thanks so much for taking the time.
Most welcome.
Why is this such a complicated, troublesome, uncomfortable conversation?
So I would say that you have the law on one side, which I would say is extremely progressive, and our law has always provided for rights for a woman, be it you a daughter, a wife, or for that matter a mother. However, from a societal perspective, a daughter or a woman is always seen as someone that, as we've always said, pariah. So, after she's married, she belongs to the husband's family, and to that extent, from a legacy perspective, it is always the son who's actually going to take over. And I would say that it's interesting that Indian families, more often than not, they somewhere believe that from a philosophical as well as a spiritual perspective, talking about death is something which is like really bad. And even as, even for the inheritor, really to talk about, their parents not really being there or the in-laws not really being there becomes a very tricky situation.
Because what are you implying?
Absolutely. Are you implying that, I want something, or are you really looking at a situation wherein, you are ready to actually move on? So it becomes a very tricky conversation. However, it's interesting to really see that the law has been progressive, and to that extent, it's only wherein the society on the whole needs to be progressive. And really knowing women's rights is an important situation.
So let's talk about the law, and let's talk about how it treats men and women. Is there a difference in the eyes of the law between a man and a woman when it comes to inheritance?
So I would say that, when you're looking at a daughter or a son, right, for that matter, you look at the Hindu Succession Act, we look at the Indian Succession Act, they've always provided for the son and the daughter to actually take in equally. It was only in the year 2005, vis-a-vis ancestral or co-partnership property, wherein a daughter was considered an equal co-partner to a son.
Can you explain this in very simple terms? We're talking about ancestral property. Would that be something that not your father but your grandfather or someone before him?
That's correct.
Or your grandmother at that?
Yeah.
Basically your father's or your mother's parents built something and it passed on, and that becomes ancestral.
Absolutely. So, when you're looking at a situation like in India, it's very common to do joint businesses as a family unit as a whole. So you don't really look at that, okay, this is my brother, this is my sister. And you've had situations in grandparents' generation, between the, 3 or 4 brothers, they would be doing a joint business. And there was never really a demarcation as to whether this asset which you have invested really belongs to you. It was all considered as one unit in itself. You never saw like your brother as a different family. And to that extent, something like that which is passing on through generations is considered as joint family property, or for that matter, ancestral property.
Okay, so it's not just a building, it can be assets, it can be various
It can be anything. It could be business, it could be a building. Currently, given the fact that there is so much of, old constructions really coming down and new ones really coming up, you do see a number of legal documents seeing the rounds, because today no builder wants to pick up a building which has actually a family dispute sitting within it.
Right.
So to that extent, you would be taking the approval of all the co-partners, and now with the change in law.
So just of this is a legal term that is used, but how do you describe a co-partner? What is that?
So a co-partner is a person who belongs to a family. It's of course more dealt with in Hindu law, and to that extent, if at all your father could either set up a property and call it as a joint Hindu family property, and in which case post 2005 the daughter and the son actually taken equally. If it was prior to 2005, it was different. However, with the Supreme Court decision, irrespective of when the co-partnery property was set up, so long as the father or the grandfather decided that this is now a common hodgepodge to be meant for the benefit of the entire family in itself, to that extent, it is considered as co-partnery property.
Okay, so what that means is that even if, and suppose, let me give you a hypothetical situation. It's me and my sister, and my father has decided that this ancestral property he wants to distribute or he wants to give through a will to his son. It can be challenged by my sister because the law states that she should have an equal share.
That is correct.
Okay.
That is correct. And which is where you are seeing a lot of situations where families, because they want to be extremely clear on succession, and obviously in a situation where both son and daughter are married and they do have their own families, it becomes very difficult if at all that particular co-partnery is actually running a business, right? So to that extent, we are seeing a number of situations where families are looking at a partition of these Hindu undivided family. So you're partitioning it out, and not necessarily from the perspective that you don't want your daughter to actually benefit. It's more from the perspective of bringing in that clarity vis-a-vis what the son and what the daughter are really inheriting.
Let's talk about issues that you have come across, and of course we've laid out some of those aspects, and I think you pointed out a very important part at the start, which is that the law provides a certain set of rules, but then society looks at these things differently. I'm sure over the course of your career you've come up with, or you've come across several instances that will help us, help our listeners and viewers understand this concept of inheritance. What, according to you, is the most startling case that you've come across?
Well, I would say, many, and of course, it really depends on, it really differs from family to family. If we're looking at, daughters' rights in itself, we've seen situations where, let's assume, the daughter is living in India and the, son is outside of India, and perhaps the daughter is the one who's really looking after the parents in itself, may not be necessarily living with them. We've seen situations where the daughter has actually moved all the assets to her name, leaving actually her son high and dry. Her brother high and dry, right? So you've seen both of those situations. And I would also say cases wherein, especially in a joint business, wherein you do have a larger family in the mix. In a situation where, and this would be more important in business families, like if the wife is not really a working person in the family business, she may really be looking after the home and really building up the personal family in itself, which is a very, very important job. And in a situation where, let's assume her husband passes, then in that case, often we've seen situations where the wife is absolutely clueless of the family assets in itself. And to that extent, extremely important for families to really consider, creating a register of assets and liabilities, because we've often known, some creditors who were absolutely, unaware to the family in itself, really pop up when somebody passes away. So to that extent, whether it's a business family and creating some level of, asset base for the spouse becomes extremely important. When you're looking at, daughters in itself, very important to consider that, it could be a situation wherein the daughter feels uncomfortable really asking about it. Not necessarily she is in the best of financial position herself, but she just feels, an emotional bond to her family, wherein she feels that if I ask this question, is there going to be a second guess about my real intentions? However, I would say that most families today are really looking at it clearly, getting their children, on the table, explaining to them what their real wishes are, and to that extent, really looking at a division of assets which really best suits the family needs.
So we will talk about what the ideal situation is, and there are a few anecdotal cases that we've come across, and we'll delve into some of those as well, because that I think will help clear the air for a few people who might be wondering a few things. We have to slip into a very quick break though. Do stay tuned. We'll be back on the other side with a lot more.
As an Indian citizen, it is not only my birthright, but it is my duty to vote. I urge every Indian citizen to exercise their voting right and elect a government which meets our hope and aspiration. I can assure you that I and my associate in Wokat will exercise their voting franchise.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines.
Welcome back. On Big Decisions so far, we've spoken about a few broad details of the law pertaining to inheritance. But there are a few cases that we came across, anecdotal cases that are quite troubling, to say the very least. And I'd like to ask Bijal about how to deal with certain situations like this, because I think that they would be representative of cases that a lot of other people might be facing. So Bijal, I'd like to start with the first one, which is that there is no will that was made. The parents have passed, but the brother and his wife are living in a property. The sister is not allowed to enter, and she does not know whether she has a right to that property. How does one deal with a situation like this?
Sure. So one, I would say that given the fact that the parents passed without a will, most important to note that the sister does have an equal right as the son in the property. Now it is very common that you may not actually have a will. However, what is important to note that for the transition of assets or the transmission of assets from the parent's name to the child's name, even if at all it is the son, they would require a letters of administration or a succession certificate from the court. Now, when you apply to the court for a succession certificate or a letters of administration, it is extremely important for the person who's actually making the application to get a no objection from the heirs of the parents.
Right.
And these are heirs who are heirs under succession laws. So it doesn't matter even if they had a will and they had actually put in someone's name. Let's assume they had put in the son's name. Even then, the daughter actually has, needs to be asked for a no objection to go ahead with the execution procedure.
Even if there's a will?
Even if there is a will.
Okay.
Now, that is her first point in call, wherein she can essentially say that I object, I really want to actually see the will, or if there is no will, if you claim that there is no will, then in that situation, under law, we both inherit in equal proportions.
Right. But in several cases, I would assume that people simply don't go for that process in court and they continue to live in a property. In that situation, what is the recourse?
I would say in that situation, the most common recourse to really undertake is the fact of you actually going to the society and filing a letter there to essentially say that, look, we are equal owners and I would also like to assert my right. If at all the sister would like to, she can actually go to the courts in a petition to say that I would like to also live there and I want a partition of this particular property to be undertaken.
But it's a complicated situation.
I would say it's definitely complicated, but it does get her brother to actually come down on the table and negotiate it as such. Because the easiest thing for the sister to really get is an interim order from a court. That's not really difficult, and in which case the brother could be asked that, okay, we're going to keep it status quo, but you will not be allowed to live in the property, which is the worst which they could really get.
Right.
Yeah, so in most situations, and I think what is important here is for the daughter to be aware of what the properties are.
Sure.
Now, she may just be aware of this real estate. Now, it's important for her to know as to whether the real estate has actually been gifted by the parents to the son in their lifetime. If it has, then of course, there is nothing which she can really do about it, unless of course she can challenge the fact that this gift was made under a duress.
Okay.
But it would require a lot actually to be seen as evidence, because how do you really prove that somebody is forced?
Sure.
So unless there are letters to really show that, my parents are mistreating me, your parents are mistreating me, but I don't have a choice but to live with your brother, etc. Unless there is something like that, it does become extremely tricky.
Okay. But post the fact, you have legal recourse, and we've discussed that. The other one has to do with ancestral land, in which case the uncle is saying, as a daughter, you do not have access or you do not have rights to ancestral property. That is patently false.
Absolutely. Given the fact that her father would have been a part of that particular ancestral wealth, a daughter takes equally as the son from the share of her father itself. So to that extent, the share of in their ancestral property, which the father may have inherited himself, right? Because from his father or his own grandfather, the daughter herself does have an inherent right in it. Now, of course, in a situation where that particular property is going in for a redevelopment, etc., very important to note that the daughter's signatures would be required to be actually taken before the hammer is actually put on the building.
Again, a no objection certificate.
Absolutely.
But in that case, even if there's a no objection certificate, she would still have a right to the developed property.
So it really depends on how that particular agreement for redevelopment is undertaken. So more often than not, it's really a no objection come a family settlement.
Sure.
In which case, she does need to read the fine print to understand as to what she is giving up and what she is getting in return.
Is it better to seek legal help in these situations?
Definitely, definitely, because more often than not that these documents are a little complicated, and if she is really giving her no objection, the question is, what is she really getting in return? If she says it's for nil consideration, right, which is where I don't want anything, then she's totally out. But if at all it's a situation, you will often see situations where they will actually pay her an amount and say that now in the redeveloped building we are going to be getting X number of flats, and in those X number of flats only these particular family members have a right. Now that's all put up in that particular agreement. In the family settlement itself, so it's important, for her to read the fine print.
Okay. The third case that I want to discuss is the absence of a will, and this is slightly complicated because what was pointed out is that the parents were split, but they were not divorced.
Okay.
The mother passed. The flat was in the name of the mother, and the daughter does not know what her rights are in this situation. My interpretation as a layperson is that both the father as well as the daughter had right to the property. So how do you proceed with that?
Yes. So I would say here, given the fact that the parents are separated and they are not really divorced, when a woman passes away, under most laws, the husband as well as the children inherit. Now there may be differences in the ratio of distribution depending on the law which that the woman is actually subjected to.
Can you explain why that is, or what the nuances of that are?
Yeah. So as an example, if you're looking at say a Hindu law, or if we are looking at the Indian Succession Act, in that case, the husband and the children, they all inherit in the woman's property in equal proportion.
Okay.
If we are looking at the Islamic law on succession,
Sharia law, right.
The Sharia law, then in that situation, there are variant grades because it's a very interesting law wherein they are providing for the larger family itself.
Okay.
So, the mother, her parents or her husband, her children's children, each of them get a particular share. So it's not really equal, but they do have a specific ratio. So depending on whatever, religious faith the mother really belonged to, that would really, take care of a succession. However, having said that, the fact is that the daughter as well as the husband, in spite of him being separated, they both have an entitlement in the absence of her having a will. And the question is that how does she really know the assets, and that's something for her to really understand the assets which were there, looking at her last balance sheet filed.
Sure.
You have income tax returns which are really filed, or of course the family accountant or well-wisher who's actually kept a list of those assets.
Okay. How important is a will? In the situations that you have seen, one would think that it's of paramount importance, right? How complicated is it if you don't have a will, in your experience?
Okay, so it's very interesting to really see that when you have a will, you have a way.
Right.
Right.
Okay.
So whether it's a contest or it's a pure succession. Now, in a situation where you have a will, I think the beauty really is that you very clearly carved out the succession vis-a-vis each of your inheritors.
Sure.
When you don't really have a will, it's going by the succession law, and to that extent, irrespective of what the asset is, it's just going to be divided amongst the inheritors. Now let us take an example of a home. Right? You don't want a situation wherein you have like a married son, a married daughter, the wife all living in, having a claim on that particular property.
Correct.
So the beauty of a will is that you can very clearly carve out that, okay, this particular property, I would like it to be for my wife or to be, after my wife, maybe for my children in equal proportions. I may want them to sell the property so that, there is no dispute, because finally, what is it which your family wants, right? You're not really looking at passing on wealth, you're really looking at passing on a legacy of values.
Yes.
And to that extent, if you do want your son and daughter to actually, have that relationship post the parents' lifetime, very, very important for there to be absolute clarity on the distribution of assets.
Let's talk about the last aspect, which is once a will has been received and you're trying to execute this. I've heard, again, anecdotal evidence that this can also be a painful process, that getting the probate Is that what it's called?
That's right.
From the court, so that is the approval of the court.
That's correct.
Can be time consuming.
Yeah, so it can be time consuming of around 6 months, 6 to 9 months, and of course we are assuming it's a situation of no contest by the real heirs under succession laws, or it could be a situation that you've taken a will to a court, but the person who's deceased, who's called a testator, he's actually written a subsequent will, right? So the reason of a probate is really giving a stamp of authority that yes, this is the final will of that particular deceased and it's ready for an execution. Now, whichever way we really look at it, whether you have a will, you will go in for a probate. If you don't have a will, then in that situation, like if the person who's passed away has lived in, say, Bombay, Calcutta or Chennai, these are the presidential towns, and a succession certificate or letters of administration is compulsory in these particular jurisdictions for the transmission of assets. If you are living in a place outside of these 3 presidential towns, then in that situation, if the value of the property is high, then any of those, like if it's a shares of a company or a society's, where apartment which we are transmitting, they, for their own good housekeeping, will actually want you to approach, say, the Delhi High Court or whichever, in order to actually ensure that there is no dispute and the company or the society is not dragged into a family dispute.
Fair point. I think we've delved into a lot of very important subjects today, but at the same time, because this is such a complicated issue, Bijal, I'm sure that people will have questions. So what I will say is that though this conversation, this very important and lovely conversation, has drawn to a close, if my viewers and listeners have questions, they can send them to us on any one of our social media platforms, and we'll try and get Bijal to answer them at a later date. Bijal, thank you so much for taking the time.
Most welcome. Thank you.
It's been an absolute pleasure bringing you this episode of Big Decisions. Like I said, if you've got questions for us, send them to us on any one of our social media platforms, and do stay tuned. We'll be bringing you a lot more content just like this over the course of the coming weeks. This is NDTV Profit.
As citizens, we must remember that voting is not only a privilege, but also our duty towards our nation. I, Akash Ori from the DLF Group, pledge to encourage my colleagues, their friends and family to vote for the government they believe in. This is the strength of our democracy.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
As an Indian citizen, it is not only my birthright, but it is my duty to vote. I urge every Indian citizen to exercise their voting right and elect a government which meets our hope and aspiration. I can assure you that I and my associate in Vocard will exercise their voting franchise.
Hello and welcome. This is Large Trades. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade, largely on account of volumes, bulk deals and block deals. But before that, a quick look at how the markets are faring at the moment. And what we are observing at the moment is, a quiet Friday afternoon. What really has happened, however, is that the Nifty has very quietly slid under the radar and will move below the mark of a loss of the 0.5%. Now, it's lost out about 100 points at the moment, and this can no longer be called a day of marginal losses at the moment, as we slip below the mark of 22,500 as well, which of course is perhaps a tad perplexing for those who are long in the market. Let's pull up the Bank Nifty. Let's see whether or not that weakness has seeped in there as well, and it has. So we are well away from the mark of 48,500, a level that we were seeing the Bank Nifty test earlier on in the session, and it did in fact. And since then, we have seen a little bit of a correction coming through there as well. Let's talk about the constituents of the Nifty. Has something really dramatically changed there? We do have Bajaj Finance, which is actually countering quite a bit of the strength. So Bajaj Finance, L&T, ICICI Bank, all weighing down on the indices, and at the moment, while you have about roughly 190 odd points on the decline, to counter that, you only have about 45 odd points, which are on the up move. So a lot of that will be on account of Tech Mahindra, and of course to a certain extent ITC and thereabouts. But on the whole, it's turning out to be a subdued Friday, to say the least, as far as your benchmarks go. What about the broader markets? Let's pull that up as well. In terms of the broader markets, they are still continuing to outperform. The mid-cap index continues to move up around 0.7%. The small-cap index as well has continued to advance by around 0.6%. So the outperformance of both the mid-cap and the small caps continue with respect to your benchmark indices like the Nifty, at least in this financial year. I know we've not seen more than 26 days in this financial year, but gains all the same, and it's a continuation of the trend that we've seen in the last year as well. So the small cap and the mid cap indices doing well. Let's also take a look at which of these counters, in fact, from these indices are actually advancing up and about. And we do have a lot of counters which are reacting to earnings. A lot of the counters which are actually doing well on account of their quarterly updates coming through, where we have seen a substantial beat in a handful of these names as well. Of course, there will also be counters on the flip side, which will be under pressure. If you just consider the mid-cap 100, the biggest loser on that one is LTTS, that's L&T Technology Services. And if I'm not mistaken, it's trading near day's lows. Okay, so it started off on a weak note, and that's exactly where it is trading at right now, and it's lost out nearly 8% at the moment. We have Supreme Industries, which is also under pressure. That's down around 3.6%, and then we have something like a Sona BLW. That's down around 2.9% as well. We have a reversal of sorts in GMR Airports, an interesting counter at the moment. What we are seeing is up around 7%, and Biocon has now picked up steam by quite a mile. This is up 7% as well. And let's not forget, Container Corp is now starting to rear its head. Concor is also up around 6%, followed by Bank of Maharashtra. Bank of Maharashtra, of course, is moving largely on account of the earnings coming through. So keep an eye on that one as well. Well, along with that, let's address the list of stocks that we want to take up in this edition of Last Trades. So, right at the top, we have Coromandel. We will also address Zensar Tech and Harsha Engineering. And besides that, we're talking about Mrs. Bector Food from the FMCG space. We can't not take LTTS. And of course, UTI AMC is also buzzing on volumes. We've had earnings from there as well. With that, let's take the first stock on our radar. That's Coromandel International. Let's get in Varsha to tell us what the pros and cons are, and perhaps what are those pros which are working in favor of Coromandel. Varsha.
Well, thanks Agam for that. So yes, for Coromandel International, volumes are trading over 4x of its 30-day average. In fact, stock has seen an intraday high of 7%. Now, if you see the results, yesterday they did posted results for Q4 FY24. The results were poor results, weak results, but Street was expecting very bad results versus what they've posted, and this is the reason we are seeing spike in this in the stock price. Now, just if you see, the revenue is down 28%, while EBITDA was flat at 7%, and net profit was down 33%. Now, the key highlights of the earnings were that they are facing challenging business environment as subnormal monsoons and lower reservoir levels in Coromandel's key operating markets have impacted agri inputs consumption. Now, also sharp correction in subsidy rates in H2 FY24 coupled with global headwinds in crop protection resulted their margin pressure. Now, let's see what's good in the company. So one thing is the fertilizer plants have operated at higher capacity of almost 95% levels, and they've improved their backward integration capabilities as well. The crop protection registered 20% volume growth across international and domestic market. Now, they are planning to introduce new molecules through captive and in-licensing arrangements, and their retail store improved its farm level outreach, and it's expanding its footprint in new markets in FY25. Now, company has also scaled up their drone spraying services, and during the year covered almost 25,000 plus acres. And company is diversifying their business by entering into specialty chemicals by leveraging its existing infrastructure and continue its engagement in CDMO opportunities. And their investment in drone company Daksha is actually progressing well with a strong order book of around 250 crores from defense and agriculture segment. And going forward, the forecast of an above normal monsoon and correction in the NBS rates bodes well for the industry, and they expect the market fundamentals to improve in the coming quarters. So this is all we have on Coromandel International.
Right, Varsha, thank you so much for joining us and taking us through the numbers. And remember, as Varsha has pointed out, that the earnings were weak for the particular quarter. In fact, we're looking at a revenue decline, a net profit decline of both 28% and 33% respectively. But Varsha, towards the end, has mentioned about the factors that could potentially work in favor of the company, and that's the reason why we are looking at volumes buzzing there, and it's up around 6.3%. Besides the fact that they are diversifying, of course, margins and operations will be other to keep an eye on. But from there on, let's move on and talk about the FMCG company, which is also on our radar. We have Mahima, who's joining us to tell us more about that. Mahima, what's buzzing here?
Right, Agam. So Mrs. Bector's is buzzing in trade today. Now, this is because there's an analyst meet that is going to take place today, and because of that, the volumes are around 5 times its 30-day average, and it did touch an intraday high of almost 10.5%. Now, in terms of what the company is doing in terms of expansion, they've recently started a new bakery in NCR. They've added 2 lines in Rajpura, and they're now planning a new bakery unit in Mumbai, which will be in Mumbai, and then one more in Indore. Further capex in terms of expansion plans, they are planning further expansion of around 500 odd crores in Rajpura, Kolkata and Indore. And in terms of product innovation, they're focusing more towards premiumization, and because this particular segment is contributing around 34 to 35% to the total revenues of Mrs. Bector's, and they've just to augment premiumization, they've also introduced new products like Bake Fit, millet cookies, and multigrain breads. But they've also said that Bake Walk concept is focused on something which is new and which is going to scale up Mrs. Bector's sales in the coming quarters. And they've also planned to start a Bake Best subsidiary near Khopoli, which will cater to the western part of the country. In terms of exports, they've also posted a good amount of growth in terms of their export in Q3, and going forward Q4 numbers will tell us how the exports have fared out to be. But so far this is all we have on Bector's phone.
Fair enough, Mahima. Thank you so much for joining us and taking us through all that we can look forward to. Of course, that meet will also be an important one to keep an eye on. Mrs. Bector has actually done very well for itself as well in terms of the stock price movement. If you pull up the last 12 months, you'll notice that it has in fact, gifted shareholders with a significant amount of return over the course of the time. There you have it. That's the return coming in. It's done well. But let's move on and talk and about the next company which is on our radar, and this one is from the IT space. We have Puneet who's joining us to tell us about what's buzzing behind Zensar Technologies. Puneet.
Yeah, thanks for that, Agam. So among all the IT companies that are buzzing today, most of them, this is on the positive side. Zensar Technologies buzzing on the back of its Q4 numbers. Volumes are at roughly 14 times its 30-day average, while it has hit an intraday high of roughly 12% today in trade. The revenues were up roughly 2 to 3%, as well as the EBIT margins coming at down 6 basis points compared to the previous year, previous quarter. While the net profit basis, the returns were roughly 7% up at 173 crores on a net profit basis. Now, the key trigger of the stock is basically a re-rating play. There, among other highlights of the revenue as well as other financial highlights, they mentioned that their CFO Sachin has quit, but they've also hired a CEO and a CBO to drive their business growth. Now, the brokerages have a very interesting take. So, IDBI on Zensar Tech, they have a hold rating with a target price of roughly 615 rupees per share, which is a 7% upside from current levels. They see that revenue growth, the terms were due to a reversal of furloughs, but utilization has improved 300 basis points on a quarter-on-quarter level. They are expecting roughly 5 and 13% revenue growth for the next 2 financial years, while they've also revised their margin guidance for FY25, which is upwards of 34 basis points and 32 basis points for the next 2 financial years. They see that the leading to this and maintenance of an EPS is despite lowering of their revenue estimates, and the key trigger according to them for another re-rating from these levels will be sustaining growth for the next few quarters. On the other hand, Nirmal Bang is not so positive on Zensar Tech. They have a sell and they are retaining the sell target with a target price of 526 rupees per share, which is a 9% downside. Now, they see that the EBIT margin, although it was better by 120 basis points, it's significantly lower due to significantly lower depreciation cost of roughly 110 basis points reported by the company. They see that the new CEO primarily is focusing on sorting out the EBIT margin, but it is not going to be very easy. Growth has been a problem for everyone in the IT sector, and Zensar is no different. And they are not so very clear if the worst of the high-tech vertical, which is a key revenue contributor for Zensar, is behind. Finally, they see that multiple investments going forward in the next financial year will compress margins by roughly 180 basis points. And the only one positive trigger that they see is the healthcare and investments, which is roughly 10% of revenue, where the new CEO has come from. Previously, he was there in this vertical at Infosys. So the stock price, if you see in the past 1 year, it's up 129%, despite not so much of revenue growth, but diverse views coming from brokerages on Zensar Tech. Back to you.
Okay, Puneet, thank you so much for getting us that comprehensive look on what Zensar has done the quarter gone by, as well as what we can expect going forward. Of course, the broking notes have also provided us with a good amount of insight. advancing by around 9.2% at the moment, and we will keep an eye on this one as well. But from there on, we move on to Harsha Engineering. Let's get in Anushi to talk to us about why this one is also up and about. Anushi.
Right, Agam. So if you're looking at Harsha Engineers, definitely quite some volume action over here, about 11 times the volume compared to its 30-day average, while the stock has seen about a 11% of an intraday gain in today's trading session itself. Again, no major fundamental drivers or newsmakers that is driving this kind of stock performance, but let's just discuss what has happened over the course of this fiscal year itself. Now, if you had to look at the company's background, it holds about a 6.5% of a global market share in the bearing brass, steel and polyamide cages market business, while its production facilities are majorly situated in India, China and Romania. So again, if you have to look at the overall performance of the company, kind of weak numbers over here, revenue down about 0.8%, almost flat over here, while the margins shifted down to 13% compared to 15% it had clocked in last year. If you have to look at PAT also, that's about 18% of a decline overall. A couple of reasons as to why this kind of performance we are seeing. Now, industry bearing cage demand continues to be weak, which has led to an inventory build-up and again leading to some of a decline in revenue over here. Also, the implementation, but what we can look for is the commencement of the implementation of the first capex plan of its new greenfield site, which is expected in the Q3 of FY25. But overall, if you have to look going forward in FY25, we are seeing Prabhudas Leeladhar being quite positive on this company, expecting a turnaround in the business. They cite a turnaround in their Romania and China business, and while the Japanese business offtake had been lower, they are expecting that also to pick up going forward in FY25. The bronze business, bushing business, again remains on a watch out as to if there are signs of improvement over here. If you have to look at the stock performance of the company, 1 month the stock has seen about a 20% of a gain, which if we compare it to its 6 month and 1 year return, kind of muted over here. If you have to look at 1 year, just about a 4% gain. So now the stock has started showing signs of recovery. It's just we have to see whether this term is long term or not. So that's all on Harsha Engineering that we are seeing for today.
Fair enough, Anushi. Thank you so much for getting us that update on Harsha Engineering. Another one of those relatively smaller companies which have recently listed but have shown a lot of spark, and of course that's also evident today as well, up around 7.5%. Well, on that note, we slip into a short break, but on the other side, we get you a conversation with Som Distilleries. Stay tuned in and we'll be back in just a bit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money,
Welcome back to Large Trades. Well, we are taking stock of Som Distilleries. The companies, of course, come up with its earnings. We're in a conversation with Mr. J.K. Arora, CMD of Som Distilleries and Breweries. Mr. Arora, good afternoon. Thank you so much for joining in and taking the time out. Well, it's another eventful quarter for you. Can you take us through how you see things pan out there?
Yeah, it is a quite satisfying quarter because for the beginning of the year, we have given the guidance of about 1,000 crore against the performance of the 800 crores for the last year. But by the middle of the year, we revised it to 1,100 crores. And by the end of this thing in the last quarter, people were saying is looking to the growth. It is looking better. So can we expect 1,200 crores? I said for sure. And then finally we closed it at 1,286, almost 1,300 crores. This thing. So from 800 crore to 1,300 crore, I think it's quite satisfying. Top line, bottom line, EBITDA, PBT, all the parameters in comparison to our other peers of the industry. I think it's probably the best performance of all the beer companies in India.
Mr. Arora, Mahima joining this side. I just want to understand in terms of, number of cases sold and volumes for Q4, if you can give us some color on that.
You see, we are roughly 60% have more growth, this thing, in terms of this thing. And we got about 20 million cases sale for this year, which is 60% up over the last year. So what we took the decision, timely decision of the expansions and the capacity expansions and all that has paid the dividend. So you see, we had if you remember, we had the expansion in the March 23, and then we took another expansion in the April 23, and which we closed in this March. So 2 years consecutive expansions have given us the result in Karnataka. Same thing we did for Madhya Pradesh. So these both plants are the biggest beer plant in the country. Is this thing. You see what we are serving in Karnataka from one plant, our peers are serving it from the 3 plants. So this timely decision of the capacity expansions, this thing again, yesterday's board meeting, we took the decision to expand our Odisha plant from taking 6 million capacity to 10 million. Is another, I would say, leap in the capacity, and this will give of course, this will come by the end of this financial year, but for the next financial year, this will be again another big milestone.
So, Mr. Arora, then with all these capacity expansions taking place, where do you think will your revenues go by the end of FY25? Right now, 1,200 odd crores. From 1,200 odd crores, where do you see the figure going then?
We surely we can hope more than 1,600 crores, but as of now we are busy in having finalizing the budgets for this financial year, and most of the data has come, which we are processing, and preliminary we are definitely more than 1,600 crores. But I think my personal view is we are having probably more than that, maybe 1,700 crores or maybe more. This thing we would be able to announce maybe in the first week of May or so.
Okay. And in terms of margins, because your margins have taken a slight hit from 11% to 10%, where do you expect your margins to go by the end of FY25?
You see, the margins have the direct relevance with the investment in beer bottles. If you put up an industry, it takes 200 crores investment. But in that industry, providing the new bottles takes the 250 crores more investment. So this year, because of the expansions in the Karnataka plant and the Madhya Pradesh plant, we had to invest a lot much in the beer bottles. So that investments, that some sort of capex, we will get the advantage this year. But against the last year of 12.8, we got EBITDA is 12.07 this year. It's a minor this thing, but the major investment made in the bottles will give the dividend this year. So I think the margins would be better. And this 12% EBITDA in comparison to our peers is a quite handsome EBITDA.
Okay. All right, Mr. Arora, we'll leave it at that. Thank you so much for joining us and taking us through the quarter's earnings as well as what we can expect. Also thanking my colleague Mahima to join us and lead this conversation here with us. Well, that's as far as... pardon me for that. That's as far as Som Distilleries is concerned. But we continue to track large trades. And let's talk about LTTS now. Let's get in my colleague Rucha to tell us more about this one. Rucha.
Thanks, Agam. So LTTS reported its results yesterday. While the volumes are at 9.5 times its 30-day average, the stock hit an intraday low of 9.5%. While the numbers were largely in line with the estimates, what disappointed the street is the FY25 guidance. The management guided for a 8 to 10% revenue growth in CC terms for the next year. Now, looking at the FY25 CC revenue growth, it was at around 7%. So, the guidance implies around a flat revenue growth for the next year. Now, this guidance factors in the delayed decision making, geopolitical risks and macro uncertainty. Now, lastly, on margins, investment in people and technology will also weigh on the margins in the coming quarters, and the first quarter is expected to be muted, followed by a recovery of growth during the end of the financial year.
Thank you so much for getting us that update on LTTS, which is a very interesting counter at the moment, because what's really happened is that, just a few days ago, it was in fact trying to make an attempt and make a new life high, but it has since come off by quite a bit. Of course, at the moment, a lot of analysts are of the opinion that they would likely see LTTS somewhere around 4,200, 4,300 is where they might be interested in buying it, but certainly not at the levels of even slightly below 4,800 rupees per share. We'll continue to keep an eye on this one as well, but we move on to the final stock that we want to address in the show today. That's UTI AMC. We have Kanika now, who's joining us to give us an update on this one. Kanika.
Right, Agam. So, UTI Asset Management has been buzzing in trade today with an intraday high of almost rupees 1,005 and its volumes trading at 8.5 times its 30-day average. Now, this is on the back of its earnings, and its revenue rose 38% year on year, which mainly rose on the back of sale of services rising 18% year on year. Now, its EBITDA also rose 87% and its net profit was up 111%. Now, few key reasons for this is because the importance given to SIP for its AUM performance, and passive funds also witnessed a 39% year-on-year growth. Now, improvement was also observed in the performance of schemes, which led to a healthy AUM. And the group's AUM increased by 19% year-on-year, and additionally, its SIP gross inflows for quarter 4 stood at 1,772 crore, which grew by 3.7% year-on-year. Now, the company had declared an overall final dividend of rupees 47 per share in FY24, of which rupees 23 per share is declared as special dividend.
Okay, Kanika, thank you so much for getting us the latest on UTI AMC. A lot more details with respect to their client proportions at the moment, which is expected to grow going forward. But with that, we are completely out of time on this edition of Large Trades. But on the other side, we get you India market close. Don't go anywhere. You're watching NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty.
Corrective is how you would call the afternoon in trade today, because the Nifty has pulled back a little bit, but it is not still diffused the enthusiasm at the broader end of the spectrum, you have to admit. So more than 0.5%, over 0.5% off for the Nifty 50, for the mid caps and small caps, still holding out. The market breadth still in favor of the advances. Look at that, 0.65% for the small cap index as well. And the advance decline ratio will come up on your screen. Started off really well, has narrowed down quite considerably, but still in favor of the greens. India VIX, very quickly before we get to the specific stocks on the Nifty 50, and volatility has largely been ebbed. And in today's session too, nothing dramatic. I mean, at 11, 10.5, 11 won't make too much of a difference. Marginal rise, but lying very, very flat. Bring up the Nifty heat map and show you what's moving, what's not. A bit more red than how we started off. As you can see, a lot more dominant is the red color now relative to the green, but specific stocks have done well, as they would, of course. So Bajaj Finance, I think financials have taken a bit of a backseat. The surprise was IndusInd Bank, really down about 3%. But aside of that, Kotak continues to fall, another 2% gone there. Bajaj Finserv, Bajaj Finance, post-result corrections seen there. Shriram Finance down about 4.5%. So clearly, financials have taken a hit. And you see in the top 10 gainers, there is not a single bank or NBFC in the green. So that's the key point. So financials have taken a hit. SBI, HDFC Life, lending, non-lending, everything is down. What's doing well? Tech Mahindra, 8%. A bit of a lone ranger, I must say. I mean, maybe coupled with LTI. It's not that every other IT name is doing well, but Divi's is the surprise mover, 4% higher. And I dare say some of those names, the CDMO companies, have actually done well in the session today because Laurus, after not such a great rara call, too, I think recovered from the lows of the day. And maybe doing okay. But Tamanna, the broader end of the spectrum still holding fort.
Relatively, yes, but I would say a bout of, and I like the term you use, corrective action coming in there as well compared to how it was through the day. Mid caps are okay. Small caps as well, but yes, a bit of pressure compared to what the market was like, say, a couple of hours ago. Nevertheless, you are seeing, and let's just quickly pull up indices as well before we go into the specific stocks that we're focusing on this afternoon and are making news to see what has really hurt. It is the finance pack. This afternoon is all about Bajaj Finance, which has hurt the market, and you see that in bank, in finance, metal, all of these indices not doing too well. I think Tech M is standalone, really sparkling on the IT ends of things. But let's look at specific stocks. L&T Tech has, had a rough day, and that continues to be in pressure, about 8% down. L&T Tech, disappointing results, and that hit continues. Can I not talk about Spark? Difficult, considering the kind of downward momentum that stock has had consistently. Hutco is the interesting one. Now, a lot of rumors swirling. Let me make it very clear that there's no clear announcement so far, but a lot of rumors that they might be venturing from housing financing to infra financing. Maybe that's what's moving the stock on the street, about 12% up on Hutco. Zensar and UTI AMC, I would put in the category of good results being rewarded by the street. 8.5% up on a Zensar. UTI AMC also had a decent set of numbers, at least on the face of it. The internals up to some questioning perhaps, but 4.5% up on UTI AMC. Piccadilly Agro, I found, was an interesting move. No real visible fresh news flow today. The Indri maker had already done fairly well, but good volumes, and the stock up about 5% there. NLC is the other one that I'll talk about. So this news came in earlier today. The company is commissioning a thermal power plant in Uttar Pradesh. The coal ministry has also approved their coal block, the Pachwara South coal block, with an estimated capital cost of over 2,200 crore rupees. So 6.5% on NLC. But a lot of other, I think, counters in focus as well.
But the big breaking news on our screen, sources tell my colleague, okay, big exclusive, NDTV Profit exclusive. Let me qualify it first. It's the big NDTV Profit exclusive. GQG is likely to have bought into Vodafone Idea's block trade today. Smriti Johnson with more details. Smriti, what are you gathering?
Well, yes, there was a block trade today in Vodafone Idea. It seems like ATC, American Tower Company, is the seller in this deal. They held about 2.8% stake in the company, and this is a clean-out deal. So that means they've sold all their stake. It's sold at about 12.7 rupees a share. So the total deal value is somewhere close to 1,800 to 2,000 crores. Now, GQG may be the likely buyer into this deal. Now, remember, GQG had also subscribed to Vodafone Idea's FPO through the anchor book. They had got an allocation of about 25% of the total anchor book, and now 1,800 crores more into Vodafone Idea. And also remember that American Tower Company a month or so back converted its optionally convertible debentures to equity. So that was at about 1,440 crore, and their stake had come to 2.9% into the company after that conversion. And now they have exited Vodafone Idea, and GQG has increased its stake through this deal.
Okay, thanks for that, Smriti. Smriti, just throwing this out of the dark at you, but any handle? I mean, what? So GQG bought in the FPO. If they add this as well, that's a large stake than they collectively have in Vodafone then.
Definitely. If you look at the number of, look at the stake that they had, it's about 1,300 crore before and about 2,000 crore now. So wow, over and above 4,500.
That's a large number as well. Okay, Smriti, thanks for putting that into perspective. Vodafone Idea is a bit subdued in trade today, but let's see whether it stays that way post this becoming official. Though, Rajiv Jain is has now made it evident that he likes things related to India infrastructure. Started off with the whole purchases that they did in the Adani group and continued to do. Yeah. But then JSW Energy, GMR Airports. You can argue that telecom is a part of infrastructure as well, because Vodafone is a large bet in the FPO, and if this is true, which seems to be the case, then that as well. So he's clearly putting money into India and into everything related to infrastructure.
I think the jury is still out on what exactly has happened with Vodafone, Neeraj, as we are seeing in terms of, is this FPO and I would say the successful closing of this FPO a turning point in the whole history of Vodafone? And GQG, for one end, is very clear where they stand on that debate, that they are betting positively on Vodafone, that it can sort of come out of that complete dead end that they were stuck in and move forward. Look at over the week, what has happened to that? Okay, about 4% up over the week, but the gyrations, the up and down and the turbulence in that stock is really the story. Even today, you had, it was 8% down at one point. And just let's pull up the intraday chart as well. on Vodafone and the kind of day that they have been having. So Vodafone, one stock in focus, but many others to talk about. Tech Mahindra stock of the day, we'll be talking about that as well. Bajaj Finance, what has been happening there? And that seems to have pulled down the entire market really, and bad mood. They're 8% down on a Bajaj Finance. Why is there such concern with numbers that on the face of it were in line? We'll talk about all of that. But meanwhile, Soni Patnaik of JM Financial Services with us today. G. Chokalingam of Economics Research joining us on the show. Welcome to both of you. Great as always to have you on. Soni, let's begin with your call on the indices. Nifty and Bank Nifty.
Hey, good afternoon, Tamana. Thank you so much for having me on the show. So I think Nifty, it has approached crucial support levels of 22,400, 22,350. In fact, this could be the range where it sees a bounce back. Not much upside, from here, although 22,600. There's a resistance, a minor resistance around 22,600 plus minus 20 points you can take. The moment it crosses that resistance, you can see it going further northwards towards 22,800 level. So I think it's a good, good support right now just to enter and initiate a longs for a short-term trading perspective, keeping a stop loss of 22,250 and a target of 22,600 as a first target. If once it crosses the resistance, you can see 22,800 also coming in. Talking about Bank Nifty is just at its support, very strong. It has also seen good rollovers on the short squeeze side. So I think, the shorts are just getting squeezed out of Bank Nifty system, and 48,000 is acting as a very strong support. So keeping a stop loss of 48,000 from short-term perspective, one can just enter longs at current level, and a target of 48,600, 49,000 can again be seen in Bank Nifty.
And let's just get your picks of this afternoon, Soni. What are your top bets?
So the first would be in City Union Bank. We're seeing a fresh breakout in City Union Bank above 160 plus. You can see very good positions getting added to it on the longer side. So from current levels, one can buy, keeping a stop loss of 158 and a target of 166 and 170 as the targets. So it's a first pick. The second pick can be in DLF. DLF, real estate. We've seen good rollovers taking place from the April to March, May series, and it is also giving a good option chain breakout above 900. So from current levels, one can buy DLF, keeping a stop loss of 895 and a target of 930.
Okay, G. Chokalingam joins us as well on the fundamentals. Mr. Chokalingam, thanks for joining in. At the outset, two things that want to talk to you. Shriram Finance, the numbers that have come out, PAT is up about 49%, but it's slightly below what the Bloomberg estimates were. Similarly on the other aspects too. And the stock, after having corrected 4%, has bounced back because the street seems to like the growth here. What is your sense about this one if you track Shriram Finance?
Yeah, I used to track, quite intensively. It never failed on medium to long-term growth at all. And also the stock is not as costly as some of the peers in the industry like Bajaj Finance. So therefore, I would suggest that one can hold. If there is any further correction, one can add Shriram Finance.
So this 49% growth is something that enthuses you? Or do these numbers leave a bit to be desired? You'd be happy with the growth numbers? They are, mind you, it's 49% growth, but slightly below what Bloomberg was estimating.
Yeah, but I normally do not worry much about being below industry estimate. But absolute growth is definitely very impressive compared to many banks and NBFCs.
Okay. Mr. Chokalingam, the other question is on Vodafone Idea. We've just broken this story. It's an NDTV Profit exclusive that GQG likely is a buyer on the Vodafone Idea stake that ATC would have sold out, likely. Now, that's a marquee name now showing evident interest, but it's not just GQG. A clutch of other money bags have put in the money there in the Vodafone FPO as well. Do you like what's happening with Vodafone Idea?
I have analyzed it. There are two issues which are bothering me. One is that if you look at EV to EBITDA, it is substantial premium to leaders like Bharti Airtel, so which I am not able to understand. And second, after all this dilution of equity, the size of the equity would be more than the annual sales. So which means as and when it turns around, the EPS would be few paisa. So still one can hold on tactically because a lot of powerful institutions are buying the stock. So tactical opportunity could be there. Even fundamentally, if at all either the stakeholder or the lenders decide to restructure the balance sheet in terms of contracting the size of the debt or equity, then it can give a phenomenal return. Otherwise, I do not expect significant return from Vodafone.
Okay, so that's the interesting thing. I mean, Neeraj, I think every analyst we've spoken to in the last 3 days has been ambivalent on going out and saying great things are going to happen in Vodafone. We should ask Rajiv Jain.
Yeah, I was about to say that.
Because he's putting his money where his mouth is, or at least, action more than talk. He's putting his money in and he's betting on Vodafone.
And a lot of money.
And a lot of money. No chump change there. All right, the other stock this afternoon, and I would say stock of the day is TechM. What's happened with TechM today is also, I think, underlines once again something you see very often. Sometimes it's not just about the numbers you see, it's about the confidence that the management exudes. And I think with Tech Mahindra, it's about their Mohit Joshi's outlook on what he sees happening, what his plan is, and how he's going to sort of turn around the company, because the numbers weren't great. Guidance was there, fine, but what really brings faith in that guidance? That really is the question. But nevertheless, Rucha has all the details of what it was from that positive commentary that has the street so excited.
Tech Mahindra reported its results last evening. While the numbers were quite in line with the estimates, what is interesting is the 3-year turnaround strategy given by the new CEO Mohit Joshi. Now here are 4 key highlights from the turnaround strategy. The company expects to to report a revenue higher than its industry peers over the next couple of quarters until FY27. Now in terms of EBIT margin, they also aim to clock a more than 15% EBIT margin by FY27 from the current levels of 6.5%. In terms of ROCE, the company aims to clock a 30% target for the return on capital employed. And lastly, in terms of capital return to the shareholders, it aims to give out 85% of the free cash flow to the shareholders in terms of dividends or buyback.
All right, so TechM is an interesting story there. G. Chokalingam, how did you react when you saw the opening on TechM, and did you really feel that kind of comfort with the management's guidance and the outlook?
No, I've been tracking, Mr. Anand Mahindra, entire good company. Definitely, there is a lot of respect for whatever they say, but despite that, I have my own doubt because the whole industry is growing in dollar term anywhere from 2 to 3%. The IT service exports. And this company also has seen about 6% fall in the revenue on year-on-year basis, that in rupee term. And if you look at the profit before tax, it is down about 38% year-on-year. So when the industry headwinds are there, and the company also, relatively performing much below the peers, I am a bit surprised, to see their confidence. I hope they become right, but I find it very difficult to accept this level of confidence and reward the stock 8% higher after such a poor results.
So that kind of I would say careful reading of it is not something that the street has seen. The stock is up, yeah, you're right, 8% without a real great set of numbers, but confidence, maybe time being given to the new top boss to really make some of those things happen. Soni Patnaik, your take on a TechM, would you book profits at this level, or do you see more scope?
Tamana, from the entire derivative view, we can see that the technology sector has seen quite weak rollovers. This is the second series in a row. Although today it did cross above 1300, but it's not able to sustain, and the closing is also coming below 1300. So until and unless it does not recross 1300, 1310 from current levels, and just show that sustenance above those resistance, it'll be a sell on rise kind of a stock, and it can retest its lowest levels, lower support levels of 1250, 1220 at the moment. So one may just avoid buying into the stock and just wait for the resistance to cross. On the other hand, if somebody has to go short from current levels, can keep a stop loss of 1300 and a target of 1250, 1220 can be seen.
All right, that's the call on a Tech M. Time for a very quick break, but I think if we had two contenders for stock of the day, Tech M would be at one end and Bajaj Finance on the other. What has upset the street about Bajaj Finance when the numbers are on the face of it in line? Why is 7-8% down today? We come back with all of those details after the break.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching India Market Close. All right, let's talk about Bajaj Finance. So Bajaj Finance numbers seemed largely in line. And if you looked at what the brokerage note said this morning before markets opened, it was fairly positive considering that despite regulatory pressure that came in last quarter with the RBI's rules impacting Bajaj Finance in various ways, they had still done fairly decently. Despite that, post-reporting its Q4 numbers, you've seen the stock really crack today and a fair bit. Harsh joins us with the reasons why.
What you're actually seeing is numbers broadly in line with what estimates were, but the disappointment has come with regard to the commentary. 4 key pieces, we'll try to break that down. 26 to 28% FY25 growth number, that's what has been given as a guidance. But what Bajaj Finance has done in FY24 is 34% growth. So essentially they've trimmed down growth estimates by quite a bit for FY25. One led by their rural B2C business, which is facing some problems with regard to asset quality, but that's just 6% of the business. And therefore that number seems to be putting investors off. The other piece is also with regard to its customer count. Customer count has grown by around 1.4 crore customers plus in FY24 itself, but they've given a 1.2 to 1.4 crore customer count increase for FY25. That's the guidance they've put out. That's below 20%. They've never done below 20% in terms of customer count. So that's the other piece which is a bit of a put off. The third piece is with regard to asset quality. Now, their credit cost for FY24 was roughly 160 to 165 basis points, 1.6 to 1.65%. Now they've guided for a 1.75 to 1.85% credit cost guidance. While this is normalized, but nonetheless, it's put the street off with regard to credit costs. Last off, it's with regard to margins and profitability. Now, margins have already shrunk in FY24. A further shrink is expected in FY25 by 30 to 40 bips. What the company is saying is they're doing more secured business, which will shrink margins and impact margins and therefore impact profitability. Will the metrics really change significantly as a result of this? Of course, need to wait and watch in FY25, but that's what the guidance says, which is putting off investors.
Those were the 4 reasons that Harsh laid out that was putting off investors. G. Chokalingam, let me come to you first. Are any of those reasons something that you see where Bajaj Finance deserves the kind of knock that it's facing today?
I agree. I think it is unavoidable because, there are 2-3 factors. One, if you look at banking and financial sector, despite a solid growth in the industry, we are seeing a very significant valuation multiple contraction, in both the NBFCs and banking space. And here, after this such a fall, also Bajaj Finance is trading at 5.5 times price to adjusted book value, and the profit has grown on year-on-year basis 21%. So when the profit growth has come down drastically in the last few years at around 21%, so I wonder whether 5.5 times price to adjusted book value even after the fall is sustainable in the short to medium term. And also till election results are out, I believe the FIs are likely to remain net seller because historically, whenever there is a general election, they don't go aggressive. In fact, they become cautious and they don't mind paying some premium post-election. So this stock also, significantly owned by FIs, and retail investors are chasing only the small and mid-cap stocks. So they are considering all these facts. I believe there is a little more room for further correction in the Bajaj Finance stock.
Sony, is Bajaj Finance showing opportunity to buy at this point, or you would wait to see what happens next?
It makes sense to wait. It's given a very bad breakdown on charts as well as on derivatives data. 6,800 is a very strong resistance now. And on the downside, it can test 6,500 as well. So I think one should just wait and wait and watch instead of reinitiating any longs at current level.
All right, so that's the story on Bajaj Finance. A bit of pain there in store for what has happened. The fifth reason maybe is also valuation. We talked about 4 reasons as far as the numbers are concerned, but the stock has run up a fair bit. All right, another stock that has run up a fair bit and is going to report numbers later today is Maruti Suzuki. Its March quarter numbers will be out a little after markets close, and what is expected? Puneet joins us with those brokerage notes and what the expectations are. Yes, Puneet.
Yes, Tamanna. So expecting a really strong quarter from Maruti. They are expecting a revenue, as per Bloomberg estimates, they are expecting a revenue to rise roughly 25% compared to the previous year, while EBITDA is going to be up 47% compared to previous years. They're expecting the margins to come roughly at 12.8%, which is a 190 basis point rise from the previous year, while on the net profit basis, it is likely to rise roughly 46%, coming at a roughly 3,839 crores. Now there are brokerage views on the on expectations. While most have said that the revenue growth is going to be upwards of 20%, Axis Securities has said that according to because of the better product mix, they are expecting an higher SUV sales. They are expecting the margins to be higher by roughly 300 basis points, while ICICI Securities has expected the EBITDA to go up by roughly 50%. They have currently an ad rating worth 11,200 as the target price. Finally, on Citi, they have said a very interesting thing, that they are also expecting revenue growth, but the share of small cars will be higher compared to the previous quarter. So margins will be a key monitorable year for Maruti Suzuki. They are also saying that higher operating leverage benefits will be also giving a positive boost to the margins, but small car share will be a key monitorable as well as commentary on the same. Back to you.
All right. Meanwhile, please look at the numbers on your screen. Motilal Oswal. I had to look twice, Neeraj, to see if I'm reading that right. Net profit at 516 crores versus 90 crores year on year.
Look at that intraday. The stock is also spiking. Total income at 1490 crores versus 631 crores. If there's any sector to be in right now,
capital markets.
It's capital markets, no doubt. Aap sabhi ka pyar.
Yeah, it's just the number of customers coming into them.
Boosting the space, yeah.
It's quite stunning really what's happened to these numbers, and the intraday of the stock should come up on your screen. And remember, by the way, Tamanna is right, because it's not just today's move, today's spike notwithstanding. You look at the last 1 month and you will see the PR on the stock. I mean, these guys have had a really strong run the last few times.
Wow.
Look at 1 month performance, 55%. Mr. Chokalingam, before we thank you, a quick word on what you see in terms of numbers. 516 crores versus 90 crores as a PAT for Motilal Oswal Financial Services.
I mean, great. I mean, the market cap is 38,000 crore. In the last 10 years, the way they created a business and wealth is phenomenal. I think, I agree with your team also that, they are in the right business now. And I think it is going to boom next to 4 to 5 years or so. Therefore, one can continue to hold on Motilal Oswal.
Got it. Okay, Mr. Chokalingam, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Before we take that break though, Sony, have to ask you these capital market stocks. Motilal Oswal, case in point. UTI AMC has had a decent run. Angel One for the last few days has had a really good run as well. What do you like, if anything?
There's so many stocks to track. I think I can just look at Motilal Oswal on the chart right now. And of course, the stock has given a good breakout on charts. You can see it has crossed above the resistance of 2300, 2400. I think the stock can, test 2700 in the coming days. The support is rising. As of now, you can see very crucial support around 2540, 2550 acting as a support. As long as the support is holding, you can see 2700 on charts.
Bonus share has also been announced in the ratio of 3:1. So Motilal Oswal. Sony, nothing else in this segment that you are tracking or you like very, you're seeing with an up move. UTI AMC numbers came out yesterday. That stock has been doing as well, and a whole host of others actually in that space.
Tamanna, UTI AMC, I wouldn't put my finger on it right now. I think on charts, we can see that it has succumbed to some sort of selling pressure from higher levels of 1,000, 1,005, which is also acting as a good support. Of course, the resistance, the support is still intact around 960, 965. Now, if it's able to hold this level, then there could be some bounce back again towards 990. However, if it breaks the support of 960, 65, you can see it some sort of profit booking taking place towards 930.
Right, very quick break. But on the other side, we tell you what's happening in the F&O space. Keep your eye on all the BTST calls, which will also come up after the short break. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Well, back with India Market Close right here on NDTV Profit. Before we move any further, let's get in my colleague Agam to talk about the derivative cues on day one of the new series. Agam, is there some definitive trend or at all?
Well, actually, it's been a very, very quiet Friday, Neeraj. And in fact, we've started to see a little bit of a downtrend play out. This is despite the fact that it was a very strong Thursday. At the moment, while we are looking at weakness, sure, we are also losing out on the 22,500 mark on the Nifty. I reckon that this is largely profit taking coming through and nothing more. As we move into a new week, we are going to start seeing fresher positions out there, and which is why you're starting to see unwinding once again as far as the Nifty futures go. This is long unwinding. Remember that yesterday we did have a strong day of trade. The Bank Nifty, again, let's pull that up, and this is where we're seeing unwinding coming through as well. Again, we're holding on to the 48,200 mark at the moment, but unwinding of nearly 3% in that May futures too. As far as the option market is concerned, when it comes to your overall options, today we did see a little bit of varied writing, puts being written around 22,000, 22,100, and calls being written around 22,600, 22,700 strikes. But in terms of your overall open interest distribution picture, Max OI currently with the 22,600 call and the 22,500 put, which is showing a little bit of consolidation, but this will likely change as we move into the next few weeks. Remember that next week is a truncated week, and we will have Wednesday as a holiday, which means that we will have one less trading day, at least as far as your expiries, your weekly options expiries are concerned. Let's move on and talk about the stocks then. And again, we saw shorts in L&T Tech down 8% at the moment. Bajaj Finance is down another 8%. So a lot of shorts there as well. Bajaj Finserv as well down around 3.5%. Longs for Hindustan Copper and Sun TV. And on the other hand, short covering for Coromandel, Havells, Divi's Laboratories and JK Cement, looking at a little bit of longs unwinding for Balkrishna Industries, but say for that short covering otherwise. All in all, it's a mixed day of trade, and I reckon that it will continue to be about earnings in this upcoming week as well.
Absolutely. Thank you for that, Agam. It is definitely going to be all about the earnings. And I'm just looking at, some of the Nifty top losers and the earnings play completely being seen there. Nestle did okay after its earnings, but pulled back over there, down about 3.5%. In IndusInd Bank is also hurting. Those numbers were also in line, of course, not as much as a Bajaj Finance, and HCL Tech ahead of its numbers also down. Sony, just your take on IndusInd and HCL Tech if you're tracking. Kotak Mahindra Bank, by the way, after being, sabse bada loser con mein, the front runner yesterday, is doing okay today, 2% down, but not as bad, of course, as yesterday. Sony, IndusInd and HCL Tech?
Tamana, in the sense, we can see a bearish engulfing candle pattern on daily charts. It is also breaking 200 EMA as we speak. So 1460 is a resistance for now. If it's not able to close above 1460, you can see it heading towards lower support of 1400. So the stock can continue to see some more selling pressure. If we talk about HCL Tech, the stock has seen a lot of short rollovers on the short side from April to May series. The stock is also witnessing a bearish engulfing candle pattern on daily charts for now. From current levels, you can see it heading lower towards 1400 as a support. So I think that's the level that it can test. Maybe from those levels, it can see a bounce back. But as of now, it's weak and 1500 holds a good resistance.
Okay. That's a story on IndusInd and on HCL Tech, but we were talking about what is happening in the AMC space, and I just want to pull up and look at the Motilal Oswal stock once again. and see what's happening there. And it's paired a bit after that huge spike up, but nevertheless 5% up. Let's pull up MCX as well. MCX also had been doing fairly well, not too badly, and it's come off some of those levels as we speak. The other one which I was very curious about, Sony, and wanted your view was Biocon. Now on the 17th of April, there was news that they had entered a completely new market with semaglutide, that is your now very famous Ozempic, Wegovy weight loss wala drug. But since then, the Biocon stock has been on a tear, even today up about 5%. Are you seeing a further upside here, Sony?
Definitely, I think, Tamanna, if we can look at the charts and the option chain, it has given a good breakout, in fact. So above 300 is a good breakout in Biocon. So as long as it closes above 300 on a weekly closing, that will be today, the stock can head to higher towards 325, 330 levels also as well.
Okay, now amongst other leaders in this session, or rather this week, is Tejas Networks. The results came in a couple of days back. Ahead of the results, the stock was up 16%. On the day of the results, the stock was up 20%. On the day post results, it was up 20%. We all know that the results were good. The question is what's next? And I think we can almost call this series Decode, or this session Decode. My colleague Rucha Johnson to decode what could be the numbers like in Tejas Networks and the way ahead. Rucha, take it away.
Thanks, Neeraj. So as rightly stated, FY24 revenues were up 168%, while the company turned PAT positive as well. Now, looking ahead in FY25, the street estimates that the FY25 revenue will grow up by 4x during the entire year. Now, this is on the back of three major points. Number one, ramp up of the BSNL deal win, which is expected to be executed over FY25. Secondly, company may get over 100 crore PLI incentives, which is expected to be beneficial to the company over the next 5 years. And the BharatNet tender may also be executed. That is what the management also said. Now, because of this, the EBIT margin could also move up from 1.1% at the current levels to 21% in FY25. Now, the other growth levers can be seen as revenues from group companies like Tata Communications and TCS. Future deal pipelines from BSNL as they roll out 5G networks can also be beneficial to Tejas Networks, and the recent acquisitions done by the company will also turn out to be complementary, as the company does not have a satellite and broadcast portfolio currently, which can be helpful from such acquisitions. Now, lastly, coming to what the street is estimating, especially the MK House has a buy recommendation of the stock, and its target price has met with the current market price. Now, let us look at what are the risk factors in this stock. After the BSNL deal ramp up in FY25, what will constitute in the deal pipeline is what is to be watched out for, while EV/EBITDA multiple for FY26 is at 11.5 times, which is higher than FY25 multiple. So that is again another risk level for the company.
Just one quick follow-up question out there, Rucha. Are you saying that for the year FY26, the pace of growth and the quantum of growth will come off relative to what they have done in FY25 or FY24?
That's correct, because FY25 revenue is largely on the back of the ramp up of BSNL deal, which is completely expected to be executed in the FY25. So another risk here, as I mentioned, is what will drive the revenue in FY26 is what is to be watched out for. So the estimates on the street are like a strong growth in FY25, but a little bit of slower or muted growth in FY26. Unless they announce some great deal wins in the next year or the next quarter, I think that'll be a good lever for the company going ahead.
That's interesting information, and thanks for that, Rucha. And maybe viewers, that explains why the stock, despite having such a phenomenal growth target for FY25, trades at the valuation multiples that it does. It's not scorching ahead in any fashion whatsoever on multiples, because FY25 may do a great growth here, but they will actually see degrowth in FY26.
Well, having said that, it's come off last couple of days, Neeraj, but it's also run up a fair bit.
Yeah, but just look, just the numbers, the valuations even after that on
Are not that
FY25.
great.
Yeah.
One would argue then there is more room for growth if you have a longer term view. But anyway,
if they grow.
If they grow at the same pace. Either way, that was, thank you for that, Rucha. Let me go across now to Nitin Raheja, Executive Director, Head Discretionary Equities at Julius Baer, joining us this afternoon. Nitin, welcome. Always great to have you on the show. Let's begin with your take on, and I just want to go back because this astonishing kind of numbers and reaction which has come in on two sets of companies, I would say, or two counters specifically. Tech M is one and Bajaj Finance is the other. And I'd like to know your view on both of them, because the way the street has responded doesn't seem to be completely in line with at least the first read of the numbers that the companies put out this quarter.
Look, we have this phenomena of what we call as a hope trade that plays out, correct? And we are seeing that happen in one of the companies because, you have a new management and a CEO who is putting out his own vision and game plan for the company. And I think a lot of that is what the street is looking at and building into it. And that's why, we see what we are seeing out there. In terms of the other element, and that's a classic risk that we see in markets today, and that's got to do with the fact that if you pay very high valuations and leave virtually no room for error, even a slightest of disappointment gets sold into. And again, that's another example that we are seeing, as far as both the companies that you mentioned.
All right, so that's the story there. Just, Nitin, want to get your take on the IT pack as well. We've had, I think, most of the numbers are out, top line and mid-level companies. And we have seen, I think more optimism coming in from the commentary than what the street has rewarded the sector with. Do you think that with the kind of US GDP numbers that we've seen, the uncertainty with the Fed cuts, this is still going to be a tough space to navigate over the next few months?
Clearly, if you look at the commentary that is coming around from most of the IT players, while they're seeing robustness in terms of order wins, at the same time, there is also enough of order deferments that is happening, order renegotiations that is happening for all the players out there, as everybody is looking at. It's not that IT spend is going to sort of go away. It's just that the present trend of uncertainty is making a lot of companies who would have spent, and IT is also a discretionary spend. So companies who have a large amount of discretionary IT spend as a part of their order book are clearly struggling more than the others as such. So I think from an IT perspective, I think this sector is going to see muted sort of performance in the short term. However, very interestingly, if you go back last 4-5 years, during the course of the year, the sector actually moves up on promise of the future. So I wouldn't be surprised where, if the US economy continues to be robust, somewhere during the middle of the year, you once again, and we've seen that trend in the last many years, where again, people look at these stocks, they look at the valuations, they look at the kind of cash flows that these companies generate, and see, well, okay, now we could start seeing a turnaround in the sector and start discounting it. So it's become like a rotational play that takes place in IT, time and again every year.
Nitin, good afternoon. Neeraj here. Just hi, good to be talking to you. It's been a while. The mid-sized tech companies, all which have counted numbers, have spoken at length about how they might have to forego a little bit of margins if they want to get growth. We saw that with Persistent, we saw that with LTTS, likely with Emphasis. Would these be on the avoid list until growth definitively comes back, or are you happy to selectively bottom fish? Nitin, are you there? Okay, I think we've just lost that. Nevertheless, we'll get back to Nitin in a bit. In fact, it's about time. I mean, near about closing time. Maybe we should try and take in closing strategies and a couple of active stock ideas from Soni Patnaik before we talk fundas. So, Soni, 2 or 3 questions to you. First, let me start off with the closing strategies. Is there a BTST or an STBT that you have for our viewers?
Definitely, Neeraj. It'll be a BTST. I think the market is just at the support, and it should be holding this level. So the BTST comes in for BHEL. That's looking quite strong, and it has given a fresh breakout above 273 to 72 levels. Plus, it has also seen good rollovers, capital good, entire sector quite strong rollovers to May series. So from current levels, one can buy, keeping a stop loss of 270 and a target of 286 to 88.
Okay, so BHEL is the first one on Sony's radar. Sony, I was trying to look at stocks wherein there is both price and volume action in the session today. HUDCO fits that list very, very well. Both price and volumes have been up. Havells is the other one, and GMR Infra is the third one. Have you looked at the charts of any of these 3?
Yes, definitely. I think all the 3 charts looking quite strong. But of course, when you asked me for the BTST, I had 2 stocks in mind. The second stock was in fact Havells. And, it has given a very strong breakout above 1600 plus. There's a good short covering coming in for Havells today. I think the stock can also be treated as a good buy from current levels. And from BTST perspective, also, it's looking quite strong. There's good volumes, and the stock is holding above 1620, which is a very crucial support. So keep a stop loss of 1620, and the stock can head towards 1660, 1680.
Okay, I'll watch out for this as well. So interesting names out there, in some sense preempted what Sony was trying to recommend with regards to Havells, but very interesting price volume action being seen here. GMR Infra is the other one which has got a solid price action. One more name where GQG is invested in. But Nitin, if we have you back, I was trying to ask you about mid-cap IT. Would you bottom fish or would you stay away from the pack?
No, I think, mid-cap IT is an interesting space to be. So some of them are actually seeing good growth in their specific domain areas. And I think once, spending does come back, I would believe that mid-cap IT would probably do better than large-cap ITs, at least in the as the IT spend start coming back in the initial phase.
Just one stock I wanted your view on is HUDCO. Sony, I think Neeraj mentioned it, but phenomenal moves this afternoon coming in on a HUDCO and a Westlife Food as well. Anything that you're seeing exciting happening here?
So definitely, I think HUDCO is looking quite strong, and even today it has seen a very good breakout on charts as well, and stock is already up by 12-13%. The immediate support for HUDCO can be seen around 218, 216. That zone is very important. As long as it's holding that zone, the stock can head higher towards 240, 245. And if we talk about Westlife on the charts, we can see that some good breakout has come on intraday charts for Westlife, which is backed with good volumes. The stock is also up by 7 to 8%, and as long as it's holding above 860, which is a good support, the stock can head higher towards 920.
All right, so that's the story with HUDCO and Westlife. ICICI Bank is also on our radar. They're set out to put out its March quarter numbers tomorrow. Harsh is joining us with the key factors to watch out for. Yes, Harsh.
Well, to start off with, Tamanna, it's going to be the margin number which is going to hold the key when it comes to ICICI Bank. You're expecting a 5 to 10 basis point decline, at least that's what broadly analysts are expecting. But anything like Axis, where maybe a 5 basis point improvement or even a few basis points or even flat margins could actually change the numbers quite substantially when it comes to ICICI Bank, and we'd see possibly a reaction on Monday to that. The other piece is, of course, with regard to growth, 18% growth expected on the loans front, retail SME to be looked at. That slippages number any kind of commentary with regard to how asset quality is shaping up will also hold the key. The other piece when it comes to ICICI will also be with regard to subsidiaries and how that performance and how that is being assessed, especially ICICI Securities, where that reverse merger is at play. Keep your eye out on that. The deposit growth number also expected to pretty much be in line with loan growth. Anything short of that will again possibly be a slight negative.
So ICICI Bank is one that will be in focus. Of course, those numbers will come out only over the weekend, and you'll see that reaction on Monday, if at all. Quick take on ICICI Bank, Soni, before we close for this afternoon.
So ICICI Bank, one of the few private bank sectors stocks which has actually seen good rollovers. The stock is still holding above 1100. If it closes above it for today on a weekly basis, the stock can head higher towards 1150. One can just continue to hold the stock. There's good support, but immediately as of now, 1090 is a good support. If it breaks 1090, then it will be difficult to test 1150 on an immediate basis. There could be some sideways trend between 1080 to 1100 in that case. But as of now, 1090 looks quite robust. If it holds, 1150 can be seen.
Okay, well, we'll watch out for that. Nitin, before we thank you, if you've not spoken about private banks, it's been a mixed bag of sorts thus far. What's your sense about picking and choosing between the private banks? And do you like that space at large?
Look, I think you know the kind of weightage that banks enjoy, and the kind of correction that we have seen as far as the banking sector is concerned with regard to where they've traded at long term historically and how they've come down. I think the fear in most people's minds has got to do with two things, right? One is NIM compression, and the second is the impact that, as well as slowing credit growth, given the fact that deposit growth has lagged in the economy. I think a lot of it, if you ask me, has already been built out. Current valuations are very well attractively placed. I think, but what we will see is also very interestingly, in this benign environment of credit, where credit costs are low, the tier 2 banks where valuations have been cheaper have actually done far better than the top tier bank, and we've seen a narrowing of the valuation gap take place out there. I think that trend will continue. But we think overall, if you ask us, the private sector banking space is attractive and is cheap. I think it suffers from the fact that it's an over-owned sector, and we've seen a lot of selling happen on the part of foreigners who've actually over-owned the sector for a very long time. I think most of that, I think, is now behind us, and I would believe that over the next 1 year, it's a space which should do well.
All right, Nitin, thank you so much for joining us today. Soni, great to have you on the show as well. Just last call, Soni, before I let you go. IndusInd Tech having a fabulous day as well. A stock which has already run up a fair bit. Do you think there is more of an up move here, if you can still hear me?
Definitely, Tamanna. Very strong, very good breakout, very good strong rollovers as well. The stock on an entire positional basis can test 9,000 also in May series. The stock is looking quite strong, and there's a good support around 8,200. So as long as 8,200 is holding, it can test 9,000.
Okay, so IndusInd Tech is, a good call over there. Just wanted to know if you would be bullish on something like a Nestle or an HUL right now, or is that a space that you'd stay away from?
Completely stay away from. FMCG pack for 2 series straight away. They've shown weak rollovers. Individually also, neither of the stocks can give a good breakout or sustain above any particular resistance level. If we talk about Nestle, very bad breakdown that can be seen, or sort of a bearish engulfing candle pattern. There's a support of 2470. If it breaks, you can see it further retesting lower levels of 2400. Short covering can only be seen above 2600 for the stock.
All right, Soni, we'll leave it at that. Have a great weekend. Thanks so much for your time and your ideas. Really appreciate that.
Thank you.
And let's start wrapping up the markets. 2 minutes left for the markets to shut shop. We are okay. We are not closing at the lowest point of the day, a few points shy from there, if you will really. But the larger point is that it's not a very large pullback in the session. And Nifty Bank is down, yes. IT is down. But the mid caps and small caps have done reasonably okay. Sorry, Nifty IT is up because of Tech Mahindra. Other IT stocks are down. But the mid caps and small caps have done well. 0.8% for the mid cap index, the small cap index too, about 0.4%. So the breadth has stayed reasonably okay, if you will. Now let's get the heat map up on the screen on the Nifty 50. Out there, the breadth, pretty okay. What's correcting? Well, the same set of stocks, no changes there. Nestle is only worsened a little bit, but IndusInd, Finserv and Finance take the cake. Shriram Finance has moved out from the list of the top 10 losers and has moved to the gainers. In fact, it'll be lovely, we'll do it at the end of this thing to pull up the intraday of Shriram Finance, but look at Divi's Lab too, 4.5 or 5% higher for that one. LTI up 3.5%, and it's a bit of a surprise really to me. Today on IT calls, on IT stocks, we're not able to quite gauge what the impact will be. LTTS has the sharp fall, Emphasis hasn't, LTI Mindtree hasn't. A good move there for that one. Bajaj Auto up 2.5%, BPCL up 1%. And just before I hand it over to Tamanna, bring up the intraday of Shriram Finance for you. The stock ahead of the numbers was down and then it perked up in trade. So this is what I'm talking about. I think it moved up, but it was really flattish to marginally lower, and from there, or rather it was down 4%, and now Shriram Finance is up about 1%. So good, very solid intraday move, Tamanna, that came in for Shriram Finance.
Shriram Finance, definitely, but I want to talk about some of the sharp winners towards close, and we should pull up the S&P BSE 500 top gainers, some that come to mind. Hutco, what an afternoon Hutco has had, 12% up over there. Zensar Tech again, good numbers. Techem, of course, no surprises over there. Westlife has shot up. Concord has had a great day. On the losing side, a CSB Bank on the back of numbers, as well as a KSB. Margins have been below expectations as far as KSB is concerned, and that's why you're seeing that spot of weakness there. Bajaj Finance and L&T Tech, of course. Bajaj Finance bruised badly, but some others that I'd like to point out. Let's pull up the Motilal Oswal stock and the intraday chart. A phenomenal set of numbers, and we'll hope to have a detailed conversation with the management come Monday. But of course, cooled off from its spike. If you look at the intraday over there, hit a day's high of 2678 and then came off. But that entire space, capital market space, really you can periscope it in the kind of movement you've seen in a Motilal Oswal. I think the other one segment that we should quickly talk about is pharma, and yes, Divi's Lab did see that big spike up, but if you pull up the Nifty Pharma and its components, Biocon, since the 17th of April, that stock is up 15%, another 6% up today. Laurus Labs turning around. So you had some good moves over there in the pharma pack as well. I think we'll wait to see what happens with ICICI Bank. ICICI Bank, Maruti are going to be the big ones to watch out for Monday.
Most certainly, and it'll be an exciting week as well. A truncated one, but an exciting one nevertheless. Ahead of the numbers, some of the stocks have tempered down. It'll be really interesting. 5 banks, by the way, tomorrow rather. So it'll be an exciting one as well. But we'll save the excitement for Monday. For right now, we've closed the market. From Tamanna, me and the team that has put this show together, thanks so much for tuning in.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean
Welcome, you're watching NDTV Profit. I'm Harsh Saita and this is the small and mid cap show. With me is Mahima Vajrajani and we're going to talk to two very interesting managements. Of course, the theme being earnings. First off, we have Farooq G. Patel, who is the chairman and managing director at KP Group. KPI Green Energy came out with numbers, mind you. The stock, at least for today, on lower circuit as of now. We also on the other side will have another management, again very interesting. But first off, let me welcome Mr. Farooq Patel. Welcome to NDTV Profit, Mr. Patel.
Thank you very much.
Sir, talk to us about the Q4 numbers itself. In terms of trajectory versus Q3, the numbers have come in slightly softer. Is this seasonality? Is this something we can expect going forward as well? Please explain that to us.
No, see the KPI Green, when I talk about the KPI Green, so KPI Green is moving towards to the smaller client to the bigger client like Aditya Birla and the Ayana and our client is a bigger client which we have got the orders in the Q4. And when the bigger client are there, you say that they have the not like a smaller client where you put the bill or you give the bill in a milestone basis. Here you have to give the bill in a big bill amount, or the bill you have to give them there what they want. So in that case, we have done a lot of work, but bill are pending over there. So in this case, we have to, if we want to move towards the big client, and for that purpose, you can see the orders which we have got in Q4 about 682 megawatt, but that all billing cycle are different than the smaller client. So we are moving towards the gigawatt size. We have already energized altogether in the group companies about 1.2 gigawatt. And now we are going forward on a gigawatt size. So we have to face this quarter like this only.
Okay, point taken, Mr. Patel. Mahima this side. I just want to understand from your order book perspective, what is the total order book at present and what are the execution timelines that we are looking at?
So we have the 1.23 gigawatt orders in hand in the KPI Green. Previously, whole 9 months, we had a 552 megawatt, and in this quarter, we have the 682 plus. So altogether, 1.23 gigawatt orders in hand for the next year, you can say. And we have already energized 445 megawatt till date, and we expect to do this 1.68 gigawatt in the next future.
Understood, sir. So therefore, just in terms of revenue and revenue recognition, want to understand what should the ballpark numbers for FY25 be over FY24 in terms of growth?
You see the trend of YOI. So it is going 48 to 49% always be there. So you can expect the same trend over till 2030, my dear.
Understood. And sir, just with regard to, if I can just add, margins should hold above the 30% mark. Is that what one can reasonably expect?
You can the same margin will be continue, and that's why we are choosing the client in this scenario, because the renewable energy is today's requirement of whole world, and we are going towards the goal of the our Prime Minister 2030 500 gigawatt, and we are contributing our best in that from all our company.
Understood. Mr. Patel, last time when we spoke to you, it mentioned that you want to increase your total capacity to 10 gigawatt. I just want to understand that by when do you think this 10 gigawatt will be achieved? What are the timelines looking like?
2030 10 gigawatt is there will be there from the group of companies of KP Green Energy, KP Engineering, KPI Green also, and we have the 10 gigawatt by 2030. We will achieve the 20 by 2030 10 gigawatt. There will be no not at all the chance to not to do, and we have performed in the past and we will perform in the next also and contribute to the nation.
Sure, understood, sir. Sir, just with regard to, again, I come back to FY25 expectations, roughly 1500 odd crore in terms of the top line. How much of this would comprise EPC and how much of it would comprise your own power generation, which you do internally? How much of that revenue? What's the mix like?
This year you can see in the revenue 17% from the IPP and rest of from the CPP. Okay. The same trend you can expect in the 2025 also, and you will get more. We will see the more IPP revenue from the our side because we have a very good order in hand, about 322 megawatt new order in IPP from the GUVNL, means the government companies. So we have already 148 plus 322. We have done this thing. We have told this thing in 2023 that we are going for the 1 gigawatt from the by the 2025 calendar year. We will achieve that 1 gigawatt before that, and IPP and CPP 50-50. So our annuity income will be for the 25 years will be fixed around say whatever you are seeing today. You will get the much more better profit figures in the KPI and KP Energy.
Okay, but I want to understand, that all of these orders in terms of, the orders received from GUVNL and all, execution timelines, I want to understand how much of it will you do in FY25, 26, 27, what are the timelines?
See, timeline is already mentioned in the tender about say 18 months, and we have passed 3 months. So you can say before we tried our best to do before March.
Okay, sure. And just with regard to, I'll switch focus to your balance sheet and balance sheet metrics. You've taken on some amount of debt. Where does this number go to? What kind of a number are you comfortable with?
See, today you see that our debt equity ratio is much down, 0.99 to last year 2.21, and in the you say in all the companies we are not more than 1:1. So here also we are, if we want a big clientele orders and big orders, we have to take a more and more facilitate, and it is a debt 442 is a debt of long-term debt. Otherwise, all the WC bank guarantee and all things which we have to pay to the GVNL and the tendering system. So actually, date is 0.5 only. If you see, if you long-term, if you see, and that is the remarkable reducing in a debt, you can say.
Okay, and Mr. Patel, I also want to understand what kind of land bank are you having at present, and how will it be put to use?
See, altogether we have a 2200, more than 2200 acre land is on a company's board, and the evacuation also. We have a 1600 plus evacuation, and the government wherever we are bidding, like 240 Khavda, where the government is facilitating us the land and the AC part also.
So therefore, sir, what we're trying to allude to is the capex with regard to land is already put up. Is that how one can look at it? And
yes, you can say that thing, that we have already land in our hand, where we can in the next near future we will say execute the all the CPP orders.
Okay, sure. And sir, just with regard to profitability, how do the metrics add up? So as you expand operationally all the way through to FY30, what's the kind of growth in profitability that one can expect from KPI Green? Because now it seems stable profitability is here to stay.
It is naturally that if you go with the big, say, megawatt size, big, right, gigawatt and all things, the profitability not going in a percentage, it will goes in a numbers, where last time we have declared the profit of 109. Today we are on some 160 plus. So next year we will expect the at least 50 to 70% growth in the numbers in profit.
Well, Mr. Patel, that's very interesting to know, 50 to 70% growth in numbers. But with that, we're completely out of time. It's time to slip into a short break, but don't go anywhere. We have Jai Balaji Industries, Aditya Jajodia, who joins us on the other side of the show to talk about the company's fourth quarter earnings. Stay tuned.
As citizens, we must remember that voting is not only a privilege, but also our duty towards our nation. I, Akash Ori from the DLF Group, pledge to encourage my colleagues, their friends and family to vote for the government they believe in. This is the strength of our democracy.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Welcome back. You're watching the Small and Mid Cap Show. Well, since the theme for today's earnings, Jay Balaji came out with their earnings, and to discuss more about how Q4 has gone by and how the future of the company looks like, we have with us Mr. Aditya Jajodia, Chairman and Director at Jay Balaji Industries, who joins us now.
Thank you so much.
Right.
Good afternoon.
Good afternoon. So my first question to you is, just give us a brief idea of how the quarter has gone by and how FY24 has fared out for you.
Madam, the quarter has been extremely good. We did a revenue of around 2,000 crores in the last quarter. And on an annualized basis, we did a revenue of around 6,600 crores. In terms of EBITDA, we did an EBITDA of around 1,100 crores. And in terms of profitability, our profit margins were in the region of around 20% EBITDA margins. And in terms of profitability, our profit was around 880 crores, which was a growth of around 1,400% from last year. So, the performance has been highly satisfactory.
Sure, Aditya. Can you talk to us about FY25 going forward? Prices expected to be stable, volatile? What are the kind of numbers one can expect? Because from your investor standpoint, you've hit it out of the park.
Thank you. Thank you so much. See, as far as the numbers are concerned, we are very optimistic about our growth numbers. And we are very optimistic about our operations. The focus of the management, it is evolving around 2-3 issues. Number one is that we are doing a capex of around 1,000 crores entirely through internal accruals, out of which 550 crores has already been spent, and then the balance for 50 crores it will be spent over the next 12 to 15 months. So with the completion of this capex program, what we are doing is that currently we are selling around 50% of our products as value-added products, which have higher margins. So with this completion of the capex programs, this contribution of the value-added products to our entire product basket, it will increase to 80%, and the top line will also increase by another 50%. So what we are aiming at, it is a EBITDA margin of 18 to 20% on a much higher top line. So this is what we are aiming at. One of the other focuses of the management also is to focus on products and businesses which will give us very high return on capital and very high return on equity. So as it is, if you see the numbers, means the return on capital, return on net worth, these are very high. So the focus of the management will be to focus only on those businesses which will give us very high return on net worth and equities.
All right. So Aditya, I also want to try to understand, in terms of your order book, what is your order book at present, and in terms of execution timelines also, where do you stand?
In terms of order book in the ductile iron pipe business, we have an order book of around 10 to 12 months of the current capacity. But since the capacity it is increasing by the capacity will be increasing by 250% over the next 12 to 15 months. So we are very happy with the order book. In terms of the specialized ferroalloy business, we have long-term agreements with most of our buyers, and we are exporting to more than 40 countries. So as long as the long-term agreements are concerned, the prices are fixed to the indexes, but then the quantities are fixed. So more than 60% of our sales are in the long-term agreements. So we have as far as the order book is concerned, we are very, very okay with the order books. Very happy with the order books.
Understood. Aditya, two-part question. One is with regard to, is this capex going to be an ongoing plan, or is this FY25 specific? How much is that number, if you can tell us? Also,
I just missed your question, please. Can you please
Sure. So, with regard to capex, is it an ongoing capex plan which is going to go beyond FY25 as well, or is it going to be restricted to FY25 and then you're good? Second is, how much is the capex and how do you fund it?
Yeah. See, I will answer your second question first. The total capex plan is for 1,000 crores, out of which 550 crores has already been spent as of now. Out of the balance 550 crores, the majority will be spent in this year, but a small portion may be spilling over to the first quarter of the next year. And as far as the funding of the capex goes, it is being done entirely through internal accruals.
Here you mean FY25?
Yeah, FY25.
Understood. Just for clarification. Thank you so much. Yeah. Okay, that's all the time, unfortunately, that we have, Aditya. Very, very interesting. Again, the conversation could go on. But that's all the time we have on the Small and Mid Cap show for you today. Hope this was productive. From Mahima, myself, everyone who puts the show together, thanks so much for watching. And stay tuned to NDTV Profit for more updates.
Hi, I'm Rohit Kapoor. I'm the CEO of Food Marketplace at Swiggy. At Swiggy, we are in the business of offering our consumers a wide choice, convenience, and a multitude of options to choose from. Voting is something similar. It's about exercising your choice, exercising it responsibly, thoughtfully, after going through all the options that you have. So I will encourage all the employees at Swiggy, all our delivery partners, everyone at large, their families, and all of us, all consumers, to come out, and those who are eligible, vote and exercise your choice and make India always a better place than it was yesterday, because we all owe it to the nation and to ourselves. Thank you.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment.
or
Market snaps a 6-day rally to end lower as Bajaj Finance, L&T and ICICI Bank lead the losses. Benchmarks close the day a percent lower as broader markets. GQG likely to have bought 2.8% stake belonging to ATC in Vodafone Idea through a block trade today. Sources have said this. The deal is worth about 1,828 crore rupees. 50% voter turnout recorded till 3 p.m. in the second phase of Lok Sabha elections. Tripura leading with 68.92% voting, while Maharashtra records the lowest turnout at 43%. Supreme Court junks pleas for paper ballot voting and 100% cross verification of votes, rejects the possibility of EVM tampering, suggests having electronic machine for counting VVPAT paper slips. Supreme Court questions the Election Commission on Nota after a petition seeking rule change is filed. Asks what happens if Nota gets maximum votes. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Smriti Chaudhary. As always, this show aims to bring you the market headlines along with national and international news. But before we move on to that, Maruti Suzuki has just come out with its fourth quarter numbers and we're going to listen to the management that has just started speaking.
This year specifically, we have a lot of good news coming from the company in the sense that as you already know, I think we crossed sales of 2.2 million to actually we reached over 2.1 million. We had the highest exports ever at about 285,000 cars. We had the highest turnover. We've had the highest absolute numbers in terms of profits. And overall, therefore, it's been an excellent year. Thanks largely to the increase in production, the fact that we didn't have many of the constraints to production which have been with us for the last 2-3 years, the fact that the material prices remained somewhat benign throughout this period, that the company had a record in terms of the suggestions implemented and the savings resulting. I mean, just to mention to you, for the first time, Maruti, this excluding Gujarat, between Gurgaon and Manesar, we crossed 1 million suggestions implemented. That's something which we had not done ever before, and it's all reflected in the results which we get. So it does happen sometimes when several factors which affect the bottom line all come together. So we have had a result which is, in all respects, in terms of profits and all that, very good sales profit. This leads to the shareholder also getting a substantial increase of almost 40% in his dividend. From 90 rupees, we are going up to 125 rupees a share. And I think that would be good news for the lots of shareholders who have held on to Maruti despite its price going up to pretty high levels. So that's on the number side. You have all the results before you. I don't need to spend more time on that. The other news is that our expansion plan at Kharkhoda is proceeding smoothly. We expect that the first line will start production before the end of this financial year. And thereafter, we should be able to add one new production line every 12 months or so. We have not been able to finalize our second site for the expansion program because before we could do that and sign all the necessary papers, the code of conduct came into force, and so everything had to be put into cold storage till that aspect was taken care of. So that's as far as the production side is concerned. We are proceeding on our, what should I say, the efforts to clean the environment in full force. I think we are as much committed to that as the government is. We want to be completely in line with government's programs and to support government in helping reach the carbon neutrality targets for 2070. And for that, not only are we so far been completely compliant with all the regulatory requirements of the government, but we have been pushing rail transport to reduce the carbon footprint. Sending cars by truck is much more polluting. This year, again, we reached the highest ever transportation by trucks at about 4.5 lakh cars. And we had, of course, that event where the Prime Minister inaugurated the first siding within a factory for sending cars. And as a result of what is happening on the infrastructure front and the cooperation from the railways, we expect that rail transport of cars will increase steadily and fairly substantially in the periods to come. All the requirements of new rakes and other things are being done. And that's one area we want to continue with. Our solar capacity in the company has already reached about 43 megawatts, and we will continue our efforts to create more and more solar generation in the company. We are also looking at biogas production as a means of substituting the CNG, which is used in the production processes in electricity generation and all in Gurgaon and Manesar. And we want to make that again on a big step towards carbon neutrality. So with all these steps, I think we are in sync in that area and going forward. What else is it that we are... The Maruti 3.0, as you know, is on. The acquisition of SMG proceeded very smoothly. We are now working very closely with Suzuki Japan to find and evolve the best changes which are required in management practices and in the way we do things, so that the larger targets which we have set of 4 million cars and an export of 750,000 to 800,000 cars by 2030-31 are all achieved in the most efficient manner possible. The rest of the business today, okay, I should mention, sorry, I should have said this earlier. As you see on the panel which we have here, you have two new faces. The CFO, Mr. Arnab Roy, has joined us a few months ago, and he replaces Mr. Seth, who you've been seeing as the CFO for the last many, many years. And as a part of the reorganization of the company, and the managing director has created a new advisory council for himself, an executive council. Mr. Partho Banerjee has now taken over from Shashank Srivastava as the head of marketing. He was looking after the service function. He made that function become much, much bigger than what he had found it to be, and it's been one of the major sources of income for the dealers. And I'm sure the marketing function will go very well. And he in future will be the one interacting with you on many areas of the marketing front. So with these words, I'll close and leave it open for questions. Before I do that, I'd request Pakistan if you would like to say a few words.
Thank you, Bhargava-san, and good afternoon to everyone. Thanks to your support, we luckily finished the last financial year with everything in a very, very good and positive result, and we are very happy about it. So this year, while maybe some challenges ahead of us, but we still would like to maintain this momentum, and we'd like to push the sales forward. So thank you.
Thank you, sirs. We will now open the forum for the Q&A session. Our first question is from Varun. Varun San from India Today. May I please go ahead and ask your question? Varun, you'll have to unmute yourself. Varun San, you'll have to unmute yourself. Still looks like there is some technical issue. We can see his video now. Varun, can you hear us? Sir, we'll come back to Varun. We'll now invite Sharmishta from Economic Times. Sharmishta San, please go ahead and ask your question.
I have two questions. The first one is for Bhargav San. Sir, what is your outlook for FY25? And the second question is for Mr. Bharti. If you could, Mr. Bhargava mentioned that Maruti is doing all to be compliant to regulatory requirements. But given that there has been some talks about CAFE and there are manufacturers who are not meeting the norms, so what is your thought on the penalty which the government is talking about?
Let me start by saying that I am optimistic on the outlook for 24-25. I believe that a new government will come into power in the next couple of months, less than that now actually, that the new government will have a very good base from which to go forward. And I think in the beginning of the year, one should see several measures taken by the new government. which will propel the economy and industry forward at a much faster pace than in the past. So if that happens, and I think there's a good chance that will happen, I think the car industry should also look forward to a year which is pretty good in all respects.
Thank you, sir. Mr. Bharti, if you could share about the...
Yes, look, I don't know the position about other car companies. There have been some talk here and there about some companies having some difficulties in meeting the CAFE norms, but that's between them and the government. And it's not something which we can do anything about in any manner, whether it's plus or minus. And so I think it's futile my even wanting to talk about this matter because it's not in my control.
Okay, sir. Okay. Mr. Bharti, like, is there something on the policy front that on CAFE that you can share too, please?
We're in constant discussion with the government, and of course, it's an evolving situation, and all technologies are being discussed. So nothing very concrete at this stage.
Okay. Okay. Thank you. Thank you, sir.
Thank you, sir. Thank you, Sharmishta San. I'll again invite Varun San. Varun, are you there?
Yes, ma'am, I'm here.
Please go ahead and ask your question.
Hello, Bhargav San. I have two questions for you. So, first of all, we are seeing that a lot of OEMs in India are providing 6 airbags as standard in their cars now, like right from the base variant going up to the top. But when can we see Maruti Suzuki India also providing 6 airbags as standard in all their cars? And secondly, Maruti had earlier announced that it had sent Baleno, Brezza, and Grand Vitara for crash testing at Bharat NCAP. So when are the results for these tests going to be out?
I think my answer to this is that the 6 airbags are already in several of our models. As far as the details are concerned about this and the testing, may I request Takuchi-san to reply to this question in some detail.
6 airbag, we are also working towards, having 6 airbag as a standard on some models already. And we will continue this for the models to come to be introduced into Indian market. So that's our position with regard to 6 airbags.
And this testing of some models which were sent to the Brezza and the
Baleno and Grand Vitara, sir.
Rahul, do you know the results of testing, when they will come, what is happening?
We are expecting them anytime. As of now, the results are not known. We have offered these 3 models for testing for Bharat NCAP.
Okay. Okay, sir. Thank you.
Thank you, Varun. Our next question is from Swaraj. Swaraj from Financial Express.
Yes, thank you. Bhargav-san, we just heard a couple of days back commentary made by Elon Musk, where he said that most of the there is excess capacity at with the battery manufacturers, EV battery manufacturers. He also said about slowdown, global slowdown in the EV market. Although India, if you look at the 24 data, it's still pretty good. So does this in any way give rise to doubts about the future of the EV market at a time when 25 will see participation from you, many of the other companies? What does that tell you about the immediate future, 1 or 2 years down the line future for the EV market of India?
See, EV markets and the EV technology is one of the key technologies for taking forward the task of meeting the carbon neutrality goals. And it's recognized by the government policies are directed in that area. All car makers have also accepted that they have to have EVs if they're going to meet and help government meet the regulatory requirements and get down to the bigger task of carbon neutrality. Now, having said that, and having made, and we will continue to make our best efforts to produce as good value for money EVs as we possibly can, how fast the market grows is not entirely in the hands of any manufacturer. The growth of the market depends on the customer, depends on the infrastructure, depends on the government policies. Various factors have to come together to determine the growth of any technology in any market. It's not specific to India or to EVs. It applies across the board. And as a car manufacturer, despite all our desire to meet the carbon neutrality norms as efficiently and as quickly as possible, we will have to also take into account what the customer will do or not do in terms of buying cars of any technology or any different variant of a technology. So, like what's happening in the rest of the world, we will create our capacities, we will create our technologies, we will push the cars in the market, but to what extent we will be able to succeed and how many cars we will sell and whether there's going to be a slowdown or not a slowdown. At the moment, a slowdown in India doesn't make much sense because it's not as if we've reached very high levels of cars in the EV segment. But assuming that we reach higher levels, whether there will be a slowdown or not, will all have to be seen as we go along. Nobody can predict it today.
Well, that was the management of Maruti Suzuki. Let's quickly take a look at a rewind of the numbers. You look at revenue that has grown 19%. It has met Street's estimates. There's net profit that's up 48% at 3,878 crore. They also declared a dividend of 125 rupees. Now, this is the highest dividend that Maruti has ever paid. It's about 40% increase from their last dividend. So big increase on the dividend front. You also look at the margins. EBITDA has gone up 40% to 4,685 rupees. Margins have expanded to 12.3%, slightly below the estimate, the Bloomberg estimate of 12.8%, but definitely an expansion from the last year. So 12.3% from 10.5%, a decent expansion in margins there. But it's time to slip into a short break, but don't go anywhere. We have lots more lined up for you on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit.
Welcome back. You're watching The Reporter. Now, shifting our focus to some election buzz. Phase 2 voting of the Lok Sabha elections across 13 states and union territories is underway. Among the states, Tripura is leading the voter turnout at 68.92% as of 3 p.m., followed by Manipur, which is slightly lower at 68.48%. Meanwhile, Maharashtra recorded the lowest turnout at 43.01%. I'm joined by my colleague Himanshu Shekhar from Noida, Uma Sudhir from Thiruvananthapuram and Prabhakar Kumar from Kishanganj, Harsha from Jodhpur, Janani from Bengaluru to get all the ground zero report on the election coverage. But first, let's go across to Himanshu. Himanshu, how is the mood in Noida?
The mood is not very upbeat because if you just look at the voting percentage in Uttar Pradesh on the whole, it is around 44.13% till 3 p.m. And UP, of course, is voting much below the national average. But as far as individual constituencies are concerned, in Meerut, for instance, the voting percentage is around 47%. In Gautam Budh Nagar, that is Noida, it is around 44%. And in Ghaziabad, it is around 41%. And so clearly the voters, the urban voter apathy is again visible across constituencies, not only in Noida or Ghaziabad, but even other parts of UP as well. In Mathura, where there is a high-profile candidate, Hema Malini, who is contesting, the voting percentage is lowest in UP at 39%. And this is, of course, very worrying because this comes at a time when there was a national campaign launched by Election Commission, especially in those constituencies where the voting percentage has been low. Now, in Ghaziabad and Noida, these are two constituencies where the voting percentage has always been below the national average. And this time there was an effort to outreach to the first-time voters, youth, women voters. But despite all that effort, I think there are variables that are still constricting the voting percentage here. And I've been talking to people in both the rural belt of Noida and in the urban belt as well. And they are saying that, of course, heat is one factor, but there is also a harvest season that is going on. So in parts of Uttar Pradesh where the harvest season is going on, many people are still engaged, and they have told us that it is becoming difficult for them to move out and leave their harvesting work and to go out and vote. This is also a busy wedding season in the rural belt around Noida in Gautam Budh Nagar constituency. That could also be one important factor behind this low voter turnout. But in the urban centers, those who have turned out, they have been very confident, and they were very happy they got this opportunity to take part in the election process, and they voted for a developed India, a new India. That's right, Smriti.
Well, thanks, Himanshu, for that. Let's go across to Janani now, who gets the report from Bengaluru. Janani, how's the mood in Bengaluru?
It's battleground Bengaluru here at the second phase of the Lok Sabha elections of 2024. Today, Karnataka is among the many states voting in the Lok Sabha elections to decide whether the Bharatiya Janata Party will return for a third term. Now, Bengaluru and Karnataka in particular is a very interesting state, considering that the Congress is currently in power, and they hope this time that their 5 guarantees, along with their manifesto, will power them to the Lok Sabha seat here in the south of India. The BJP, interestingly, has formed an alliance with the Janata Dal Secular, the Kumaraswamy party, which will also help bring together the Vokkaliga votes and the Lingayat vote, which is an important community here in the heart of Karnataka. Karnataka is known historically for a low voter turnout. Now, Rahul Dravid, Kiran Mazumdar-Shaw, we've had Narayan Murthy, many doyens of the industry and of their respective fields telling people to go out there and vote. The latest stat, as per the Election Commission of India, as of earlier today, is that the voter turnout so far in Karnataka, particularly in the 3 seats in Bengaluru, has been quite low. It has come about at 38%, largely led by Bengaluru rural. We'll have to keep tuned to see what it is, but most of the day has turned out already. Keep watching NDTV Profit.
Thank you, Janani, for that. That's all that we have on this edition of The Reporter, but stay tuned to NDTV Profit for more fresh news and updates on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about Good morning and thanks so much for tuning in. Happy Friday to you. This is Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary, and we will take you through the next half an hour or so of trade. Now, this is aimed at getting you all of your answers getting you answers to all of your stock related questions. And if you've got stock related questions, then you can send them to us on any of our social media platforms or indeed on the number that you see on your screen right now. But let's take a look at how the markets are faring. And we've got very narrow cuts for the benchmark indices, and you have the Nifty 50 that's trading with cuts of about 0.1% or thereabouts, and you have the broader markets that are actually outperforming quite significantly at this point. And you have the mid-cap index that's trading at very close to the high point of the day, up as much as 0.8%. Similar gains for the small cap index as well. And I would think very comfortably that the market breadth is in favor of the advances. Now, it's an interesting picture if you talk about the key contributors on the Nifty 50 today, because you have Tech Mahindra, which is outperforming in a big way, and we'll talk about that in just a bit. And you have as well HDFC Bank, HCL Tech and Bajaj Auto, which are leading the gains, but not tremendous gains. Among the losers, though, you have Bajaj Finance that is accounting for a bulk of the declines right now, possibly single-handedly pulling the Nifty 50 lower right now. And in fact, let's talk about Tech Mahindra, because that really is the stock of the day from our perspective. We've got gains that are holding on at very close to 9%. At some point earlier in the session, it was up over 12%. This is not just on the back of the results, though, Smriti. It is also because of the guidance of the new Chief Executive Officer. So why don't we go across first to Rucha to find out what exactly was said in the earnings call that took place last evening. Rucha, what is it that was said by the new Chief Executive Officer that caught the fancy of the street?
So Tech Tech Mahindra reported its results yesterday, but what is interesting from the management call takeaway is the 3-year turnaround strategy given by the CEO. Now, what are the highlights? Let's check it out. The company plans to achieve a revenue levels higher than its industry peers. It also expects to achieve an EBIT margin of more than 15% by FY27 from the current levels of 6.5%. It also aims to target a return on capital employed number of more than 30%. Now, for the shareholders, it expects to return more than 85% of the free cash flows over the next 5 years. Now, this essentially means that the company will focus on more of organic growth than inorganic growth, which is not the case if you look at the past quarters for Tech Mahindra. Now, the management also mentioned that it will focus less on the transformational M&A drive, and that is why this number of 85% is expected to be returned to the shareholders.
Okay, fine. All right. Now, thanks so much, Richa, for getting us those details. We are going to be joined shortly by Ashish Kapoor, who's the Chief Executive Officer of InvestShop, but we're still waiting for him to join. In the meanwhile, we've also got Nirav Cheda, who's AVP Technical and Derivative Research at Nirmal Bank. Thank you so much, Nirav, for taking the time. Let's talk about where the markets are and what cues you're seeing from the levels that are currently available. The start of a new series. What key levels are you watching out for the benchmark? And also, let's talk about the Nifty Bank as well.
Yeah, hi everyone. So see, in terms of Nifty and Bank Nifty, important levels have been breached in the past couple of days. 22,500 was an important resistance area which has been crossed above from Nifty, and even Bank Nifty 48,000 was the resistance zone which has been crossed, and I believe now Nifty can move up towards that 23,000 levels. Rollover just happened yesterday, and we are seeing not very aggressive rollovers. There are average rollovers for both Nifty and Bank Nifty, and that does suggest that the previous month's trend of positive bias should continue at least for the first part of the May series. And we expect some buying to come in from current levels even now. And banks should be the leaders. Also, Bank Nifty has broken above its all-time highs in terms of closing. And we expect Bank Nifty to do well going forward as well. Bank Nifty should move up towards that 49,200, 49,500 levels in the coming 2-3 days. And we can see a good run-up because of Bank Nifty and the Nifty as well. So the stop loss for Bank Nifty would be around 48,100. This is spot levels. And for Nifty, around 22,500 on the futures. These should be the stop losses to note. And if they are breached, should you close your longs. Until then, ride the trend.
Right. Good morning, Nirav. We'll start off with the questions now. The first one is on Crompton Greaves. This one's from Upender from Hyderabad. They say they haven't exactly mentioned the buy price, but they say it's a 10% profit that they're sitting on. The shares are currently up about 1.8%. Nirav, what's the short-term strategy for this counter?
So the trend that this stock has made is quite bullish actually. So this is the trend most of the stocks witnessed post 2020 where good amount of buying went in. A positive divergence is seen. So a lot of things going in for this stock. I believe this stock